Testing, testing. Can you hear me?
Hi, Melissa. I can hear you.
Great. Are you going to talk before me?
Yes, I'll
Okay.
introduce you. My name's Anthony.
Hi.
I'm replacing Rob. He has moved on to a different position. I think he's working at a bank or another financial institution, and so it
Oh,
was it was good news. Yeah.
well, good
So
for him.
yeah, and
Well,
I
nice to
get
meet
I get your emails. Yeah, I get your emails, and I saw your one this morning. Looks like you did really great.
you. Oh, thank you. Are you
Yeah,
are you a trader?
yeah, I trade, and it looks like you're doing amazing, actually.
Well, I've been doing this a long time. So I don't know how long
Yeah.
you've been following me, but I've been trading for 16 years. It's hard to believe.
Have you?
Yeah.
Okay. Hold on one second, Melissa. I apologize.
I'm going to mute myself since you're going to talk first.
Good morning and welcome to Traders Corner Stock and Options Investors Summit. With an upcoming presidential election, the escalating Israel-Hamas conflict, high interest rates, and inflation that remain stubbornly high, 2024 promises to create some great trading opportunities. On our panel today, we handpicked the industry's top stock and options trading experts to join us today. They have agreed to share their most consistent and profitable trading strategies with us in a free online educational forum. Today's show is packed with great information and discounted special offers, so let's get started. You may have seen our first presenter on Fox News, Fox Business Network, RT America, Cheddar TV, or CBS News. She is an expert stock market analyst and the founder and owner of an international educational company where she teaches people how to successfully trade the stock market. Her trading methodology is based on one strategy called Golden Gaps, which pinpoints institutional money in the stock market. Here to present Trade on the Side of Institutional Money in Gaps is Melissa Armo of the Stock Swoosh. Welcome back to Traders Corner, Melissa.
Good morning, Anthony. Can you hear me?
I can hear you.
Wonderful. Nice to be here today. Welcome, everyone. I think I have till 12 o'clock. Is that correct, Anthony?
Yes, you do.
Wonderful. I will try to watch the clock as I go. Thanks for being here, everyone. Good morning. It's a rainy day here in New York City. That's where I live. And like Anthony said, it is going to be an amazing year to trade. So far, even the last 3.5 months, even the last 3 days, you have seen the volatility in the market, and you know that there's a lot of opportunity out there. It's just that a lot of people don't know what to do. So again, I've been trading for 16 years. It's hard to believe. I can't even believe it myself, actually, but it feels like I've traded forever, but I really didn't. This is like my second life here because I used to do mortgages, and I did that for a long time, and I had an unlimited amount of money that I could make with what I did with that career. And the reason that I got into trading was things changed. And if you're at a point in your life or your career where you want to do something different, you might want to learn how to trade the stock market. Actually, the nice thing about trading is you can trade and transition into this career. And I did that myself. I worked 2 jobs. I traded and did my full-time job while I transitioned to trading. And again, the stock market's open 5 days a week. You could trade 2 days a week, 3 days a week. You could do options. You could be in the trading room with me until you make enough money that you prove to yourself, I can do this, and you want to release whatever you're doing and quit your job and then move into trading. So we're going to talk today about shorting, which is a great topic because of where the market sold off on Friday. We're going to talk about gaps, and we're going to talk about institutional money as well. If you have questions, you can plop it in the room and let me know. As Anthony said up here on TV, I actually was on a new channel this week. There's like a new channel popping up every week, it seems. Dr. Phil has a channel now. It's on my television. So I'm always out there. I'm always talking. I'm talking about the stock market. I'm talking about the economy. If you have questions, you can email me at melissa@thestockswoosh.com. You can also call me at 929-3200-GAP. And you can follow me on Twitter, Facebook, YouTube, or Skype. I always try to post training room videos or replays or anything that I'm talking about, even videos of Central Park. I live along the park. I try to post on YouTube. People can follow along. And one of the nice things, again, about trading for a career and why I decided I wanted to do this is because I wanted to work for myself. I wanted to be in control of my own destiny. And when the mortgage industry changed, it was no fault of my own. It was the industry changed. And again, I wanted to be in control of my own career, my own money, and my own life. And that is the nice thing, again, about trading. So if you're at a point where you don't love what you do, it's tough, it's hard. People live for the weekends, but there's 7 days in a week, not just 2. You've got to love what you do for a living, because if you don't, you're gonna spend hours and hours and days and weeks and months and years doing something that you hate. If you hate your job, and you're gonna spend a long time doing it, and the quality of your life goes down when you're getting up every day and you really don't want to go to your job. But again, I'm speaking from experience because this is how it was like the last 2 years before I got out of the mortgage industry and before I got out of banking. So I knew I had to do something different, but I didn't know what it was. And then I found out about the stock market. It was just in a whim. I met somebody in New York, and then I said, oh my God, I can do this thing. Of course, I didn't know at the time that I had to learn how to trade. I didn't know anything about strategies. I didn't know anything about shorting. I knew nothing about anything at all. And if you're someone that's out there, you always just assume that, well, you have to live in New York and you go to Wall Street and you go to the NASDAQ and you can trade. That's not true. You can trade from anywhere in the world by yourself. All you need is live charts and a brokerage account, and you can do it. And today we're going to talk about options and day trades as well. But if your year is not on track where you want to be, again, spring is a nice time. It's spring here in New York City. That's why we're getting so much rain. It's a good time to kind of recap. It's good to do this on the weekends too. You know, again, April 15th tax day is Monday here in the United States. It's a good time to kind of do a reset. Are you having a good year so far, or could it be better? Are you having a bad year? And what can you do to make changes? I found that people that are trading for years, sometimes longer than I'm alive, get so stuck in a rut of something that they're doing with their trading or some kind of indicator that they don't want to change what they're doing. They may even know that that thing doesn't work. They're losing money using whatever system they're using or indicator. It doesn't work, but they're so stuck on it. You have to change what you're doing if you're not making the money you want to make. That's the only reason you're going to get somewhere in the future where you want to be. And again, the future could be 2 weeks from now, 1 month from now, could be Monday. So I put the stats in here. This doesn't have the last couple of days, actually. 309,190 so far year to date. Again, I didn't have this week in here. We did JPM on Friday. I do have the chart in here. And then the options newsletter, we're having a phenomenal year. And again, I risk more of my options trades, but 880,580 for options. So our win ratio, and this is very, very important for the year with all the trades I've called in the room and the options newsletter, everything I've done is 71%, which is good. So you figure if every 10 trades you take with me, 7 are going to work and be winners and 3 are going to be losers. And again, so far this year, we're on pace. And again, this is with a $3,000 average risk for the day trades and an $8,000 average risk for options. You can risk more, you can risk less. We're on pace. It's only 3.5 months into the year. Again, April 15th is Monday, over $1 million for the year. So we're having a good year. Part of the reason the opportunities are there, part of the reason is the volatility is there. And again, volatility is your friend if you're a day trader, if you're an active trader. And I consider myself a day trader. Even though I'm doing options and I'm holding trades overnight, I'm doing the weekly options. Like I'm in options out to the 19th. So that's not a long time for me. I consider myself an active trader where I'm taking a trade, getting the move, getting in, get out, and what I call chunking it out. But let's talk about what I was saying about having a big year. If you're not having a big year so far, you still have plenty of time left to change what you're doing. You have 8.5 months left in the year to fix whatever you're doing if you're not on pace. So I always tell people, get a positive mindset if you want to be at that next level and you really want to do something called level up. I don't know if you ever heard of this term. What does level up mean? It means to improve your current station in a way that feels like a powerful shift. You're going to do something different. It starts by a change in thought, a shift in mindset, followed by brave action. And taking trades and risking money in the market is actually a brave thing to do. Not everybody is cut out to do this, and not everybody wants to do this. For example, my sister has no interest in trading. She will never trade in her life. She doesn't have any interest in this. So it's brave when you take a trade and take risk. But again, you have to have a reason for taking the trade. And you have to think that you're going to be successful, believe that you're going to be successful. Again, I've been doing this for 16 years. When I started out, I thought I was going to make a lot of money right away, really quick in like the first month. It didn't turn out that way. It didn't. It took me 3 years to figure out the strategy that I'm doing now. But once I did, I never looked back. Again, you can turn things around in a moment, in a second, in a day, if you just change your attitude and find one good strategy to do. So this idea of leveling up, it really just applies to everything in our life. It's not just trading, but we're going to talk today about trading. It's everything. It's cleaning out the old, bringing in the new. I took this picture, actually, look at it. It doesn't even, it looks like a professional postcard photo. This is New York at Central Park. And again, I'm so blessed to be able to have the lifestyle that I have today, but I worked very, very, very hard to get to this point. Because as I said, it took me 3 years to figure out the strategy that I do now, that we're going to talk about today, that I'm able to be successful. But once I figured it out, I never looked back. So many times people are so stuck in what they're doing, they just can't see forward. And especially if they've been losing money trading for a long time, they feel like they're never going to get it, but they still trade every day and they still lose money every week or month or year. If you really have been bitten by the market bug and you really believe you can do it, don't give up. Change your attitude, get a positive attitude, and change what you're doing and do something new, because it's really the American dream to become rich, successful, and financially independent. And the thing is, you got to have a plan of action to make that happen. And trading may be it. Trading may be the vehicle for you. Because again, as Anthony said, we're in a time of high inflation. We're in a time of high interest rates. You're not going to be able to change anything that happens with interest rates, the economy, or anything else. You can't control those things, but you can have more money coming in. Even if you have a job, people, this is years ago when I used to work for the banks that I worked for, we used to get an annual review and we get, a 3-4% raise. That's not even happening anymore. And even if you're able to get a 3% bump every year, it's not even covering the cost of living, of the increases in housing, gas, and food. So you have to find a way to have more money coming in. One of the reasons I like trading is because, again, once you have a set strategy, all you do to make more money then is plop on the size. When I started trading, I was using an average risk of $150 per trade. It was my risk. Now, again, I've increased my risk. Your risk depends on your knowledge base, how much you know, and the size of cash in your account. So where do you start? How do you figure it out? How do you do it? You've got to determine who is in control. Who is in control? So in this chart here, who's in control in this chart? This is a chart of NVIDIA. The bulls are in control, okay? So basically, in this chart here, I'm going back to the beginning of the year. Again, it's hard to believe. This was January, NVIDIA. Started out the year in the 400s. NVIDIA is a bullish chart, okay? Even after the sell-off on Friday, NVIDIA is still strong, still in the uptrend. Who's in control of NVIDIA? The bulls, okay? So again, you would have wanted to be long NVIDIA in order to make money here on this run up at any point in the year. And we did have multiple trades we did in NVIDIA. We were doing options, we were doing calls. Here's another chart here. This is who is in control of the bears or of BA, the bears. Okay, so the shorts are in control here of BA. This has been selling off like a hotcake. Literally, you could have shorted BA every single day in the month of April. Boom, 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 boom. The stock has just been absolutely tanking. Again, this is Friday. Stock fell with the overall market. It broke 170. Again, this is BA. So who is in control of BA? The bears. Okay, the shorts are in control of BA. But every time I'm trying to figure out what I want to trade, what direction I want to trade it, I look and I say, who is in control? Okay, institutional money is always in control. Even if you think it's not, it is, okay? Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. And this is where people get tripped up that are trading, and they get frustrated. They say, well, wait a minute, I thought this was going to rally and I'm going to buy the dip in the market. And that's what everybody did on Thursday. I didn't do it. It didn't work. We were short. Okay, it worked. Not understanding the importance of institutional money in the market is a classic mistake many traders make to their detriment. Okay, if you don't know how to read institutional money in a stock chart, you're missing out on a vital piece of information that can help you succeed. You're trading impaired, okay, if you don't see who is really in control of the price action, because that is what you need in order to take a trade. This was a big sell-off that Tesla had. This was not this past Friday, but the Friday before. This is a 15-minute in Tesla. It sold off like a hotcake. I don't even remember why this was. I think it was news or something. Tesla was here. You see it right around 169 and change, and then dropped. Boom. Fell almost $10 all the way down. Again, this sold off. So you would have wanted to be short, and we were short. Okay, this is a big sell-off here. This happened during the live day. This was around 11 o'clock on Friday, April 5th. Okay, so again, institutional money did what here? Boom, sold it, dumped it, and it fell. So you determine who is in control, and then you need to focus which is the strategy. So my focus is gaps, and again, specifically shorting, like I said. So let's talk about the basics of what is a gap. A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Okay, here's another one we did. I actually did a put in this and I shorted it, and I didn't hold the put. I wish I had. This was an insane trade actually if you held the put. Stock closed here, gap down. This is INTC. This was the day we shorted it, and I did the put and I got out. But actually, you could have stayed with the trade and it kept going, which was really, really crazy. But this fell. Again, who's in control of INTC? The bears. And again, what is a gap? The stock closed here at one price at 4 o'clock Eastern time around 43 and change, and opened at 9:30 the next day at 41 and change. And then I rate it. I go through my process. I rate it. I determine if it's going to be a short or a long. And I say, oh, it's going to be a short. And then once the stock opens, I short it. Or you can buy a put. Now, a put is a short in an option. We buy puts and sell them, or we buy calls and sell them. That's what we did with NVIDIA when we played it long. NVIDIA is very expensive. It's even expensive to do as an option, but certainly a lot less expensive than just buying it outright at the price that it's been all year. But what do I do with the gap? Again, I rate it. So if you decided you wanted to come and learn my strategy and do my class, you would learn my rating system. It's a 26-point checklist. I rate it to determine the stock's direction. And again, I have this all figured out ahead of time. I know everything I'm doing ahead of time. I knew I was doing JPM in the morning before 9:30. So that's how I know, which I figure it out, all in the pre-market, okay? And then again, I wait when the market opens and take the trade when it sets up. Having all of this organized ahead of time also takes the weight off, I guess, of the stress of actually trying to figure out what to do in the live day. Because if you're scanning in the morning, for the first 5, 10, 15 minutes or half an hour, trying to figure out what the market's going to do, trying to get a trade with the market, you're back and forth and you don't have high odds of getting something right. It takes the stress out of it by having everything figured out ahead of time, whether I like a trade, whether I don't like a trade, or whether I'm doing nothing, that day. But the purpose of the rating system is to help me determine who is in control. Who is in control? Again, who is in control of BA right now? Like I said, it's been the bears. But when you think about it, it just makes perfect sense. You're like, oh my God, this makes perfect sense. I totally get it. You go with the control factor. And then once you understand that and wrap your head around it, you say, wow, it's not that hard to make money. I just have to figure out who's going to be in control. And this isn't the overall trend. This is in control of the day. Like we shorted JPM, like I said on Friday, JPM is still in an uptrend. That hasn't flipped. But on that particular day, on Friday, the day that it fell, the bears were in control on that day. Okay. Any questions here as we're going along? Somebody's asking about a replay. Anthony can answer that later. Let's talk about options. So here is Tesla. So if you decide you want to get my options trades, this is a newsletter. So in the live trading room, I do day trades on margin. The options newsletter is a subscription service. Again, this is a service. You get the newsletters live. This is what they look like. I give you the symbol, strike, expiration date, and then whether we're doing a put or a call. So on 3.5, I call the 180 Tesla puts. Let's take a look at it. 3.5. Here we are, 3.5. So again, stock closed here, gap down. Again, take it over here, it was around 180, get the drop, boom. You see where the stock fell, boom. And again, this was a 3:15 expiration. So sometimes I will do it and get in and out the same day. Sometimes it takes a little couple of days to go. Like I got out of the INTC the day that I did it. But anyways, this was not crazy expensive, but we did the 180s that cost $450. It was 100% return on investment. We got in, got out. Again, I'm trading momentum. So if I'm buying a put in Tesla, I'm saying I believe that Tesla is going to drop. I believe Tesla is lower, and it was. And it's got to happen. The momentum has to happen in the stock within the week I'm doing the trade for options. It's extremely important for options, not only to get the direction right, but you got to get a big move. Otherwise, you can't get paid. And again, if you want to take a smaller risk, you could do one. You could have spent $450 in one contract and flipped it around 1-to-1, which is a good return on investment for the actual trade. Somebody, does my service include the checklist? The Golden Gap course that I teach is a 2-day class. The class for April, we'll go over this at the end, is April 27th to 28th. That class is $69.99, $6,999. That class, you will learn the checklist. If you're talking about the newsletter is a separate subscription service. That's not a class. This is, you could sign up today and get the trades for Monday kind of thing. Some people on the newsletter haven't done the class. Some people have not. I am doing a spring special we'll talk about later at the end. Whoever asked this question, we'll talk about it at the end of this. Where are we? Okay, here we go. And again, I can see questions. You can keep asking questions if you want. There's only one thing only that can move the direction of a stock, and it's money, not a little bit of money, but a lot of money. Again, you can't get a stock like Tesla to drop $10 in 15 minutes without institutional money. They dump their shares. You could say, well, they sold it, they shorted it. It doesn't matter. It's the stock dropped. So again, who's in control? It's power money. Power money's in charge. Power money's in charge of the stock's direction and the overall market. Trends are set and moved by the power money people. And guess what? Of which there's a lot of in the market. There's a lot of them in the market. So the 26-point checklist is what I go through in the morning and I rate it. I get up at 6 o'clock in the morning. You can get up at 7, 8. I give yourself a half an hour, so you don't have to rush to take time to go through and figure out what you want to do. Earnings season officially started on Friday. We had the start of the banks reported. Again, this is a big week to trade. Next week's a big week to trade. The next 6 weeks, it's earnings season. There's going to be a million gaps, and there's going to be a million things to rate. Now, I prefer to do one trade at a time. Sometimes two. You can see that from the beginning stats. But you essentially could trade anything and everything that rates good if you want to on any particular day. So I rated JPM in the morning. I liked it. I had a feeling, I don't trade on feelings, but I had a feeling this was going to be down on Friday. I'm not going to get into reasons for that here, but The fact is I waited to see what the earnings were going to show for the gap. It could have gapped up. It could have made new highs. It could have fallen off a cliff. It did the latter. So here was, again, JPM. Is this one of the reasons the market fell? Yes. Yes, it was. JPM is a leading bank, and it tanked. So stock closed up here around 195 on Thursday evening. The earnings were Friday morning. Stock opened here around 188, opened, rallied, boom, fell. I did not get this whole thing. I got in and out early. I actually went on a tour of Central Park yesterday before the rain, and that's, again, is a nice thing about trading. You get out fast, you can hold all day, you can do whatever you want. I like to trade quick and fast and be done in the morning, but you could have held this. It almost went to the dream target, which would have been 180. Again, a ridiculous move, but again, the market fell, which also was good too. But the rating system, it tells me where the momentum is headed. Then you play in the direction, again, of the institutional money. We've been doing Tesla. Tesla has been another big one. Tesla earnings are coming out. I have to look at the date for that too. Again, earnings season is an optimal time to trade if you're an active trader, whether you're doing options or day trades, because you get big moves. Why? Because everybody that owns a stock is watching it the day of the earnings. Again, I have no problem going long. I do prefer to short. And one of the reasons I prefer to short is because selling comes in faster than buying, with the exception of NVIDIA. I mean, you get sometimes something called panic buying, but it's so rare. You did really have that panic buying though in NVIDIA this year since January. And then when it hit up almost went to 1,000, it was really crazy, but that's really rare. Mostly you get panic selling, which of course you can short against. And again, for some reason, I don't know why most traders tend to prefer to go long. And a lot of traders have been trading futures and just buying every dip since the end of last year. That is all gone. I mean, I can tell you right now, retail traders that were buying the dip in the last week got killed. And it's just, it's not something that always works all the time unless the market's power trending to begin with. And again, I wouldn't even say the market's been power trending since November. It's been rallying, but not every dip that you bought since even October, November worked. And it certainly didn't work this week, and people lost money. So again, what I do has nothing to do with the market, but I do look at the market to see if I should hold something longer or something. But overall, I am looking at the gap, and sometimes I trade the market if the market gaps, like you could have shorted the market on Friday. But anyways, trading isn't gambling. A lot of people, they go into the market, they say, well, I have a 50-50 chance of working or failing. That's just not good odds. You probably have better odds actually if you go to Las Vegas or count cards. You have to put the odds in your favor, and that's what makes this worthwhile, and certainly something that you want to rely on for income. If your odds are 50-50, those aren't really good odds if this is something that you're going to use to pay your bills. So I'm always looking for something to do that's going to give me high odds. So why did I decide to do gaps? Because gaps are the most powerful show of price action in a chart. Gaps have large moves. And again, as an individual trader, if you short a stock and you have 1,000 shares and it drops $1, you're going to make $1,000. If you short a stock and it drops $1 and you have 5,000 shares, what are you going to make? $5,000. So I want a big move, and then I plop on the size. Again, it could move $2, $3. JPM moved $6 plus. That's insane. You could have shorted that into the open, shorted that with 1,000 shares into the open and made over $7 grand. Just held it into the close, literally. Got out before 4. Boom. I didn't do that because I told you I got out in the morning, but that's something you could have done. Now, gaps can move up or down, and some of the biggest momentum moves in a daily chart come from a gap, aka JPM, INTC, every one that I'm showing you here. The most powerful gaps are created, though, with institutional money, and those are the ones that we want to do. So again, I was saying this earlier, my class is where I teach the 26 points. My class is where I teach the entries and the exits. The benefit of being in my live trading room every day is I'm calling the trades for you, like I called the JPM. So if you're on a learning curve, excuse me, if you're on a learning curve, you can follow me in the room, take the trades, and make money as you're going along. I don't know why I'm coughing. I wonder if my allergies, the pollen's starting to get to me with the spring. Anyways, you can follow me while you're trading with me in the room. And so again, sometimes people get everything right away, 100%. Sometimes people take some time to understand what to do. Being in the room, you can ask me questions. You also can get the trades. Again, whether you do day trades or options is totally up to you and the type of account that you have set up at the broker. Any other questions here so far? Again, I have to update the stats from the last week, but I just picked a week here in March. This was all the trades we did for this whole week. This was an average risk of 3,000 per trade. 16,081 was the profits. Let's go over them. This was March 11th. We shorted BA. So in the room, I'm calling the trade. 193.80 was the entry. Here was the exit. It kept going. Again, I told you I like to get out fast. It doesn't matter to me. It's just a good habit, I think, because once you get out quickly, you don't have to worry about economic data, the Fed talking about it, any White House press conferences, nothing that's going to screw up your trade. But this was BA, March 11th. Stock close here dropped. See it? It actually kept going, but I got out way before down here, but I want to show you, it came all the way down to 190. But I got the first drop, got out, done, boom. So this is a nice trade. And again, I'm looking to turn over my money 1-to-1. Then we did BA again on the 12th. I have to look up the BA earnings. We shorted it at 187.45, got out at 185.58. Again, here's what I risked. Here's where I got out with the profit. Again, got in, got the drop, got out, done. This is what I call the money move, where you're in and out very, very fast. Then we did DLTR. This was another gap we did. This was earnings. Stock closed up here the night before around 150 and change. You can see it. And then gap down here in the morning, way, way down around in the 120s, 128 and change, I think it was. We shorted it, got in, got out, was done. Then we did Tesla. Been talking about that one, how we've been doing that so much lately, it feels like. 166.80, we did an add in that at 70. Average price was 166.75. Then we got out again, 27.30. This was a nice trade too. Here's the drop. Again, this is what? This is a sell-off. Who's in control of Tesla on this particular day? The bears. The bears. You wouldn't have made money if you went long here on this day in Tesla. You wouldn't have made money if you went long on JPM on Friday. You wouldn't have made money if you went long BA any of these days that we're talking about that I have in here. And then we did Apple for a quick one. Entry was 171.40. This was on the 15th. We shorted it here. I did an add in here, and it was a little baby move, but I plopped on the size, really plopped on the size on here. I made 53.90. Now, you could have bought a put. Again, if you don't have a margin account, you can buy a put. And again, I am doing puts too. But I'm holding my options for longer. I'm not getting in and out of an options trade in 5-10 minutes here. I'm taking the trades on margin. You can open up a prop account as a margin account. You can open up a retail account as a margin account. You can open up an options account with as little as $2,000 at a retail broker and buy puts. You can buy one put, okay? So again, good numbers here. I just try to do one thing a day. You could have done everything on Friday. You literally could have shorted a million things on Friday if you wanted to, and got them all down, got out fast, held them into the close. I thought it was easier. We were ready in options. We were ready in options that I had previously called for the Friday sell-off because my expectation was that we were lower. And it's funny, I did a webinar Wednesday, and we sold off Wednesday, and then Thursday we flipped, and Wednesday I said we were lower. Then Thursday we flipped. I was in trades, the trades flipped around, they were down, and then Friday they went. So this is one of the reasons why people are getting tripped up in this market. You have to know what you're doing in this market. You have to know what you're doing in any market, but in this market, you really got to know what you're doing. Because again, if you don't, you're going to get whipsawed around. If you don't know what you're doing, you're going to change your mind every second. You're going to take a trade. You're going to be up a little, then you're going to think it's going to go, then it's going to reverse against you. Then you're going to kill it. Then it's going to go. Then you're going to take it. Then you're going to go long. Then you're going to go short. All of that nonsense is nothing that I do. You can go back and look at the stats, but I take a trade. If the trade loses, it just goes bust for me on the option. Like I'll hold it into Friday if it never ever goes right. If it goes positive, I get out of it. But I mean,
Hey, Melissa, something might have happened to your mic there. We're going to give Melissa a chance to fix the issue she might be having. So please be patient. Thank you so much.
Is everybody there?
Yeah, we can hear you. Thank you so much.
Yeah, I think I just had, because I had my charts up and I can hear that noise. It dinged me out. We're having a storm here. Thanks for just
Yeah,
like,
I figured maybe using a Bluetooth or something. Thank you, Melissa. We
yeah,
appreciate it.
okay, good. Actually, that happened the other day when we had the storm, but you guys are here, so that's good. I think I answered all your questions. Is it hard to get in and out of earnings plays? No, no, whoever asked it. Everything we're doing has volume. I'm not doing things that don't have any volume. I'm not doing penny stocks. I'm not doing options that don't have any volume. So you got to trade stocks with volume to get filled. And again, I'm only trading between 9:30 and 4. I'm not trading in the post and pre-market. You can't do options in the post and pre-market. And I'm not trading after hours on margin. So no, we're trading things that you would know, companies you know. Any other questions here? You can put them in the room. Looks like we're good here with the internet. But anyways, the bottom line is there's more to life than work. I just told you I got out of the trade yesterday and I went on a tour in the park. I looked at the cherry blossoms. It was a Central Park tour. I don't want to trade. I don't want to work 50 hours a week anymore. I just don't want to do it. And you know, I used to work that more than that actually when I was doing mortgages. So it may be work to try to figure out how to trade. It may be work because you might have to take a bunch of classes so you find somebody that knows what they're doing. You may have to spend money. You may have taken trades and lost. You may be doing this for years. I'm telling you, it's worth the time and effort and energy and money to become a successful trader, because once you make it happen, whenever that magical moment or day is in your life that it happens, you absolutely will never regret continuing to do it, and you will have the quality and type of life that you want. Again, everybody wants guarantees. There's no guarantees in the market. People were long on Thursday. They had 100% conviction the market was going to make new highs Friday. It didn't happen. Who would have known what the JPM earnings were? Again, I didn't trade it until I saw it, but I had a feeling. But the bottom line is that if you want a guarantee, if you quit, you definitely won't make it. That's your guarantee. So if you really want to do this, if this is something you want to do, then guess what? Don't quit. So many people continue to trade and they really don't have their whole heart into it. Okay, you have to really, really be focused. And again, it's going to cost money and time and energy and effort. But if you fast forward 6 months from now, 6 weeks from now, you're going to be in a better place if you just start to do it instead of being down about the fact that you have to put this work and time and money and energy into it. You say, wait a minute, this is really exciting. This is something exciting to do. I'm excited that I can figure this out and do it, and I'm going to learn it from Melissa, and this is going to be a whole new beginning for me. And that's a good way to look at it. But anyways, why do I prefer to short? Because of fear, panic, all the things like I said, and the sell-off happens quick. I wouldn't be surprised at all if we're down on Monday. I don't know. We'll see, but I wouldn't be surprised. Again, everyone's panicking. What are they going to do? They're not going to lower rates this year. What's going to happen? Oh my goodness. And you see again all the economic data that came out in the past week. But why do I prefer to short? Shorting gives me an edge. Why? Most traders go long. Few traders know how to short. Also, selling comes in fast, unlike buying. Hence the fear and panic situation. Institutional money sells and takes short positions in stocks in the market. That's what you're going to see. And again, this isn't about the trend. You're invested in long-term stuff right now. The market, I'm not saying the market breaks the trend this year. I'm not saying that it could. I don't know. But there's a lot of overlaying factors right now, not just interest rates, fears of a recession, and also world wars going on. There's just so many things right now that if you don't know how to short, you're absolutely going to miss out. You're totally missing the boat if you don't know how to short the stock market or stocks this year in 2024. You're already missing out if you don't understand how to do it and know how to do it. Gone are the days where you could just follow Apple and do whatever Apple does and make money in the market. Those days are gone. I've been saying NVIDIA is the new Apple, but it really not even when you look at actually the last 2 days. And again, just trading the market every single day, you're going to get whipsaws. The market is still in a range. Yes, we sold off Friday, but we are still in a tight range. This was the 4th. Remember that? This was like 2 weeks ago, a week and a half ago, April 4th. Remember this? Like, I don't know if anybody remembers this. Look at this. The market sold off like a hotcake. Again, take it over. This was around 523 and change. This was April 4th. It's a 15-minute of the SPY. Look at what it did. It was around 523, fell $10. This was around 12 o'clock in the afternoon, fell into the close here. Look at that. And again, 4 hours is fast, people. Fast, fast, fast. You had a massive sell-off that came in on April 4th in the SPY. And again, it was a sell-off. It was a dump. Short moves to the downside happen fast and quick, and they can happen big. Again, it was just a nice one. The same thing with JPM. This was another BA we did. This was 311. It expired on the 15th. This was so cheap though. We did the 145s. 140. I mean, it cost 145, and it went really, 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 really big. Again, you could have done BA on Monday and held it into Friday, which was insane. This was 383%, 33,300 profit with an $8,700 risk. And if you risked 1160, you could have made 4440. Let's look at the chart here. This was 311, the 190s. Again, you could have done the same thing this week. You could have done the exact same thing this week with this. Stop close here, gap down, open, drop, boom, fell. Again, we did the 190s. You see where it went. Again, what was Monday? Monday was a 5th. You could have done the 185s here. And look, boop, fell $15, $16. Again, how do you make money in the market? You got to get the direction right. That's 101, trading 101, but you also have to get momentum. You have to get momentum. This is momentum. You may say, well, every bar looks like a baby. It doesn't matter. It kept going. It kept selling off. And again, if you're looking to watch, well, what's the Fed going to do? They change their minds every month. It's just kind of like crazy. So if you're relying on economic data or even fundamentals to make decisions, you're not going to do very well. And again, the whole thing is they said, oh, you know, we're going to lower rates 7 times this year, 5 times this year, 3 times this year. Now everyone in Bloomberg Friday, they were saying, well, maybe they're going to raise rates this year. That would really put panic in the market because no one at the beginning of the year in January, even December of last year, thought that would happen. So again, now they're back talking about a recession again. Who knows? Nobody knows, but you know that you have to take care of your own money. You know you got to make money every single day and every single week that you can in the stock market if you're actively trading. All you need to worry about is yourself. Thinking about the future and what's going to happen and trying to predict the data or what these people are saying or decisions they make has nothing to do with you. And they don't care about the little guy. They really don't. These people are ultra, ultra, ultra rich, okay? So they're making decisions that benefit them. You must weigh the pros and cons every time you take a trade, but you must also put the odds in your favor because there's no guarantees. And that's why you need a system that has high odds. But again, if you come decide to learn from me, you're going to learn the 26 points, the rating system. It's a checklist. It's a plan of action. Everyone that puts money into the market should have a plan of action and checklist. On a professional level, all high income career field specialists have checklists. I'm looking for the direction. I'm looking for the institutional money. Again, I told you that I prefer to short. But I also am trying to work smarter, not harder, where I'm trying to get stocks that are going to have the biggest moves. That's why I trade the high flyers like Tesla, BA, Apple, JPM. And I also want to try to get out fast, you know, because again, I don't want to be sitting stuck at the computer all day long. But a big flow of money going in a certain direction is really what moves markets. It's what moves stocks. And you want to be in the side of this power of money to make money trading. So how do I figure it out? How do I know ahead of time? I'm not predicting the gap. I had a feeling about JPM, but I didn't play it until I saw it in the morning, and then I rated the gap. So if you come and you take my class, you will learn the 26-point checklist. This checklist tells you what to trade and what to look for each day, because institutional money is creating the momentum in the gap. Again, it could be buying, it could be selling. I told you I prefer to short, but I will go long. NVIDIA has been a nice long for us this year. I am not long that stock right now, though, I'll tell you that. But understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that's how you know when the power money is going to flow with you. So every day I'm looking for stocks to trade that have, number 1, a high probability of directional bias for the entire day. Number 2, big moves on the day. Number 3, early confirmation of my bias in the move between 9:30 and 10. And number 4, precise entries with follow through and a good risk to reward. So if you're somebody that's been trading for a long time, you're just not getting anywhere and you're just frustrated with it, you know, you're not alone. There's a lot of people that are doing that. And unfortunately, many people spend years not getting anywhere with their trading. You have to make up your mind how serious you are about doing it and how badly do you want it? How badly do you want to be successful? I've taught people that are beginners. I get this question a lot. People that never trade in their life, that's okay. I teach candlesticks at the very, very beginning of the class. We do go over that briefly because I use technical analysis. All the points are based on technical analysis. So the Golden Gap course teaches a strategy and how to trade gaps. The course teaches a 26-point rating system to find the best stock to trade each day. The course also teaches you how to play the stock on the day. And the course teaches you chart analysis and technical analysis on an advanced level. This is a great quote from Warren Buffett. Of course, none of us are Warren Buffett. He can hold a stock till it falls all the way down to 0 against him and wait it out. He can buy all the dips he wants. That's not normal people, okay? We all have to have an amount of money that we have as a stop that we risk, okay? And it's a real stop, not a fake stop. A stop that you're gonna put in when you get out of the trading and take a loss. Anyways, there's one investment that supersedes all others. If you invest in yourself, it's an investment that should pay off because you should believe in yourself if you're doing this. And again, as I was saying earlier, many people start to trade the market and they lose confidence in themselves. You'll gain that confidence back once you start to consistently make money, even if it's $50 a day, $100 a day. People lose confidence in themselves in the market because they go through a string of losses. You're losing probably because you're doing something that doesn't work. You're trading a strategy or using an indicator that just flat out doesn't work. That's why. And again, buying dips is not a consistent strategy to make money in the market. It only works when whatever you're buying is in a power trend, and that never lasts, okay? But the market wasn't in a power trend since November, to be honest with you. NVIDIA was. Anyways, you need to get value out of your education. It's very important. And what I do is something that you can learn from me if you want to trade and empower yourself today. So the Golden Gap course is a complete system to use to trade. I teach the class once a month. So the class for April is April 27th to 28th. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. Class tuition is $69.99. And again, you must email me for sign-up forms. The trends class, I offer a combo. You get 2 classes for $74.99, which is nice. Trends is on Tuesday, April 30th. Isn't that beautiful? That's Magnolia Tree. I took that on one of my many spring walks. But I'm doing a special. Someone was asking earlier. If you sign up for the Golden Gap course by Sunday, April 14th, you will get the options newsletter subscription free for 1 year. You will get the trading room free for 1 year, and you will get the market report subscription free for 1 year. You must register and pay by Sunday, April 14th, but this is a nice deal because you're gonna get all my trades for 1 entire year, which is crazy to sound, but it takes into April of 2025. It seems like so long from now, but April of 2025 is a long way away. So this gives you plenty of time to learn, follow me, take the trains. Whether you can be in the room every day, you have access. And again, you can start trading Monday. You can start trading and making money before the class. I've had people already sign up for the April class and we're already in the room this week and got the trades. So this is a good offer. You must email me if you want to sign up for this. Again, the class is the end of the month, Saturday and Sunday. And again, it's 9 a.m. to 5 p.m. Eastern time. I am in New York. Any questions? I have 2 minutes here for questions. So glad I didn't lose internet, but I did actually lose internet. It ended up, I think, holding for the lecture. Any questions from anyone? Go ahead.
No, I was just going to say, like, I'm here on the East Coast in South Florida. We get storms all the time, so I understand.
Oh, I know. Well, you probably get tons of rain. It probably rains every day there where you are.
There's a whole season called hurricane season here.
Oh, is it hurricane season now? No, that's in
No,
September.
it's not now though, fortunately.
Yeah. Well, thanks so much for having me. If anybody has any, oh, here I have one question from Stan. Stan, let me go up to Stan. The trading room is not something that people can join without having done the class, Stan. The trading room normally, after you take the class, is $39.99 a year, $4 grand. But the only people that are in the trading room are people who have taken the class. So the Golden Gap course is a prerequisite for joining the room. But again, after the 1 year, if you want to join, it will be $39.99. The reason is I go over gap ratings. I go over things in the room that you have to have taken the class. So it's privy information. Also, the trade's set up really quickly. You can go to my YouTube and subscribe to YouTube. You can see some of the trading rooms. I think I have Thursday up. The trades happen quickly. You've got to know what to do. But if you're interested in the special or the April class or the special this Sunday, email me at melissa@thestockswoosh.com. I appreciate everyone coming today and spending Saturday morning with me. And thank you so much for having me, Traders Corner.
Thanks, Melissa. Great presentation. I want to thank you for making such a generous offer to our audience today. It's always great to have you on Traders Corner. Ladies and gentlemen, that was Mrs. Melissa Armo of the Stock Swoosh, an expert at trading gaps. If you're interested in learning a rules-based strategy that has the potential to garner fast profits, trading just 30 minutes a day, then you can find Melissa's special offer in our chat box. And Melissa can always be found at stockswoosh.com or thestockswoosh.com. Thanks again, Melissa, for joining us today. We hope to have you back on Traders Corner. Have a great weekend. Ladies and gentlemen, Our staff at Traders Corner sifts through hundreds of pro traders and brings you only the most credible and qualified traders to participate on our shows. And our next presenter specializes in helping people to day trade with confidence and ease. If you have the desire to learn to day trade successfully, she simplifies the process by completely breaking down the art of identifying high probability trade setups. Here to present Understanding Market Trends with Live Market Analysis is Marina, the trader chick, Villatoro. Welcome back to Traders Corner, Marina.
Hello, thank you so much for having me. How are you doing?
We're doing great over here.
Okay, let me just get myself. Can you let me know if you are able to see my screen?
Yes, we can see your screen.
All right, well, thank you again, and hope everybody is ready for some fun and some action. How is everybody doing? I see that the room today is quite full. I would love to know, where are you all coming from? Because I want to know, where in the world are you, right? I think there was like a show, where in the world are you right now? So where in the world are you guys? Because the more you chat, the more you are participating in this event, in the summit, the more you actually get to learn. So let me know here. You can put it in the question box. I think you could all see the question box, right? Let me know where you're from, unless I'm just speaking to the air and it's just me and, you know, my presentation, but I hope that's not the case. I hope I don't have to hear my own voice from me. I hope that you guys actually are listening to me and are there. All right, Caesar is from North Carolina. So is it just me and Caesar that is going to be participating in this summit? Come on, guys. Let's do it. You guys are taking the time to be here, so let me know, where are you coming from? All right, we've got Robert, Miami. We've got Martha from Vancouver, Dwayne from Switzerland, Anatole from Silicon Valley. There we go. All right. Well, thank you guys for coming from all ends of the US. I'm super happy to have you here with me today. And hang on just one second here. Oh, there we go. Patrick is from Phoenix. All right. Well, this is me. I am Marina, the trader chick. And I just wanted to say hello. And this is a beautiful day today on a Saturday. I don't know what time you guys have. For me, it is 6 p.m. in Barcelona, and it is absolutely phenomenal because of daylight savings time. It's literally as if that we are in the middle of the day. It's amazing. So I have a really fun question for you guys. This is kind of appropriate right now because me and my son are going to see Cirque du Soleil next week, and we are huge fans. So I want to know here, how many of you guys like Cirque du Soleil? Because if you haven't been to a Cirque du Soleil performance, and I don't even like to call performances, that they are more of an experience, I really, really, really recommend it. I'm pretty sure that they are on an international tour right now, so I would recommend going and checking it out. So me and my son, like I said, are completely like over the top lovers of Cirque du Soleil. We used to live in Guatemala. We seen them every time they went there. Then obviously COVID hit, they stopped, and now we are rebooting our Cirque du Soleil experience. And the main reason why I bring it up is because Cirque du Soleil is so phenomenal and it feels so out of reach to us that we forget that the performers are ordinary humans that actually are just simply doing extraordinary things, right? That is one thing that you have to see when you go there, because a lot of times we go to Cirque du Soleil and what they do is just like, it's incomprehensible, right? It's absolutely incredible. But in the end of the day, they're literally just ordinary humans that have trained themselves to become extraordinary. And that is literally the same way that a successful day trader works. So I want to bring the reason why I bring up Cirque du Soleil right now and giving this comparison. What does it take to become a performer in Cirque du Soleil? Well, the number one thing is commitment, right? You know for a fact that these guys have fully committed to their craft, right? They are training for years. They are showing up day in and day out. A real trader, a true trader, doesn't just come on one time, once a month, put some money in, gets out because they lost the money, because they never actually committed, and then wonder, why is it so hard? Why am I not winning, right? Because there's lack of commitment. But if you put a little bit of commitment in, boom, you could change it. You could see a total difference. Intense focus. Imagine being on a high wire on a bicycle and playing on your phone with Facebook, right? Chances are that is like you're gonna die. Yet when we are trading, when a lot of people are pretending to trade, they are on Facebook, they are on their phone, they are on WhatsApp. There's not that intense focus that needs to be given in that moment, right? And discipline. A lot of people think that discipline, that we're born with discipline. No, discipline is literally simply just showing up day in and day out. That's it. It's literally just showing up day in and day out and actually sticking with the strategy. Then the trust, the absolute trust, right? The majority of these Cirque du Soleil performers, they are with partners. They literally put their lives into the trustful hands of their partners. I cannot tell you the amount of traders, again, wannabe traders that get these platforms, because you need to have a platform when you start to trade, and they have absolutely no idea how to use their platform, no idea, they don't trust it, they don't understand it, yet somehow they're going live with real money. When all it takes is maybe like an hour of a learning curve to learn and to have that equipment be on your side rather than be afraid of it, right? Confidence. When you put in all the other things that I just mentioned, commitment, trust, focus, discipline, that is how confidence is grown. Okay, there's no other way to grow confidence but with learning, with practicing, with mastering. That is how we gain confidence. And that's what a pro trader really does. And that is how these guys are able to perform these unbelievable acts that we are seeing, right? It's incredible that people don't understand that you can compare them to. You can put a bridge between them two. Trading to me has always been like an art form. This certainly is, but behind art, there's always a thing. There's always a strategy that needs to be done. And that is the same thing for day traders, right? That is why we have so much in common with these people, right? Way more than a lot of us think. And a lot of the times, you forget that maybe less than 5% of traders are actually successful. Why? It's simply because they are not doing what the rest of the world is, like the Cirque du Soleil, right? Again, if Cirque du Soleil performers were doing what the 95% of the traders that are failing, with them, it's literally life or death, because the majority of their acts are, up in the air doing crazy feats, right? So what is it that we can do differently that we can get out of that 95 percentile and actually start becoming super successful and taking it to that next level? This is what today's presentation is going to be all about. And I'm going to focus on trends, because trends are like tight ropes, right? You have to, because the majority of the acts is starting off like on a tightrope. When you first begin with a tightrope, you start at 1 inch off the ground and eventually you grow, but the foundation of it stays. And that's what I want to talk to you guys all about today. And is the underlying factor of everything that we are learning and doing when we are trading. Now, before I go into the whole presentation, all of this is completely for free for you in a cheat sheet. I made a worksheet for you because I understand that it goes really fast, but I want you guys to be able to capture it all. So go here right now, makingofadaytrader.com, put that in to your computer, makingofadaytrader.com. You could get this entire presentation for free. All right, guys, and then you could go along with it. Now, before we jump in, I just want to do my own quick intro, because a lot of times we forget that we are people sitting behind the charts, right? We are bringing in our own experiences, our own filters into the charts. And this is me. I am Marina, the trader chick. I am an expat. I live in Barcelona. Before that, I was an expat for over 20 years in Central America, first in Costa Rica, then my family and I moved to Guatemala, where we were expats for 14 years, and now we've been in Barcelona for over a year now. The best experience of my life, and anybody who wants to be an expat and is sitting on the fence about that, jump, because it will be the most enriching experience of your life. Okay, and before I was a day trader, I was a fitness instructor. The main reason I bring that up for you guys is because a lot of times people have these blocks in their heads that they have to have a math background or an economic background or financial background or an engineering background, and none of that is true. The beauty of it is that anyone can truly master trading, and it does not matter what kind of profession you had or still do. Okay, that's the beauty of it. I'm also trilingual, and the only reason I'm bringing this up for you guys is because I was born in the Soviet Union. I speak Russian. That's my mother language, but I was raised in the US. So I didn't actually learn English as much as because I was so young. I kind of just learned how to speak and it flowed into the English language. But I did learn Spanish when I was in my later years, in my late 20s. And when you learn a new language in your later years, there's a whole process. And I struggled for 2 years when I started trading, struggled until I thought to myself, what if I treat the market and the charts and all that is happening in front of me, the technical analysis, as if though I'm learning a new language? And I have to tell you, that shift in perception completely changed everything. And that's the reason why I'm thinking, if you guys have that second language, shift it so that you can also use that experience into learning how to work with the market, how to read it, how to understand it. And that's what I want to show you guys today. And the beauty of trading, you could do it from anywhere. That's literally the beauty of trading. All right, guys. Oops, hang on a second. Again, go here, makingofadaytrader.com, so you guys could get my entire presentation for you that you can follow along when there's a replay so that you guys are able to go through the whole presentation. And now let's begin. Look, every single performer, they start with the basics. Every single one of them starts with the basics. Nobody starts at 60 feet off the ground on a bicycle on a tightrope. They start at the very beginning, on the tightrope, on a bike, literally on the ground, right? And a lot of times we overlook those basics when we are starting to trade. Like this guy here, his feet are probably touching when he's first starting to do the aerial ribbons, right? Like those aerial ribbons, I don't know if you've ever seen them anywhere. It doesn't have to be live. They are incredible. They are like 100 feet off the ground doing stuff that is just scary. But they started on the bottom. They started with how to roll these ribbons around their arms, how to place your feet, all of that is the basics. And that's what I want to focus on today with you guys, with the day trading, because we are constantly putting in windows. And if you do not have your foundation, they are constantly crashing. Meaning, if you don't know anything at all about what is happening in the markets and you're putting in your money into the live market, you're literally trying to put in windows without any walls sustaining them. So that's what we're going to be talking about today. And it all will stem from trends. Like a tightrope worker, we start with one little step at a time to be able to get to do these phenomenal moves. All right, guys, are you ready? Entonces, it is makingofadaytrader.com. Makingofadaytrader.com. Here. So go here to makingofadaytrader.com and you'll be able to access and have it completely for free. So let's jump in. First and foremost, you have to understand that there are three trends. There are three trends. A lot of times we know that there's an upward trend, downward trend, but the sideways trend is where the majority of the money gets lost. And you could go and back test all of what I'm saying, and you have to back test to see where the majority of your money gets lost. And it's usually in the sideways trend. Why? Because this is the indecision area, the exhaustion pattern, the chop, the consolidation area, the channel. There is no movement there. It is just bouncing in between, right? In between two areas. What is an upward trend? This is where we are looking for the longs. This is where we are buying. What does that mean? It literally means you're entering at a low price point, exiting at a high price point, and taking that money in between. What is a sell? This is the downward trend. With the downward trend, now we are looking to see where can we sell? How can we short the market? What does that mean? Super simple. Don't overthink it. You're entering at a high price point, exiting at a low price point, and taking that money in between, taking the profit in between. And yes, traders make more money usually on the downward than on the upward. So don't overlook that and don't let that opportunity pass you by. Okay? Now, consolidation areas, transition areas. This is literally the trader's worst enemy. This is that sideways trend. And once you learn how to spot them and avoid them, I can guarantee that you will, first of all, be saving yourself a lot of money. And secondly, you'll be able to spot when that strong confirmation trade happens next. Okay, it's super important. So what is the consolidation area? It's literally a slowdown in the market. It is a complete pause. It is like a dead zone. It is indecision. This is where the market is literally saying, hey, I'm not really sure what I'm going to be doing. So be smart, be a pro, and stay out until I give you confirmation. How do we recognize these areas? With areas, right? We have to mark them off. When you start to mark off the channels, and I'm not talking about like invisible or mental drawings of them, you have to have these drawn in. Once you do, and you can recognize where it's bouncing, you also recognize when to stay out, right? Because the reality is, yes, I understand in the beginning, the first one you might take and you don't realize that it is going into a consolidation area and you'll lose. And that can happen once in a while. There are ways to avoid that, and I'm going to show you in just a second. But why continue putting your money in after you've already recognized that it is a sideways market? Why are you continuing to push it, right? And that's the beauty of becoming a pro. And that is when you are understanding what is happening and understanding the different kinds of trends that are actually happening. You could have small consolidation areas. You could have large ones. It doesn't matter. All you need to know is where to stay out of them and when to enter after. Now, you have to mark them off with areas. Look, the market respects areas. And we as the individual retail traders, we also need to respect those areas. What exactly are those areas, right? You're asking yourself, well, you've been saying areas. What is it? What exactly are they? Support and resistance. So what is a support area? When the market is going down and all of a sudden starts to hit over and over and over a floor, that is the support area. This is an area where the market is respecting over and over again. It is the floor of the market, right? You have the floor and you have the ceiling. What is the ceiling? It is the resistance area. This is when the market is going up and it is hitting over and over and over again the ceiling of the market. This is where the market is being hit and tested over and over and over again. Okay? And you have to respect it. You have to understand the importance of it. Another way I like to look at support and resistance areas are the safety seatbelts, right? Safety gear of trading. We all know about Formula One, right? Everybody here has heard of Formula One racing or has seen it, whatever your interests are in it. We all know that it's a pretty risky sport, right? These guys are going 220 kilometers per hour. Do you think they would ever get into a car just like that, hop in and just go? No way. They have, first of all, fireproof uniforms. They have helmets. They have goggles. Then they get in the car and then they have like 2 or 3 seatbelts. They protect themselves. Guys, you have to protect yourself when you are trading. And that is the support and resistance area. You also need to draw them in. You cannot do a mental support and resistance area. That is as stupid as a mental stop, right? Mental stops are literally when you are putting in your child into your car, not buckling them up and saying that you will protect them during a car crash. That's a mental seatbelt. That's a mental stop. And that actually is the same as a mental support and resistance area. You need to draw them in because when you are in the live market and your real money are in the live market, your adrenaline is pumping as much as a Formula One racer. Just so you guys remember that one. Now, how do you spot these areas at the very beginning? And that is reversal areas and divergence. I call these a trader's map to shift in direction and trends. And they are literally my lifeline. Like they are my religion. This is how I do it. And the coolest thing of all, you can do it on any chart for any instrument and it's 100% free. Free. Yes, it is. Once you understand how to spot them, it will completely revolutionize all of your trading. What are reversal areas? They're double tops, triple tops, double bottoms, triple bottoms, head and shoulders. When you can recognize those, the market is literally screaming to you, stop. don't enter. I'm not, I might not be reversing, but I'm certainly slowing down and I'm certainly losing steam. So chill out. All right. What is this? Why am I so obsessed with reversal patterns? Because to me, they are showing that there is a very high indication that there's going to be a reversal. I don't just go in, I need to see the confirmation for the reversal, but I definitely know that it is a slowdown in the market. And I don't want to be putting my money in where there is weakness. Now, when I see a double bottom, look at this here. You can see the price action is showing me a perfect double bottom. My MACDs, I use the holy grail for me, are my MACDs. They are showing a divergence. What's a divergence? You see a flat, straight area with the double bottoms, but the red dots are moving in the opposite direction. That is telling me that there is a slowdown, okay? And it is really, really, really helpful. And I absolutely use it for everything. And it is usually 90% or more accurate that it is completely stopping or reversing altogether. And once you understand how to use these, again, like I guarantee it will revolutionize your trading. All right, now, when we are using all of these kinds of indicators, technical analysis, this, by the way, guys, was the definition of technical analysis. Everything that I just showed you and the trends, that is technical analysis. You would then be able to spot literally the most powerful, potent trade out there, and that is the breakout trade, right? Again, everything that I just went through, you will have complete access for free, makingofadaytrader.com. So go there right now and you're going to be able to access all of it. All right, guys, breakouts. These are the best trades out there because you will always have a channeling market, a support or a resistance area, and it's either going to break out or transition, right? So what does it mean, a breakout? So basically you're going in one direction, the trend is going in one direction, and all of a sudden it becomes flat, indecision. There's a channeling market. The market doesn't really know what it's doing. And after some time of bouncing back and forth and being indecisive, bam, it decides I'm going to continue in the same direction. That's the breakout. And you want to be prepared to see when it does the breakout from either the resistance or the support, okay? Because that's when you can start to look for those entry points. And that's exactly how I enter my trades, by watching out for these areas, okay? Super, super important, guys. You have to be able to understand where the market is breaking through. Now, I personally use only two indicators. I use EMA lines and I use the MACDs. You can see where I'm showing you where I enter the trade. Now you can see the MACDs, which are on the bottom, the black dashed line, that is the zero area, right? So when the red dots are close to the zero, that means the market is super weak. But when it goes really high, no divergence, that's when I know the market has a lot of strength. And I use the EMA lines for the entries. I tell the market where I want to be felt. Because if you're just going to start to do market entries, the market knows you're an amateur and it's going to be penalizing you with a thing called slippage, which is 25% usually of penalizing you. So to be professional, you need to know what you're looking for. You need to have the setup done properly. Okay, now, before we continue, I want to do a really quick bonus tip from the Cirque du Soleil's performers. One massive thing that will, again, completely change everything you do, because what happens a lot of times when people want to start trading is that they want to trade everything at once, because they believe that the more different instruments they start to trade, the more money they make, which is completely untrue. It is literally the opposite. If you can focus on one thing, dominate it, that's when you become an expert. So imagine Cirque du Soleil performers doing multiple different things. They will completely fail. They dominate one area. This woman has dominated her craft. Could you imagine her on a motorcycle trying to go around in those motorcycle cages? No, absolutely not, right? Because she knows this is what I'm going to be doing. And traders, that is exactly what you have to do. You need to focus on the one. You need to dominate that one instrument. And once you do, you're going to be making money. You're going to have that confidence to decide if you want to learn another instrument. Okay? Again, remember, makingofadaytrader.com, you'll get everything. All right, guys. So look, here's the thing. We have absolutely everything we need to take action, right? We have absolutely everything at our fingertips. We have these summits, we have YouTubers, we have podcasters, we have books, we have charts, we have constantly people telling us all these different things, right? But at the end of the day, how do you know that you are doing it right? How do you know that what all these people are saying and then you apply it to yourself, and then how do you know if you are actually doing it right, because all of this is great, but at the end of the day, how do you really get started? And this is not a question that I get asked from beginners. As a matter of fact, I get this question asked more from people who have been trading or been trying to trade for quite some time and are still losing money. They're constantly asking, what can I do to turn this around, to become more profitable, to be profitable consistently? Because we wanted to make this a consistent career, right? We're not here just for that big one aggressive move, because those one aggressive moves, they don't work, right? We might see or hear about those massive aggressive moves, but at the end of the day, there are also massive aggressive losses, which nobody likes to really talk about. And that is what's truly, truly important. And I have to say, the majority of the time, all of that happens is simply because we lack the understanding of the basics. Look, I have been trading now for over 12 years, okay? And I have joined hundreds of different chat rooms. I've bought alerts, I've bought this, I've listened to other people talk boldly about, oh, this is the amount of money that they are making, which is great. But if you're not understanding what's happening behind how they are making that money, how they are entering those trades, and they're not explaining it to you, it doesn't matter what they're making, because at the end of the day, your bank account is starting to see more and more red. But if you literally have learned the basics, if you understand that foundation where your windows are being put in and not crashing, that is where everything changes. And literally, it's usually lacking those understandings, those basic understandings, right? It's kind of like if you get into a car with a Formula One driver, at that point, they're not going to be teaching you the basics because they expect you to simply follow along. But if they're telling you what to do and you have no idea, how can you? Me and my husband, our oldest son, just learned recently how to drive a car. And my husband and I were teaching him, well, mainly my husband. But anyways, the first time my son, who's been in the passenger seat almost all his life, got in the driver's seat, and my husband's like, okay, now you got to put your seatbelt on, you got to put the clutch in, make sure you put the brake in, now take the gear out of neutral and put it into first. My son is like, wait, clutch, gear, first gear, what are you talking about? Because no one explained it to him at first, right? How is it possible for him to get started if no one has actually shown him each thing individually? And once we did, all of a sudden, everything else started to click. And now, if he wanted to take it around a racetrack, he probably could. I'm sure he wouldn't win because he's not a training for a race driver, but he will understand the mechanics of it, right? Now, just imagine for a second, and this does happen to this day, somebody who has never been in a car gets in a car with you, and you're like, okay, buckle up your seatbelt, it's gonna save your life. And they're like, seatbelt? What's a seatbelt? Buckle up. Oh my God, I need this because this is gonna save my life, and I don't even know what it is because no one ever told them that, right? And this was truly my sad truth, guys, for a couple of years. I was in all these different chat rooms and all these academies, and I was constantly being told, oh, here's a massive trade, oh my God, here's another trade, and I was constantly not understanding. It seemed like everybody else was jumping in, but I could never understand why. By the time I was entering, I was already too late because I didn't understand. I was losing money, and every time I was asking basic questions. Hey, can you please explain to me, why did you just take that? You mentioned something about a reversal pattern. What is that? Or you mentioned something about a resistance area. Can you please explain what that is? They would either ignore me or treat it as if though I was born with this information. And the reality is, none of us are born with any information, right? We learn everything. And when you are starting from the beginning, that is truly the best, rather than just jumping in and going crazy from there, right? And this was literally my sad truth. And because of that, I struggled for years until I ended up losing almost $4,000 within 5 minutes. And that's when I truly had a breakdown and I quit. I felt so defeated. I felt like a complete loser. I was already 2 years trying to do this. I was in these chat rooms and getting these alerts, and constantly I would either the alerts were coming too late, which they usually do. Signals never come to you at the moment that you need to take them, right? Because the guy who's selling that to you is already taking it, or in the chat room, me not understanding what is going on, but everybody was saying, oh my God, this is the place. And I couldn't understand why. So of course I would jump in too late. I would try to catch the trade. I would chase the trade. Of course, by then it would turn around and it would become this whole emotional upheaval. And it was terrible. And at this point, this is exactly what that happened. I lost almost $4,000 and I just couldn't handle it anymore. I quit. I totally and completely quit. But here's the thing, guys. Everybody in this room, I know for a fact, is all bit by the trading bug. I know I was. I quit for about 4 or 5 months, but I never stopped following others. I never stopped looking at the charts. And even though I quit, but I was definitely bit by the trading bug and it never stopped itching. And you know why? Do you guys know why? Because deep down, we know that we can do this. When I quit and I was watching others, I'm like, if they can do it, I know I can. They're not smarter than me. There's something different. What is it that they're doing different? And that's when I decided to go back to the basics. I realized that I never had a foundation. I never fully understood why they were taking those trades, why people were profiting with, because I didn't understand the reason behind it. And you can't have somebody else drive for you. You have to learn how to drive your own car, right? And that's when I decided to get back to the basics. So what I did was, at that point, I had 3 monitors. I had 10 indicators. I literally threw out 2 of my monitors. Like I actually just donated them to the garbage man pretty much. They were brand new, high definition monitors. I had 10 indicators and I stripped them all and went to the bare naked charts. Because here's the thing, guys, a lot of people overlook this thing about indicators because indicators sound so sexy, is that everybody has different indicators. And when you're watching these so-called gurus with their indicators, you feel that you need to use what they're using. But we're watching so many different ones that we just stack on indicators. And this happened to me. So I had over 10 indicators, and some of them were pretty popular, right? Like the Bollinger Band, the Kepler Band, Fibonacci's. Yet they were always giving me total stress. I was always in constant analysis paralysis, to the point where I stripped my charts, and all of a sudden I had this massive relief. Those indicators simply didn't work for me. They might work for someone else, and that's fantastic, but they weren't working for me. So I started to put in indicators, trying them one at a time to see what really worked for me, and really getting back to the basics. And now I've been doing this for over 8 years successfully. I've been teaching for over 8 years successfully. And one of the other, like a couple of years back, one of my students says to me, he's like, you know, Marina, your whole teaching philosophy is very similar to Coach John Wooden. And I'm like, who's this Coach John Wooden? I never heard of the guy before, right? So obviously I went in and checked him out online. And if any of you guys know who he is, he was this absolute legend coach, first in basketball and then life and business coach. And his entire philosophy and teaching strategy was, when in doubt, get back to the basics. And we're talking about, this guy had 88 national championships, 10 NCAAs. I mean, this guy was incredible. He trained A-list players. All right. But no matter what, every season, regardless of the amount of championships and everything they have won, guess what? He would start from the basics. How to tie your shoe, how to roll up your socks, how to dribble the ball, because ego is fierce and ego will take over, right? They could come in thinking that they are this and that because they just want all of that. But if their shoe is untied because their ego let them just, rest on their laurels, guess what? If their shoe is untied, they're running down the court and their shoe falls off or is too loose, they sprain an ankle. Doesn't matter how many things they've won. They're sitting out on the bench. right? So getting back to the basics was instrumental for him and his players, and it is instrumental for us as well. And today I have a very special offer just for the participants here today. All right, guys, I have my introductory course, Bootcamp for Day Trading. Bootcamp for Day Trading. You guys could access this on any apparatus, on computers, on laptops, desktops, phones, tablets, you name it. You can access it anywhere. And all of this, one-time price, one time of $97. Now, because you guys are here, I always say day trading is not a spectator sport. So let's go. Come here right now. I want you guys to go to your browser and put in bootcampfordaytrading.com so you can follow along exactly what is in this course for that one-time price of $97. Now, what is it that you can actually get for $97 today on return on your investment? Do you guys like to play golf? You know what? When we lived in Guatemala, when we first arrived there, it was $29 per person to play golf. Before we left, it was $119 in Guatemala. In Guatemala, could you imagine in the States or anywhere else? Definitely not $97. Or you want to take your family out to eat? Great. But the reality is $97 can barely buy a decent lunch for two people anymore, and that's without wine. All right, so $97. So let me break this down for you. Again, go here, bootcampfordaytrading.com, so you can follow along with me. What are you guys going to be getting here? First of all, you're going to get the whole simplified version of day trading. And I know how hard it is to set up your platform, right? Like I mentioned earlier, it's a real issue for some people setting up their platform. So guess what? You will get a 30-minute tutorial showing you how to use the platform so that you guys can get into the fun stuff, and that is to trade and not to suffer with figuring out the platform. You don't need to do that. I help you with that entirely. Then we really dive deep into the market anatomy and truly dissecting those trends and movements, because once you are understanding that, those are those bricks to hold up those windows. How to understand uptrending markets, sideways markets, downward markets, really understand and see the reversal patterns and the divergences. Because once you get these, the aha moments and just truly understanding what the market is doing is remarkable. Okay, really getting those telltale signs and support and resistance areas, the divergences. Divergences to me are truly my holy grail, and I know that they have been unbelievable for everybody once they have learned how to do it. And it's so simple, and you could use it on any chart with any instrument. And then of course you'll be able to master the breakout trade, because once you have all these elements, you are able to see that and also the other trades. You will be having the power of the breakout, and not only are you going to be able to spot them, but you're going to be able to avoid the fake out breakouts, because the fake out breakouts, they're real. They are real, and you don't have to be putting your money into them. You could avoid them and save your money. Okay, you'll also get unlimited access to the curriculum. All of this is valued at $1,600. All right, you'll get all of this included in the and with a lifetime access to the curriculum. Here's what some of my students have to say. And I have students all over the world, because that's the beauty of trading. You can do it anywhere. Michelle, best money I'd ever spent. I just finished the boot camp. Derek, you are the only mentor that truly checks the work. Adrian, I'm so enjoying your boot camp. I am learning every day. So I want to get to something very important with you guys right now. What did I ask you before? How do you know that you are doing it right? How do you know you're doing it right? After watching and listening and all of that, at the end of the day, who is there to help you understand if you're doing it right? So in that $97 price included, I am offering one entire month, 1 month, one-on-one mentorship with me, coaching. You could ask me unlimited questions. We will have one-on-one together included, because having a mentor is literally what can take you to that next level. All right, having that mentor, and that is included in that one-time $97 price. That's it, one time. This is not a membership, one time. So again, go here, bootcampfordaytrading.com. If you cannot open it, because right now Google has changed a little bit of things, you have to put in HTTP, okay, without the S. So you asked, Anatoly is asking which indicators I was using. I personally use the EMA line, and I use the MACDs. For me, the MACDs are my holy grail. I absolutely love them. Yes, this works for long-term investment because it's all about understanding the charts. So the only real difference with long-term investment, for instance, if you're a day trader, you're going to be looking at charts that are 1 minute, 3 minute, 5 minute, 15 minute. If you're a swing trader, you're going to be looking at charts that are 1 day, 2 day, 3 day, 5 day, because looking at a 1 minute chart is not going to do you any good. And if you're a day trader, looking at a 3 day chart is definitely not going to work. And if you're doing a longer term investment, you're going to look at the month, the week, the month, or even the 6 months. So it's all about the time frames, and we work with that in the course as well when we work together one-on-one, because it is structured for you guys. Okay, it is structured for you guys to be able to understand how to work it all. Now, what's included in that $97? Once again, everything in the course, one-on-one with me. All of this is worth less than the price of one trade. Look, guys, at least for me, I know the average trade is between $200 to $400, right? $97. You guys are putting in $97. What can you get that is going to bring you that same kind of return on investment today? Not a whole lot, right? You're going to be able to 10x it when you start to apply all that we're learning and be able to go out to 100 of these dinners. But here's the thing, because of my one-on-one mentorship, I only have spots for 25 people. Okay, and I know that this gets sold out really, really fast because there is quite a lot of people in the room today, and I usually sell out pretty fast. So I'm just letting you know, because of my one-on-one commitment to you guys, I can only take on 25 students. So again, go to bootcampfordaytrading.com. You will see right here, this is the order form that you will be going to right here. Okay, so bootcampfordaytrading.com, and you will see right here, one-time price, $97. If you really do want a payment plan, I do offer 2 payment plans of $59, but it's really one time and you go. So if there's any other questions, let me know. And I'm really, really excited to have spent this time with you guys, and thank you for taking that time. Because you know what? Time is truly our only commodity. And instead of spending it looking here and there and whatnot, take advantage, work with me for the month, ask me all the questions that you probably have the desire to ask, and you'll also get this full curriculum, and then you're going to be able to start rocking it in the markets. So thank you, and have an amazing, amazing day. We're leaving for family vacation. Oh, it's totally fine. So quite a lot of people, what they do is they buy the program and they start the mentorship when they are ready, because I only offer this for my summits. And I have to be honest with you, in June and July, I am walking the Camino. So I am not going to be selling that. I am going to just be working with my students. So I'm literally taking 2 months to walk. I don't know if you guys ever heard of the Santiago, Camino de Santiago. So I'll only be working with my students there, but I'm not offering this price point anymore. So a lot of people just buy it, and then when they're ready, that's when they come back and start to work with me for the actual for the training and the mentorship. All right, guys, have a fantastic time and have a good trip. Where are you going? Where's your vacation in May? Yeah, May is coming up right around the corner. So enjoy.
Thank you, Marina. I love how you simplify everything so anyone can understand and succeed at the art of trading. Great information. Your market analysis is always on point and engaging to listen to. Very valuable information. Thank you for taking the time out of your weekend to enjoy us today on Traders Corner and for making such a generous offer for our members. Ladies and gentlemen, that was Marina, the Trader Chick Villatoro. We have put our special offer link in the chat box, and you can also find Marina, the Trader Chick, at thetraderchick.com. Marina, we hope to have you back at Traders Corner. Have a great weekend.
You too. Thanks, everybody. Bye.
Thank you. Well, that brings us to our next presenter, who has been a professional trader for 25 years, actively trading stocks, co-founder of Today Trader Inc., mentoring 450 traders in China for 2 years, lead trader for Ditto Trade, an online broker startup, featured in New York Times Barron's, co-authored a chapter in the Stockwits Edge, here to present Powerful Scanning for Swing Setups is Mr. Andy Lindloff. Andy, are you there?
Yeah, I just had to unmute. Can you hear me?
I can hear you. Thank you so much.
Great. Yeah, you're welcome. You're welcome. Thanks for the introduction. And thanks everybody for joining today. Today's topic is going to be powerful scanning for swing setups. And well, it's going to become more clear as we go through the slideshow. Real quick, he went over most of, I guess, everything on here, but just to give you guys a quick view and maybe talk a little bit more about my past experience. I have been professionally trading for 25 plus years. Probably about 16 of those years were hardcore day trading. The last 10 have been mostly swing trading. And co-founder with the Day Trader. This was a desktop sharing. We were one of the pioneers, me and my partner Steve Gomez, to first present my desktop while I traded stocks and people could view and watch my trades go in and out. And then, yeah, I was hired with a company, a trading company out of China. I would fly there about 1 week out of every month for a couple of years. That kind of got old, but it was very rewarding to watch these traders become profitable in the marketplace using some of the techniques that I train them with. And that's pretty much it. You can read the rest, and let's dive into the content today. I think you guys are going to really like this. Okay, and once again, getting back, we're talking about setups. Okay, and the advantages to a good setup. Now, I'm mostly referring to swing trading. A lot of these principles can be applied to day trading as well. Okay, when it comes to chart patterns, much of what you see on a swing trading setup can be applied to the day trading as well. But the advantages of a good setup is the entry. I think for me, the most important part of the trade is the entry. And that's what I've always been good at over the years, is identifying these setups and getting a really good entry, whether I'm anticipating with a portion of my size. And then when it goes to adding to that size, a good setup has potential for a very explosive move. And not only that, it's very favorable risk reward ratio when it comes to when you have a good setup, because that good setup should work. And if it doesn't, then you probably want to bail pretty quick, okay? Because any pattern that doesn't fulfill its pattern and breaks down, it can turn quickly ugly against you. All right, getting back to my point, a good entry is the most important part of the trade. And why is that? Well, first of all, it's more forgiving, okay? So you're going to see in some of these patterns that I show you what I anticipate to be my entry versus what you might find a lot of other traders looking for a clear breakout. You know, it's more forgiving because you have a better entry price. Okay, so in most cases, your entry price when you get it, when you're looking at these setups, the stock's going to go at least for a little bit. Okay, so you're going to be in the money, so you have more forgiveness when if it starts to pull back. You got a better price. You can withstand some of those drawdowns, drawbacks because of your price. A good entry could be more profitable. That's just logic right there. Okay, you want to have a good entry. It definitely sets a table for more profitability, and it can be less stressful because you're not chasing. Okay, you're not chasing these stocks. You're in it before everybody else is piling in. All right, so what am I talking about a good entry? Okay, this is a great example from one of my scans that came back in January on IBM. And if you look at this pattern, you're going to, on several of these, actually pretty much all of these charts I show you, you're going to see this pattern a lot. And this is what I'm talking about a good entry, okay? Catching that break above the trend line, okay, and a 5-day high. And I'm going to kind of be preaching this as I look through these other scans. Okay, versus a person that may be looking for a breakout above this December high. I'm not saying there's anything wrong with that strategy, but for me, I enjoy being in early, whether it's a full position or maybe where it's a half position, and then I can add as it goes higher. But I like being one of those first ones, into a trade. Versus right here, if you buy above this December high, you're sitting through 3 days waffling back and forth. You're not real sure. I want to be that early guy. All right. That's IBM. My ideal entry is what I was just kind of referring to you in that chart there. Okay. When I show you these setups, I'm looking for a 5-day high. I'm looking for a break of the trend line. And preferably, I'd like to see a little volume. That's not a necessity, but it's just also confirmation for me how heavy I want to get into a trade. If I backspace to IBM, you can see here the stock is above its moving averages, and I'll go over that all too in a minute. Breaking a 5-day high and breaking a trend line. Okay, so that's my ideal entry on many of these setups that you see. I talked about the explosiveness of these setups. Well, this is a great example of Soundhound. Back here, I believe it was on, the next scan will show us, but I think it was around March 11th or something like that. But anyway, what a beautiful triangle here, a beautiful wedge. And breaking out of that wedge, boom, 5-day high, that's my entry because it's actually breaking the trend line and breaking a 5-day high at the same time. And you almost had a 100% move, probably closer to an 80% at the peak of 3-day moves there in Sound. And you're wondering like, well, that's great, Andy, but how do you know? How do I know to buy that on that day? Well, I'm going to show you here. Uh-oh, the wrong way. All right, so here's Sound. Here's one of my scans called Poised Scan that I built. And you can see on 3/11, this is the close, okay? I'm on Central Time, so this is the close on March 11th, okay? I wake up the next morning, I have my scans here. I got Sound at the top of this scan, meaning that not only did it fulfill all my filters of this beautiful setup that I'm looking for, but also it had a good day. It finished up 2.3% on the day, and it's matching that setup that I want to see. Okay, so that's beautiful. And I want to show you, this is one of our clients at Trade Ideas, because I share these scans with our subscribers. I'm not one of these kind of guys like, I know this is me, you're going to pay me for it. No, I share the scans with them. I shared this with him, and he wrote this beautiful email to me the following day. Thank you so much for making this available. I already had successful use Poise Scan. It alerted me on Sound yesterday at market close. I took this trade AM and wrote it for a near 15% gain. Guys, this is the kind of stuff I can't tell you. So many people come into trading wanting to know how to trade, and so many people miss the big picture of what to trade. Okay, and you need a good scanning software that will show you as you do your homework the night before or the morning of. I like to get up, do mine about an hour each morning before the market opens. I'll go through all my scans, which I will show you here in a minute, and marking them up. And what I mean by that is I'll put in price alerts, for where I want to be signaled. Sometimes I'll just go ahead and put in a buy stop. If I really like the trade, like that Sound just in, I'll just put in a buy stop right in the morning to buy. Now, you got to be careful with that. You've got to have a lot of conviction on that setup, okay, because in case of a head fake. But in few cases, I will. If I really like the setup, I'll just go ahead and put a buy at stop. And what that means is when the trigger price hits, in other words, where my price alert would be, it would backspace. Where my price alert would be, it would just go ahead and fire off a trade as soon as it hits that from my broker. Okay, so in other words, I put a trigger, that's my stop. It's called a buy stop because the stock is moving higher, and I want to buy it as soon as it takes out that 5-day high. And I'll just go ahead and put in an order to do that with my broker as soon as it triggers that point. All right, moving on. Excuse me real quick while I get a drink of water. And DraftKings, this is another one on the list here. And you can see the setup was forming, and you're going to see this a lot, guys. And I want to kind of imprint this picture because you're going to see this on pretty much all these charts that I'm showing you. A lot of times these things don't go through the first time, even though people get excited. Oh man, it's going to horseshoe and turn right back around and take out that high. Sometimes it will. A lot of cases it won't, and you'll get this action right here where it backs up. But what I find out the most is when it comes back around to that trend line on the second time. All you need is 2 points to start a trend. Okay, so as soon as I get those 2 points, I'll draw my trend line in here when I see these things in my setup, and then I'll basically just put price alerts on that 5-day high like I showed you and above that trend line. And when it triggers, boom, I'm in. This one had a nice move for a couple of days. Unfortunately, kind of got caught in the market action. Always got to keep the backdrop in the market in the back of your mind, that's for sure. But it's nonetheless still a nice 2-day move there. All right, moving on. There was DraftKings, and let's take a look. This was on 3/18, March 18th, and this is a scan called Nice Setup. I got about 3 major scans that I really love to go through each morning. And when I see this, it just makes trading so much easier, guys. If you have a scanning software that will basically just serve these up each day for you to just mark up and take a look at, okay? The setup is there, okay? It's your job as a trader to identify, because there's going to be a lot of stocks on any given day in these things, because depending on market conditions. Now I'm not seeing a lot after this 2-day action that we had, but we'll talk about that in a minute. But it's your idea as a it's your job as a trader to go through these and find those setups like this. And I find them all the time, and they're just beautiful and can be very profitable. Okay, that was in the Nice Setup scan. All right, you've heard the old saying, some people say chance favors a prepared mind. In this case, it's going to be luck favored a prepared mind. If you're looking at this, a lot of people came in on this huge gap up and probably scratched their head and said, man, some lucky trader is in that thing, you know, on that gap up. Well, I want to show you, look at this thing, how it was setting up. The exact same setup I've been showing you on the last 3 slides. This thing was setting up beautiful for a break, you know, above that trend line and a 5-day high break. Now, I'm going to be honest with you. I was busy this morning, probably working something else. I did not catch this. I wish I would have, but that would have been a beauty. But for those that had our service, they had every opportunity, because another one of my favorite scans called Sweetness, ALPN, was in there. And you can see this on 4/9 at $39 was showing up on this scan, notifying you, hey, watch this. This has potential to be a massive move. And sure enough, it was. Okay, so once again, you're going to hear me keep preaching that how important it is to know what to trade, you know, and not so much how to trade, because the setups are out there. Okay, you just need a scanning software that will help you identify these setups, and instead of just waking up and chasing momentum every day. All right, and there's that Sweetness Nice Setup scan. Okay, now I want to go in, because I did mention, you know, okay, there is risk involved in every trade, and I'm going to go into a trade that I actually took, and I'm going to let you know how I manage this risk and how you as a trader may manage this risk. This TARZ on 4/9 was just in 4/10, 4/11. It set up for about 2 days. Was just beautiful, beautiful, gorgeous setup. I mean, look at this thing. It doesn't get any better. That's textbook. Look at this. Look at this wedge just tightening each day, and boom, there you had it, a break above that 5-day high, breaking that trend line, being notified by the setup that, hey, this is, keep an eye on this. I can promise you 98% of the traders has no idea that this stock is setting up beautiful. I mean, because only those traders that have some scanning software that'll let you know this is going to really benefit early in something like this. Now, stocks will get caught in market action, and that's what happened to this one. Let's talk about the risk. I'm going to be honest, I flatted this. I'm the type of trader, when I see a beautiful setup like this, I'm telling myself, listen, this ought to work. This is a beautiful, explosive setup. When it goes, I'm expecting a nice 2 to 3 day push, you know, before I start selling any. Didn't happen. Okay, this you're going to have, especially when the market gets bearish like it might be getting soon. Okay, you have to understand that, and you have to manage the risk. Now, there's several different ways to manage risk. managing risk can be very subjective when it comes to swing trading, and that is because swing trading has different time frames. And let me give you an example. Somebody may want to jump in this with 100 shares and maybe ride it for 100% over 3 months. Okay, still could be a swing trader. Another trader may want to jump in for 500 shares, ride it for 3 days, and get out. Okay, so they have different profit targets. Naturally, if you have a different profit target, you're going to have a different stop loss because you're going to manage your stop loss according to where your target is. So if you're looking for a 100% gain, you may have a 20% stop loss on the downside. Me, I'm more tighter than that. I'm mostly looking for a 15, 20% gain with a 3% downside stop. Okay, so I keep my stops a little bit tighter. So in this case, but I'm gonna give you my theory on a setup like this. When you do get that breakout and it falls back down into the range, you at least want it to stay inside that defined wedge, and it did. It did this on, even though I got out, it's still setting up potentially for a move because it's still held inside this wedge. So one stop in this case may be if it breaks this uptrend from the downside candles, or if it breaks the monthly low there would definitely be my out for my type of risk that I'd like to take. Okay. Somebody else may want to say, hey, I'm going to give it to the 50. If it closes below the 50 moving average, that's when I'll get out. So that's why I'm saying I hate to tell people when to get out and when to take profits, because that's subjective to your risk tolerance, how much money you want to put on each trade. That's very subjective. But I'm just telling you what I like to see. I don't like to see patterns like this fail and break down to, out of that wedge to the downside. I'm typically out at that point. All right, making sure I don't see any, let me see, questions. All right, I'm just checking to make sure I didn't see any questions there. All right, so you guys may be asking, man, how did you get the idea to create these scans? Okay, so I'm gonna go over the origin of the setup scans. Okay, in 2020, I had a really great stock that I traded well all year. Beautiful. It was my biggest winner by far. And I about I guess 8 or 9 months later, I'm thinking back and I'm thinking, no, it wasn't even 8. No, it was probably 3 months later because our software won't let you go back and look at the data. So yeah, this must have been pretty close to when I caught my first breakout in this thing. So, but regardless, I thought about that trade and I said, you know what? If I remember that correctly, that stock had a beautiful setup. I want to mimic that setup. I want to build a scan that will show me stocks that are setting up like that stock did. Okay. And I studied moving averages and position and ranges. And I had a heavy focus on position and daily ranges to create this powerful setup. And you're gonna hear me talk about this a lot because I like to tell people, you know what, if you can really focus on these daily ranges, you can pretty much, if you can imagine a chart in your head, you can pretty much build it, at least with the Trade Ideas platform. I'm not sure about other scans out there, but scanning software out there, but we'll dive into that later too. All right, so what was this stock? I'm almost kind of ashamed of where it's trading at now, but it was NEO, which is down around $4 now. But anyway, look at this set, and once again, you're seeing that same pattern develop. Look right here. A lot of people got all excited, going to break through. Boom, didn't work that time. But what did it do? It set up 2 points. Now you have a defined trend line. Gathered its steam on the 20-period moving average, and boom, there's your break. And look at that massive move. Okay, huge gainer for me. And this went on throughout the year because the next slide, what you're going to see is it set up again around $20. There's that move I just showed you. And look what happened again. It set up almost identical and boom, 5-day high, breaking that trend line. So you're definitely starting to see a pattern here, guys. And I want you, if you get nothing else from this webinar, I do want you to try to focus on these patterns when you see not so much that first move, that it's trying to take out this high, but let it bounce back and gather steam. And now you're breaking a trend and you get these beautiful setups. And you can see it actually kind of did it right here too. So yeah, that was just a massive one for me. Set up about 3 or 4 times with those same patterns. And what I would do is I kept the core position going all the way back to $13. So I had a core position, and I was just basically adding size to that core position, scalping all the way up to $40+. All right, what's the goal of the setup scan? The goal of the setup scan is to identify stocks similar to NEO setup in 2020. That's what I wanted to do, with a strong focus on wedge patterns, bull flags, and trend lines. And what I've shown you so far basically encompasses all 3 of those. And that's what I wanted to do. So how was I going to go about doing this? Well, my key moving averages I wanted to focus on, and I like to use simple moving averages. Yeah, thank you, Brad. A good question, Brad. Right as I was going into it, I like to use simple moving average. I know a lot of people like to use EMAs out there. For me, simples just they're easy. I've always used them, been using them for 27 years, and they just work for me. Okay. The main one I focus on are the 10, the 20, and the 50. And what I like to typically see, not in all my scans, I have one scan where it doesn't have to be above the 10. Okay. But for the most part, most of my explosive move setups, they're going to be above the 10, they're going to be above the 20, and they're going to be above the 50, usually in that order. In many cases, they have a slight fan to them, kind of like you saw in that sound. We can go back and look at it later, and I can show you that once we get to my desktop and start looking at some charts. All right, but what's more important than the moving averages? Everybody looks at moving averages, okay? Every trader out there are looking at moving averages. What they're not looking at is position in ranges. And what I have found trading at Trade Ideas and playing around with these position in ranges is, like I said earlier, if you can imagine a chart in your head, you could pretty much build it with different position and ranges. And that's how you're seeing me getting those wedge patterns built. It's nothing but position and ranges. Now, you're going to pick up a lot of other stocks in there that could be sloppy, that they're not going to be defined as the ones we just looked at, but that's okay. You can decipher through and still find the good ones. All right, so the key position in ranges is going to be the 5-day, the 10-day, the 20-day, the previous day. That's the previous trading day. I want to know where it is in that range, and also the most recent day. Okay, that's in our software at Trade Ideas. It's just called today. No, it's called range. It's just called range. When you see the word range, it's just talking about the intraday range, the most recent day. All right. So these are key components is when I'm building these charts. Okay, let's back out of this now. And what we're going to do here is go to the software. No, we're not. We're going to go to how I came up with these setups. All right. Now, if you don't have Trade Ideas and maybe you're using FinViz, there's so many scanners out there. I'm not going to go through them all, but whatever you're using, okay, see if they have any position in range filters. Okay, I'm sure most of them do, but if not, what I like about Trade Ideas is this feature actually called stocks like this, and it's really, really incredible. Okay, so going back, let's pull up the software, and we're going to put in here sound, and let's zoom in kind of to this level right here before it took off. Okay, so let's say this sound, because I can't go back and do NEO now because the data that happens 4 years ago, but we're going to take a look at sound. Say you're looking at SONW and you're like, wow, what a beautiful wedge. I showed you that wedge. I'm not going to draw it again. I want to know what this stock was doing, on the close of this day right here, because the next day it broke out. Okay, so if I go here and I click on this day was 3/11. Okay, so we're going to go back to stocks like this, and all I do is put in the symbol SOUN. I put in the date, March 11th, and this thing is on Eastern time. So I had to put in, I wanted 5 minutes for the close because it encompasses 5 minutes. You can see the duration down here is 5 minutes. So it's going to give you every filter and alert criteria that was met during that time frame. Okay, so it's going to be like, it could be like a small range. But anyway, so I wanted to find out what sound was doing, and this is exactly how I did the Neo back in the day and how I came up with these scans. I took the day before Neo broke out. I wanted to know how it was setting up. I wanted to know a lot of position and ranges. Okay, so I plugged that in there, and lo and behold, I went down here, and you can see we have tons of data but a lot of it is going to be day trading data. I'm not interested in that anymore. I want to know position and range. That's where I want to focus on. So I just scroll down here to position and range, and you can see we got tons of position and ranges. This is the one I've mentioned that is talking about today's range. So what did I want to focus on? Okay, I wanted to focus on 5-day position and range, 10-day, 20, previous day's range, and today's range. Those are my ranges. But I'm going to tell you right now, the key ones to actually building this, to making it where you can get those wedge patterns, are the 20 and the 5. Those seem to be the sweet spot. Okay, so all I have to do is look over here. Okay, this is the minimum and the maximum that it traded during that 5-minute time span. Okay, so position and range right around 67. 5-day range right around 70, and I'm not going to do the 10 days right now, because what we're about to do right now is go into a scan called Poised, and I'm going to show how I took these ranges and how I configured a scan so it would show me these beautiful setups. All right, so this is Poised right here. Okay, now I have it on old data right now because I think I was looking, but let's go take a look at configuration. And this is the stuff that's going to be very beneficial to you guys. Okay, hide unused. All right, so these are my filter sets. Okay, so this is what we call a top list. So there's no alert. Okay, the way a top list works is any scan or any stock that meets the filter sets here, okay, will appear in the the top list. Okay, so all they have to do is meet all these filter sets. Okay, the position and 5-day range, I just showed you that. I wanted on the lower, since I have a max of 25, I can hit this show me button. The price is no more than 75% above the low end of this range. Okay, so I don't want to find those stocks that are, already went 20% over the last 5 days. I'm looking for stocks that are pulling back in the 5-day time frame, but are setting up again. Okay, take a look at the position in the 20-day range. I have it between 50 and 80. Remember that sound we just looked at? It was showing 70. That's why it appeared in my scan. Position in 10-day, no, this is a change from a 10-day SMA. So all my SMAs, you can see, all it has to be, I have a minimum of 0.01. Basically, that's all that's saying is the price is at least 0.01% above the 20-day range. So I am just putting those in there to assure the stock is above these moving averages on the daily chart. Very simple stuff. This EPS is just a hack to get rid of ETFs. So there you have it, position in 20 days, previous day's range. I got a max of 110. I don't want it too far away from that 20-day range. And I'm trying to see, the change from the 10-day SMA. Okay, so I want it above the 10-day SMA, but you can see I have a max here of 5. I'm not looking for something that's too far extended from that 10-day, moving average. Okay, so guys, this formula right here, these filter sets are what's creating these crazy looking beautiful setups for me. Okay, and it's the power of the intraday range. I'm sorry, the position and ranges. The 20-day range, assuring the stock is nowhere near its 20-day high. Okay, just my mind alone tells me if a stock is off its 20-day range, okay, by 20% of that range, and it's above all its moving averages, that alone tells me there's a sweet setup there. Just by picturing what it looks like in my head. So that is what's kind of creating these beautiful patterns. Now, my two favorite ones are sweetness and poised. All right, nice setup is a close third. This one right here does not have a 10-period moving average. This is looking for stocks that are, you know, pulling back more. You can see it's below the 10. These are ones I may look to take a very small size zone in case it's going to bounce off the 20. So these are a little bit different. But let me show you what's happening, guys, in this market right now. And this can be a blessing, okay? If you're a swing trader, right? And especially a long swing trader, okay? I don't do a lot of shorting, mostly long side. I put these on real time. These things have been full like for the last, 4 months. Let me make sure this is on, that's on live during market hours. Okay, this is how everything closed on Friday. Nothing what I was looking at. Typically over the last, let's call it 5 months, I would come in and there would be anywhere from 20 to 30 stocks in here that I'd be going through. Now when I wake up Monday morning, I'm like, oh boy, there's not a lot in there. Guys, that can be a blessing. That may be telling you, hey, sit on your hands. Wait for these scans to populate again. Okay, it can be huge. It's knowing, you know, I think Jesse Livermore talks about all the money he made sitting on his hands. There's a lot of truth to that. There's still a few stocks that are in here that are meeting the criteria, but for the most part, ETN actually looks pretty good. Stick a price alert just in case that thing wants to go off on. That's what I find myself doing all the time, just putting in price alerts. But that one's holding up still above all its moving average. Could be developing. See the wedges? They could be developing. May not happen soon, but maybe the next 2 or 3 days this thing gets another move. But right now it's telling me to back off, Andy. Give it a few days. Maybe we get a decent pullback in the market this week, and then things start setting up again. And they will. They will. These things will start populating. When I know these things are starting to populate, they will. They'll do it quickly, and those setups will be there again. So don't try to force the action. Don't try to. Do you identify? I don't. Good question, William. I could flip these scans. That's the beautiful thing. So if I took this poised right here, it's a beautiful thing about trade ideas. If I took this and I duplicated it in a free floating window, and I took this, we could go configure, flip, and it flips everything around. So now you're seeing stocks that should be forming these kind of same patterns on the downside. And there you have it. I mean, this is below all its key moving averages and definitely can work on the downside as well. There you have it. If you flip this around, this would look like it's about to break out to the upside. Uh-oh, what happened to it? Oh, it's back there. Hold on. Let me do this. Bear with me. So there you have it. So yes, great question, William. I'm glad you brought that up. This is, you can flip these. If you're a short seller, you flip these around and you'll get those beautiful wedge. Yeah, I'm not going to draw it, but watch. If I did this right here, you'd have a wedge and then a potential. Well, that one kind of violated a little bit, but you could draw it from here to here. And a beautiful wedge to a potential downside break in rambus. No, Paul, I mentioned when I'm looking at these breaks to the upside, I mentioned where I like to enter those. And let's take a look at sound again. And if you look here and I drew the trend, you're going to see a lot of these that have a nice trend line because of the way I set up the position in ranges. They're creating these wedges for me. So what I like to look for when I'm buying these is a break of a 5-day high and a break of that downsloping trend when you have a wedge. Okay, when I see that, it's money. It's go time, and you'll be surprised when you have a scan like this. You know how often you can be the first one to the party. You know, you're one of the first ones catching these moves because you're coming in prepared. Okay, you've done your homework. Okay, it's so easy. You got them right here in front of you, and you're just coming in and watching. And if I go here and just show you, just going back to when you came in Friday morning, I'm sorry, that should have been Thursday. It was just full of sweet stocks that were setting up. And, unfortunately we had the market that had other ideas. That's why, guys, we always got to keep the market in the back, in the back of your mind, what's happening. Now, I'll still trade some of these setups, if the market, not when the market's just cratering, like that was an ugly move, Friday, and a couple of days before was an ugly move. But if we're in a bear market, even if there's get some sideways action, I'll still trade these. It's just my hold time is a lot shorter than what it used to be, right? Because the sellers are winning right now, and I want to get off this thing before the sellers start selling. So let me make sure I didn't pull back up, just didn't miss anything on this. Yeah, but this, I wanted to once again get back to this because this is the key. Okay, guys, if you focus on these key ranges, and you can just look at a chart, and once again, and you can get a good idea. Just going back to that sound right there before the breakout. Let me zoom in. I mean, you can see the 20-day range. It was nowhere near its 20-day high. It's above all its key moving averages. That tells me right there it's a strong stock. If a stock's above all its 10, 20, 50, and 200, more than likely it's a nice pattern, okay? And you had one here, and you had it far off the 20-day high, and you had it nearing a break of that 5-day high. So great stuff. I mean, it just presents some of the most beautiful, patterns. And I showed you IBM. And guys, I'm going to tell you another one that was in there. I could not go back and get the data because it's too long ago, but NVIDIA right here on the break above 500, it came in there on this day right here, and you can see the pattern. Okay, you can see the trend line. It wasn't as deep as some of the other ones I'm looking at, but you can see it poked its head above that 10-period moving average and closed, and look what happened on this day. And then look at the subsequent move. Just beautiful. Let's see, answer some questions here. We're leaving for family vacation. Is it okay to use the offer in June? Yeah, if not, hey, just I'll throw my email up there, Anatole, and just email me directly, okay? And I'll make sure you get a good a really good discount, okay? Where can I get a copy of the slides? Copy of the slides. I'm not the most I don't know. I'll have to figure out how to do it. I'm sure there's a way. I'm just not when it comes to that kind of stuff. It's not my strong suit. I'm a trader, but anyway, I'm sure I can probably get you. Send me an email. I'll get it to you. And for some of you guys have to head out. Oh yeah. Anyway, I want to conclude. Look at this break above that 500. 5-day high, breaking that wedge. NVIDIA was another one that was just gorgeous. Once again, the setup was there. A lot of people probably didn't even see it, till it was up $25 that day. But if you have a software showing you, hey, keep an eye on NVIDIA, it's about to break a trend and a breakout high. William, when it comes to profits, like I said, that's subjective. I will definitely hold some. I've been known to hold stocks for, several months, but typically what I'll do, my style is identifying the setup and going in with big size. I like to go in with big size because I'm identifying the setup. I have a real strong inclination that thing's going to run. So I usually get size, and then what I do is I scalp out of 50% pretty quick, because I probably have a little more size than I want to for a normal swing trade, because I know I'm going to be scalping some out. And so I'll scalp out 50% maybe after a 8 to 10% move. And now that gives me staying power with the last 50%. And a lot of times, if I do hold things for months, it's typically a 1/3 position. Yeah, because what'll happen is if I get a nice little run, maybe I'll take off another 30%, and then I'll stick that 1/3 position in my back pocket and wait for a technical breakdown on the daily chart before I get out of that. But that's my style. When I was with the day trader, Steve and I, when we were approached by Ditto Trade, it was an online broker, and what that was, it was they had a great concept where they would let people piggyback on our trades, right? They would go in and buy, in other words, I'd enter a trade, and anybody that was following would get the exact same price. They would go out and buy these block trades in the market, and everybody would get the same price on the entry and the same price on the exit. So we developed this style called swing scalping, okay? And what that means is we're looking for a setup like I've been showing you, and we're gonna scalp out a swing trade. What that means is our average maybe 3 to 5 days we were in a stock, because we found out the meat of a move on a nice setup like that is typically about 3 to 5 days. That's where you're going to get maybe 80% of your move, and then it starts getting sloppy, it starts getting pullback. So we would just find that meat of the move, and bang out maybe half of it at 8 to 10%, and maybe try to go for 20% on that last piece. But anyway, that's subjective, Paul, and I see you went offline. All right, guys, let's see. I got here late, but how big of an account do you recommend having to be able to take your trades? Well, that's the thing about swing trading. You don't fall in any day trading rule. Okay, so you don't need much of an account. You could, and a lot of people are think the only way to make big profits is day trading. And yes, you can make some bigger profits. I did it for 15 years. I know what kind of profits you can make from day trading. You're not going to make quite as much as swing trading, but you can do really well. People don't realize that by just finding these setups, and buying, you may buy 2,000 shares if you're day trading it. Well, buy 200 shares and let it work for 3 days, and you're probably going to make more money than if you'd have bought 2,000 shares. Because what's going to happen is, as a day trader, I know you're going to get excited after your 15 cent gain, and you're going to pound out of it real quick. But whereas if you take a smaller size, it's less stress, let it work for you for 3 to 5 days, get your 10% gain, and you've done much better than when you were day trading. And I'm not saying that for all day traders. I just know I watched a lot of them burn up, and I just know how most of them are. I used to trade a lot of options. William, I don't anymore. I mostly just common. Yeah, it's just I trade the common. I enjoy trading options. I may have to get back in it, but I just prefer the common. All right, guys, my time's about up here. I do want to send following slides here before I leave, and if it's going to let me. All right, guys, I do a Twitter video each morning, usually about 30 minutes before the bell, okay, where I go over a lot of these stocks that I'm talking about. All right, so if you want to follow me, go to @TradeIdeasLLC. Okay, that is it's kind of our company one. I share it with a couple other people, but anyway, I drop that in there every day about 30 minutes before the bell. So it's usually a 2-minute video just showing you stocks. I'll highlight about 5 or 6 stocks that I'm really looking at. And then, guys, if you want to contact me, just you can contact me at andy@trade-ideas.com. If you want that stack, for the scanning stack here, just let me know and I'll see what I can do to get that. And also hit me up for a special 25% discount, just email me. And I think that may have supposed to have been 20. I don't know. Could be my bad. So don't hold me to it if I'm wrong on that. But anyway, guys, thank you so much for hearing me out, listening. Hope you learned something today. Keep an eye on those setups and have a great one. My time is up. I really enjoyed it. Bye-bye.
Thank you, Andy. Those AI-powered scanning tools look amazing.
Oh, thank you.
Finding the
Yeah,
right-
they are. Yeah.
Yeah.
They worked. I'm user number 40 in their system. I started using it, about 24 years ago when they first started, and I feel naked if I don't have it. So
Wow. So, I mean, finding the right ticker is a crucial first step in taking a winning entry. Ladies and gentlemen, that was Mr. Andy Lindloff of Trade Ideas. Thank you for making such a generous offer for our members today. We have put Andy's special offer link in the chat box. You can also learn more by going to trade-ideas.com. Thanks again, Andy, and have a great weekend.
All right, thank you. Appreciate it. Bye-bye, everybody.
All right, traders, I just wanted to pause for a second and thank everyone in attendance today. We have over 1,000 traders from all over the world registered to join us today. And regardless of which country you are from, I want to thank you for joining us today for our stocks and options special event. Okay, next, we got someone really great. Trader's Corner would be neglectful in our duties to not have the author of the Bible of trading options on today's show. Ladies and gentlemen, you'll want to listen very carefully to our next presenter. He's a professional trader, registered investment advisor, and commodity trading advisor. He speaks on option strategy seminars around the world. He is perhaps best known as the author of Options as a Strategic Investment, the best-selling work on stock and index option strategies, which has sold over 1 million copies and is often referred to as the Bible of options trading. You may have read an article in publications such as the Wall Street Journal, Barron's, Technical Analysis of Stocks and Commodities, Data Broadcasting's Exchange Magazine, Futures Magazine, TheStreet.com, and Active Trader Magazine. Ladies and gentlemen, here to present McMillan's Market Outlook, what option indicators are saying. Now, it's always an honor to introduce Mr. Lawrence McMillan of McMillan Analysis Corporation. Welcome back to Trader's Corner, Larry.
Hey, thank you. Can you hear me all right?
We can hear you well.
Yeah, I rebooted my desktop about 40 minutes ago, still rebooting. Doing this from my laptop. It's like, whatever.
Yeah.
Hopefully it's all.
Yeah, the
all right,
audio's slightly cutting out, but you're really good right now.
Okay. I don't know how to, I'm using the microphone off the laptop, I think.
Okay.
Anyways, I started this company, just to give you a little background, as a derivatives research firm, and we were, selling newsletters, analyzing, etc. But we moved into money management in 2008 after some good calls on the financial crisis, and we still manage money today, as well as publish the newsletters. And we also have an option education department, things like this, as well as mentoring. So I'm going to come back to this later. I'm going to post the PDFs of this presentation as soon as we're done today, and they'll be at this URL at the bottom of the screen, optionstrategist.com/Traders Corner. And I'll come back to the specials later on. So the four main things that we look at are, first and foremost, the S&P 500, because that is the market. So our indicators don't want to be in disagreement with the trend of the S&P. I mean, they can be, but you have to understand that the S&P is, the main price indicator. But we'll also look at some option-oriented things, such as the equity-only put-call ratios and some individual put-call ratio charts. They're kind of interesting ones setting up right now. Market breadth has given us some new signals recently. We have a little bit of an option twist on that. And then we'll look at VIX and the volatility indices. That's very interesting right now with the market struggling a bit here, and VIX finally starting to come off its lows. So we have a couple of very important rules. One is oversold does not mean buy. So believe it or not, we're already getting an oversold indicator in this market after having a couple, well, actually 3 pretty serious down days in the last couple of weeks. But just being oversold is not a buy signal. We need to have something confirmed. And conversely, overbought does not mean sell either. So we had plenty of overbought conditions extending all the way back into January, but the market kept going higher. Again, we're looking for confirmed sells, not just an overbought condition. So here's the 2-year chart of the S&P. And on the far left, of course, we had the bear market in 2020 and I'm sorry, 22. And we lost about 27% at the bottom there. It seemed, kind of a quiet 27%, but it was a real true bear market. Then we started the bull market. We had this 10% correction here last October, which actually turned out to be quite healthy and launched this monster rally that we've been in really ever since. The most recent action, well, first of all, let me just say this 4,800 level was pretty important. That was the top of the market before we went into the bear market in 2022. So that 4,800 level extended forward all the way into late last year. We finally broke above it right in here, and that launched again a secondary leg of the market. Some work was done here in this box between 4,700 and 4,800, and we moved up, pretty strongly until finally we kind of topped out here in late February, early March, between 50.50 and 51.80. So I consider that a support zone. This chart is current, and we've pulled back into that support zone. We haven't broken out the bottom of it yet. So this is still a bullish chart with a modest correction going on at the current time. This just zoomed in. This is just a 1-year chart, same thing. Again, you can see that support area. We pulled back to 5,100 at the lows yesterday, or nearly 5,100. Rallied off that a little bit. I'm sure there was some short covering coming the weekend. Those purple circles there are just some gaps on the chart. It used to be that gaps were easily filled on the S&P 500. That's not really the case anymore, but there's a couple of yawning gaps that are still there months later. So basically, we've seen the S&P make the all-time highs 22 times since mid-January, and it's a pretty seriously bullish thing. We'll compare that to some other ones later on. But as I said, we've built up support in the 50 to 51.80 area, and we pull back into that support zone. Now, if we close below there, to me that would be bearish because there's a lot of technical-oriented people looking at that 50-50 support, and if we broke through there, I think you get some technical selling. But right now, we're still considering this a bullish chart. We've been bullish up for a long time, really since last November, and we call that our core bullish position. Right now, our positions based on that have calls that are with strike prices that are out of the money, so we don't have a whole lot of risk on them at this point in time. But what we do is typically when the market goes higher and our calls go in the money, we roll them up to higher strikes. So we've been doing that along the way. Now, there's another thing we can do with the S&P chart, and that's draw the Bollinger Bands on it. We use a slightly different definition than John Bollinger did when he invented Bollinger Bands. Because when he invented it, he calculated the realized volatility of the underlying as being the standard deviation of closing prices. And that seems correct. But in reality, the math guys, Black and Scholes and other math-oriented models, use the standard deviation of daily percentage price changes. It's slightly different. And so we look for the market. We use those modified bands because we're using Black-Scholes implied volatility. So we need to calculate realized volatility in a similar manner. Otherwise, we couldn't compare implied and realized. In any case, we look for the market to move outside of the ±4 standard deviation band and then move back inside. So here's the chart going back to last year with some signals marked on it. We haven't had a signal recently, but let's start out here on the bottom left. You can see down in here, we came below the -4 sigma band. That's this one. And then the next one inside is the -3 standard deviation band. So we moved outside and inside. It was a buy signal, and the buy signal is terminated when it hits the upper band on that came from a lower band. So when it hits the upper band, so the red letters there are successful signals. The blue letters not. You can see that in that bear market or the correction last October, we had a couple of times where it looked like we were getting a buy signal. Market responded slightly, but never reached the upper band and then went lower. So finally, we did have the one down here that was a successful signal. We had a minor unsuccessful signal last before the beginning of this year, and since then we've not had a new signal. So this modified Bollinger Band or McMillan volatility band, which we also it's a similar volatility band signal, has not given us any signal here recently. So we do keep these the same concept on every stock, index, and futures, and we put them on a chart on TradingView. Is the S&P one that we just looked at, for example. You can see the sell signals that were here, and then those buy signals during the correction, and then that one unsuccessful sell signal at the end of the year. So if this concept interests you, we do, by the way, when we sell this to people, we tell you where all the signals are occurring each day. You don't have to wander through a million charts to find it out. All right, so let's move on to put call ratios. These are important. Put call ratios as an indicator were discovered by Marty Zweig back in the 1950s when he was getting put and call volume out of the Sunday paper Barron's, which was running ads for all the put and call dealers at the time. So he started adding up all the puts that were traded, adding up all the calls that were traded, and realized he was looking at a contrary indicator. Fast forwarding to today, we use the equity only put call ratio, which is all stock options that trade, to predict the broad market. But Marty's concept was this, is that too much put buying means you should be bullish on the market. And if there's too much call buying, you should be bearish on the market. Of course, defining what too much is the trick, but we think we have a pretty good handle on that. And for example, let's just say we take a look at yesterday's trading in IBM. We sum up the volume of all the puts that traded. Separately, we sum up the volume of all the calls, divide the two, and we get the put call ratio. There's a couple of interesting things about the ratio. So if since put buying is in the numerator of that fraction, an increase in put buying makes the ratio go higher. But when would you likely have an increase in put buying? Well, that's if the underlying is going lower. So they move in opposite directions. Same thing with the calls. Calls are in the denominator. If the denominator of a fraction increases, the fraction declines in value. And when would so heavy call buying makes the ratio go down. When would you likely have heavy call buying? Well, that's when the stock is going up. So we keep a 21-day moving average, and typically what you'd like to see is a symmetric chart like this, with the stock price and the put call ratio behaving nicely opposite to each other. Now, we publish about 1,600 or 1,700 put call ratio charts on our website every day in a fairly low-priced data area called the strategy zone. And when you're looking at these charts, we give you both the stock price and the put call ratio. So in theory, it works like this. Let's say the stock is declining, and as the stock is declining here, people are buying puts, forcing the put call ratio higher. Eventually, the put call ratio gets to a local maximum, and when you have that local maximum in the put call ratio, that's a buy signal for the stock. Now the stock starts to go up. People are buying calls. Move over to the left side here. Stock is still going up. People are buying calls, forcing the ratio lower. Eventually, the ratio forms a local minimum, and that is a sell signal for the stock. So in theory, that's how it should look. Sometimes arbitrage and other things will distort that symmetry, but mostly that's what we look for. This is not a current chart, but on top is the S&P 500. And on the bottom is the equity only put call ratio, all stock options that trade across all exchanges. I think there's like 9 of them now. And you can see the inverse symmetry that exists most of the time. So that's why we use the equity only put call ratio to predict the stock market. So here's the current chart. And let's just take this one here in the middle. We had a local maximum. That's a buy signal. That was a little bit early last October, but then the market did take off. And since then, we've had an attempt at a local minimum, which was really not a very good sell signal. Another buy signal came in. And now just recently, we've had another local minimum. Being a little bit wary of this, we were waiting for it to actually start to accelerate to the upside, much as like had happened from the one back last August. And now it finally has. So around the first of the month of April, we declared this to be a sell signal. And so this equity only put call ratio is on a sell signal. And we took bearish positions in our indicators based on that, in our newsletters. Now, with the advent of computers, of course, we can calculate a different kind of put call ratio, what we call the dollar weighted or weighted put call ratio. In this case, at the end of the day, we take each option's closing price and multiply it by the volume of that option that day, and that comes up with the dollar volume. Now, you could do that tick by tick. That's an expensive data set, and we found using it this way was just as gives just as good as signals. So let's again say it's IBM. We do that calculation for every option. Then we sum up those dollar volumes of all the puts, separately sum up the dollar volume of all the calls and divide the two. And again, now we have the dollar weighted or weighted put call ratio. And now we're measuring the dollars being spent on bullish opinion versus the dollars being spent on bearish opinion, as opposed to before it was just the volume. So the chart gives signals in about the same spot, but usually at different magnitudes. So that buy signal, for example, last October with this ratio came pretty much right at the bottom. So that one hit it very nicely. But again, here we had a local minimum. It was not a good sell signal, followed quickly by a buy signal, forcing it down here. And again, now here we're down to levels that we haven't seen since really December of 21, before our market started. So a lot of optimism. I mean, that's pretty typical. It marks at new highs. Of course, people are going to be optimistic. But now we also have this one break out strongly to the upside here in April, right in here. And so that's a sell signal as well. So both of these put call ratios are on sell signals. So these are typically one of our stronger indicators, and we have, as I said, taken positions based on that. And these are going to remain on sell signals until eventually they'll roll over and start to trend downward again at some point in time. What do we buy when we get these signals, whether it's you say, McMillan volatility band sell signal or put call ratio sell signal or buy signal? Well, typically, when so we're an option firm, we buy options, but we typically buy an option that has a fairly high delta. Let's say we're bullish or we're going to buy a call option. Now, the delta of a call option can range between 0, which means it doesn't move at all along with the underlying when the line goes up, or we can go all the way to 1, which means it moves exactly as much. So that's a deeply in the money option. But basically, we're in the business of predicting what the underlying is going to do. So I don't want to buy an option that could lose money if I'm right on the underlying. I don't want to be right about the direction, let's say, of the market and lose money because I bought a call that was too far out of the money or too short term. So we typically buy an option that has a delta of 70 or higher. We buy SPY options if we're trading S&P, and then usually 1 or 2 strikes in the money. If we're doing a put call ratio, maybe a little bit longer term, we might buy an at the money option. But again, that's going to have a delta of 55 or so. So in either case, if the market goes up, I'm getting good participation from my option. If you watch TV and you see the option traders, they almost always do a bull spread or a bear spread, which I don't really understand why. That's not the way professional traders trade, and certainly it's not optimal. But the bull spread is this: you buy a call at the lower, and then you sell a call up here at a higher strike. So as the stock starts to move up, everything's going fine. But then when you get to the striking price where you sold the call, you cut off your profit potential from then on forever. So there's really, the only time that even makes any sense at all is if the options are expensive. And we put up publish free volatility data on our website. It's updated every Saturday. So it was updated this morning. And we also sell it daily if you really want to keep up to date. But so you can tell if an option or the options on a particular entity are expensive or not. But typically what they'll say is, well, you're risking less. That's not true at all. If you buy a call, your broker makes you put up 100% of the value of the call. If you do a bull spread, your broker makes you put up 100% of the value of the bull spread. So if you lose, you're going to lose 100% of what you invested in either case. So they're the same in that regard. But the call here in the line has the advantage. Yes, it could lose a little bit more money because you sold the other one and took in some money there. But on the upside, it can make a lot more money up here if the thing really gets rolling to the upside. So if you're worried about absolute dollars, instead of doing 5 spreads, say do 4 calls or something. But don't spread unless you really have to. Now, even if you do spread, you can mitigate the negative aspects of that. One is you can widen the difference between the 2 strikes. And 2, you can roll if the underlying gives you a short strike. So right now, this is current as of today. We're not using spreads unless we're talking about SPY options expiring on May 1st or later, in which case on the call side, we're using spreads 15 to 20 points wide. And on puts, since puts are more expensive than calls on a relative basis, on SPY, we're using strikes 20 to 25 points wide. So that's our, kind of way we're adjusting without, completely killing the upside by widening the strikes. Secondly, we roll if the short strike is hit. So let's say, the stock was, SPY was 520. Let's see, I'm sorry. That slide should say 510. Say SPY is 510, which is about where it is now, and you decide to put on a bull spread in May. You buy the 510 call, you sell the 530 call, and say you're fortunate enough to see SPY go right up to 530. Well, that's great, except remember that looks like that. So you're getting up here where there's not much profit potential left in your bull spread. So sell that bull spread that you bought before, take a profit, and buy a new one, setting the strikes at 530 and 550, and that'll give you more upside. So we do all of these things in our adjustments if we have done a spread. I would prefer not to do a spread, but when options are really expensive, you're kind of forced to. So same thing for puts. If you're looking at being bearish on the market right now, you would buy, like say, a SPY May 510 put, a sell a 480 put, and then you roll down if SPY trades all the way down to 480. I want to look at a couple of individual put call ratio charts. We treat these the same way: local maximums or buy signals, local minimums or sell signals, except we only use the extremes. We don't use the ones in the middle. So this is Live Nation. This is a brand new recommendation that we just had. You can see about a year ago, there was a nice extreme local maximums up in here. 300 means, by the way, 300 being spent on puts for every $100 being spent on calls at that point. So that's very bearish. Everybody's very bearish. Remember, this is a contrary indicator, so we want to buy calls or buy the underlying, and we got a good move out of that. Came down, got a local minimum down here, decent sell signal. Then it came back down to, again, this intermediate thing here, we don't trade those. We're only looking at the extremes. So we got another sell signal here in January. That didn't work out. But now we've dropped even lower. Now we're down to about 40-ish on the scale on the left side there, meaning only $40 are being spent on puts for every $100 being spent on calls. And that has given us a sell signal. So we're buying puts on Live Nation. Here's another one, CBRE. This is a current one as well. the stock did break down, and you can see the put-call ratio over here had formed a local minimum and now started to race higher. So that is a sell signal as well. And you might say, well, it already broke, but you can see that the stock these long moves when the sell signals work. So you're only at the beginning of what could be a much longer move. This is another one. Imitation Homes has given a couple of decent sell signals in the last year, and now it's given another one. So the put-call ratio just bumped up here in the last couple of days, and the stock broke down through some support right there. So that's another sell signal. This is Willis Towers Watson. WTW used to be Weight Watchers, I thought, but now it's this one. And we were waiting for it to take this level here, which it finally did. And so we recently bought puts on that as well. Gold, the stock gold, GOLD, has done, first of all, I had a good sell signal at the beginning of the year, and then quickly reversed and gave it, a decent buy signal at the beginning of March. But people have bought calls so heavily on this last buy signal that we're already gone down and formed a local minimum or sell signal at this point in time. Now you might want to, this is still trending higher, so you might want to wait for it to break some sort of a trend line before you jumped in. You can do this with futures options as well. So the blue line there, the bottom line, the put-call ratio, is constructed here using the cattle options that trade on the Chicago Mercantile Exchange. These are, not everybody has a futures account, but there's no equivalent ETF on the stock side. So if you want to trade these signals, you have to have a futures account. If you're trading, let's say at Interactive Brokers, you can have futures and stocks both in the same account. Most of the time you can't. But in any case, this has been a good one over the years. You can see buy signal there in December, worked out pretty well, and then has rolled over most recently now to a sell signal. It's on that sell signal. People are madly buying puts right now, forcing this ratio to go higher at a quick pace. But eventually it will roll back over and we'll get a new buy signal. Now here's another one, corn. This chart's a little bit older, but on the bottom, the put-call ratio is drawn with using the corn options that trade on the Chicago Board of Trade. But in this case, there is an ETF that trades on the stock side of things with the symbol CORN, and the chart of CORN and the chart of corn continuous futures is exactly the same because CORN is actually trading the futures. And so you can buy options on CORN and you don't have to have a futures trading account. All right, so let's move on to the indicator we look at. Brett has given us some interesting signals here recently. There's two things you can do with breadth. One is you can just keep a running total, cumulative total. And number two, you can do an oscillator. So we do both, but our oscillator, so our oscillator today is 90% of yesterday's oscillator value, plus 10% of the difference between advances and declines today. Now, there's two kinds of data sets as well. You can use New York Stock Exchange data, which is the most typical way we look at advances and declines. But there's some things on the New York Stock Exchange that are not stocks. And so we're looking for a stocks only data set. And yes, I realize that the New York Stock Exchange publishes what they call the operating companies data, but we had a much better data set, all stocks that have listed options. There's about 6,000 of those now. And so that's a very robust data set, large caps, small caps, all kinds, NASDAQ, New York, whatever. So we use the stocks only data set, and we look at the oscillator, and this is the oscillator going back, well, really all the way to 2013. And since we've been in a bull market most of that time, we don't get oversold, those green spikes downwards. We don't get oversold too often, although once we got into the bear market of 2022, then we started to see a lot more oversold conditions. And then we had a pretty good one last October, and then a couple ones recently. And now, just now, we've gone back into oversold. We did have a sell signal on April 2nd from this oscillator. It had been very overbought. And remember, overbought does not mean sell, but when it stops being overbought, that's a sell signal. And so we've just moved into the very beginning of an oversold condition. But again, oversold does not mean buy. So we have bearish positions that we set up based on the sell signal on April 2nd from breadth, and we're still maintaining those at this point in time. This particular indicator is a bit flighty. I would use the word sensitive here, but it means you can flip back and forth. So any indicator that can do that, it could give you a whipsaw. You quit, you're in, you're out, you're in, you're out, that sort of thing. But when it trends, when we get one of these that's like it's happening right now, they're pretty strong. So it's one of the set of indicators that we use, and it's bearish at the current time. Now, there's another thing you can do with breadth, and you can take a look at the volume. So the volume on advancing issues minus the volume on declining issues. This has been much stronger than regular breadth because of the heavy volume in the Magnificent Seven, or whatever you want to call the high tech stocks that have been leading this market. In fact, this year, when we saw earlier that S&P had made new highs on, I believe it was 22 different days, this has confirmed those new highs on 13 of those 22 days. So a confirmation here is not necessarily a buy signal, but it's certainly not a sell signal. And what people often look for with breadth or cumulative breadth is a divergence where breadth is falling off and the market's going higher. That didn't happen here. Now, it might, it often does before bear markets. It happened back at the beginning of 2022. So the fact that it hasn't happened yet, might mean that we still have more to go on the upside. Another indicator we look at is new highs versus new lows. I only use this one just because it's had a great track record of fairly long-term signals. So we got a buy signal last December 1st. We exited on January 17th, but we got right back in again almost immediately on January 22nd, and we're still on that buy signal from January 22nd. If you look over here, you can see that on those 2 days, or for the January 19th and January 22nd, we had more than 100 new highs both days, and it's outnumbered new lows. That's the definition of a buy signal. Now, occasionally we've had this rogue day here or there where there's more new lows than new highs, but we need to see that 2 days in a row before we would be stopped out of this buy signal. This next chart is just bringing you up to date on the data. So you can see this past Wednesday, we did have more new lows than new highs again, right here. But the next 2 days, it reversed itself back the other way. Now, this is New York Stock Exchange data. That was not the case with stocks only data or with NASDAQ data, but our indicator is based on New York. And the reason probably is that some of these interest rate entities that trade on the New York were actually going up over the last couple of days. And so you got more new highs than new lows. But again, this indicator is still bullish, and it's been bullish correctly for quite some time. So let's talk about VIX. VIX is pretty interesting, and there's a lot of things going on with VIX. I think by and large, VIX is very misunderstood. A lot of people don't really understand it. Even professional traders, I don't mean VIX professional traders, but I mean a lot of professional traders, just whip off silly statements about VIX and, oh, VIX is broken. Well, first of all, VIX really can't be broken. It's just a calculation based on option prices. So, it is what it is. But VIX is not broken in any case. So a couple of things that are important about VIX. One is the trend of VIX. So the market should be going the opposite way from the trend of VIX. And number two are spike peak buy signals. Occasionally people get panicked in a down market. They'll pay up for options, pay too high of an implied volatility for options, and it creates a spike in VIX, and those are buy signals. So here's just one of the comment I guess I had here. A low VIX is overbought. So the VIX has been low for a while now. You get down here 12, 13, whatever. but it's not bearish for the market until VIX begins to rise or begins to rise quickly. So here's a 1-year chart. Those red Bs, we have a trading system that we built around the buy signals. Those red Bs are the correct, good trades. The gold, when we have the trading system in place, when we get a buy signal, it lasts for 30 days. So those gold Bs are second buy signal within that 30-day period, and we don't trade those, so I just mark them separately. The blue one was a losing trade there back the beginning of the correction last October, but again, you can see that quickly was followed by a valid buy signal. So we had one last February, and now we haven't had one since. Now we might be working on one here, but according to the way we calculate VIX or spiking, or definition of spiking, VIX is not spiking yet based on its closing price. Yesterday it closed at 17 and change, even though 17.31, even though it traded during the day up to 19. So that's not yet our definition of spiking. We may get it soon, in which case the market can go down while VIX is spiking, but once VIX does form the spike peak, that would be a buy signal. So right now, no signal from that. Working on perhaps one, unclear. The other thing at the bottom of the chart here is perhaps more important though right now, and that's the trend of VIX. So this is the 20-day moving average of VIX, and this is the 200-day. And the reason I drew this little bracket here is you can see that the 20-day is advancing now on the 200-day and probably going to cross over here pretty soon unless VIX falls back again. Once that crossover takes place and VIX is above the 200-day, which it is right now, that is a trend of VIX sell signal. Remember I said the market should be going the opposite way of trending the way of VIX. So VIX would be trending higher, and I say sell signal will be a sell signal for the stock market. The last time we had one of those was last October, mid-October, during that correction. And it was pretty short. It reversed itself back out within a month or so. The one at the beginning of the 2022 bear market lasted, months, like a year. So if this crossover happens, that would give us a bearish signal for the stock market. That hasn't occurred yet, but we're certainly watching that on a very timely basis. So right now, all we can say is that VIX is low. It's been low. It's on the verge of starting to move higher quickly, but the conditions that we look for to satisfy sell signals here have not been completed yet. Now, you can't trade VIX, but you can trade the VIX futures and the VIX options. So we can get some clues from them too about what the market is doing. First of all, normal bullish market, the term structure of the futures, in other words, if we just plot the futures prices going out in time, the term structure would normally slope upwards like this. That's bullish for stocks. When that's the case, everything is good. On the other hand, if we get this, where the term structure slopes downwards, that's very negative. And the last time we had that seriously was March of 2020 during the pandemic crash. And that was a very negative thing. Now, there's some profit opportunities there, but it's still negative for stocks. So we haven't seen that happen yet. But right now, the term structure, which was sloping upwards very steeply, is now beginning to flatten out. And this is last night's prices. And a couple of things. So VIX closed, as we saw before, at 1731. The front month April futures closed at 1705. So 1705 minus 1731 means that they closed at a discount. The futures are actually below a VIX, a discount of 26 cents. It's not much, but a discount is not a great thing. You'd like to see a premium. But if you look at the term structure here, though, you can see that each one is slightly higher than the previous one, except for October. I'll come back to that in a minute. And so the premium on each of these futures contracts is positive, except for the front 2 months. So that's not as bullish as it could be, but it's still somewhat bullish. If it's certainly not a negative where each contract is trading at a lower price than its predecessor. In that case, we would definitely be worried. Now, what's going on with October? Well, futures, VIX futures are based on SPX options that expire the next month. So, for example, I have this asterisk here. April VIX futures are based on SPX options that expire in May. So here in October, October VIX futures are based on SPX options that expire in November, the third Friday in November, whatever it is, the 20th, not really sure. And well, what's happening in November, of course, the election. So those are the first series of SPX monthly options that are expiring after the election. So they're very high priced right now. It quickly falls back in terms of implied volatility after that, but that's typical of any event. Earnings, for example, or let's say drug trials or lawsuits, where if there's a fixed date and there's no something is going to happen, the options that expire right after that event are the most expensive ones. So that has forced these October futures up in price above the others. Now, it's a little too early, I think, to be putting on spreads based on, October versus September or October versus November. But we are definitely going to be doing that later on, especially if this anomaly continues to hold. I mean, I don't know what the marketplace is actually saying is going to happen, why the election would cause volatility in the market just after it. You'd think it would be, well, maybe even before would be more likely. But in any case, that's what is happening. And so, I'm not really concerned so much with why, but whether we can take a position to take advantage of that. And as we get closer to October, we will. Now, if you don't, by the way, you can get those futures prices on the CBOE futures website. They're delayed, but it serves the purpose. But the CBOE also publishes 6 volatility indices. So they publish the one-day index, which is useful if you're trading these same-day options, same-day expiration options, or zero-day expiration options. There's a 9-day VIX. There's the normal VIX, which is 30 days. There's a 3-month, a 6-month, and a 1 year. So if we look at these prices, let's forget about the 1 day for a minute, because that really is kind of in a world of its own. But you can see that there's a very slight inversion here between the 9-day and between VIX. And again, if the market starts to go into a really bearish trend, the short-term options get more expensive, and these short-term indices would trade higher than the longer-term ones. This is still mostly an upward trending term structure, and so it's mostly bullish for stocks. What gets worrisome is if this 9-day gets higher than all the rest of these, then you've got yourself a really oversold or negative market, and eventually it'll give a buy signal coming out of that. But will that condition exist? The market can go down a lot. So that hasn't really happened yet. VIX 9-day is just kind of edging above VIX. But if VIX itself goes ahead above the 3-month, that's also a negative indicator. So probably the simplest way to see how the term structure is behaving is just to look at the 2 front month futures, April versus May. So right now, April is a little bit below May. I say no worries. I maybe say no great worries, a little bit of worry. The term structure, if those flip and let's say April starts trading a point over May, then you have a real problem on your hand. That happened in February 2018. It happened in February 2020, and both times the market essentially crashed right after that. So that's something you definitely want to keep an eye on. Ironically, during the bear market of 2022, that really never happened. But the bear market was not a crash. It was a slow grind downwards. We're going to talk about more in a minute. But there's a huge difference between a bear market and a crash. So where do we stand? This is kind of where I'd place everything on a scale of on the left side being very bullish, right side being very bearish. So we know we have sell signals with the equity only put call ratios And we have sell signals from the breadth oscillators. Yes, they've just now moved into oversold territory, but believe me, they could get way more oversold than they are right now. So those are our two bearish indicators. On the other side, our two most bullish things are still the chart of VIX, because it's above that 50-50 chart of SPX, I'm sorry. It's above that 50-50 level that I mentioned. And we also saw that new highs are still turning above new lows. Yeah, both are a little bit shaky, but they're still on the bullish side. In between, we don't have a McMillan volatility band signal. We don't have a VIX spike peak signal. We don't even have a trend of VIX signal yet, although it's kind of moving here towards the bearish side, which is why I kind of edged it over that way. And the construct of volatility derivatives is what we just looked at. That's still somewhat bullish, but it's kind of moving this way too. So I edged it a little more towards neutral. So that's still a modestly bullish overall picture. And so what we've done is we're still trading our core bullish position, as I mentioned earlier, as long as the X is above 50-50. But we're using out of the money calls now to do that. We are trading other signals around that. So we have bought put spreads and puts based on the breadth oscillators and on the equity only put call ratio. And what we also do, as I said, when these options, whether puts or calls, get in the money, deeply in the money, which for us, our definition of deeply in the money for a SPY option is 8 points in the money. Then we roll it. We take the profit on that one, and we buy a new one at the money. So I want to talk about this special offer for a minute, but then I want to come back to one last subject about trading VIX. So this website, optionstrategist.com/traders corner, will give you access to the PDFs, which I said I'll post as soon as we're done here today. And it also gives you access to this special we're running right now. So our 3 top newsletters, 1 month of each newsletter for $99 total. Typically that would be over $700 value. You shouldn't need the coupon code, but if you do, it's 3NL99, NL being newsletters, 3 newsletters for $99. The 3 newsletters are the Option Strategist, which is our original and still being published 33 years later weekly newsletter. There's a full track record of that on our website going all the way back to the beginning. It has, a lot of different things. It has all these indicators that we've talked about here today, but it also has like straddle buys, put ratios, put ratio spreads, put credit spreads, things like that. And so not just these ones we've discussed here. That chart is the wrong chart. So the second newsletter, I'm just going to go here. The second newsletter is daily volume alerts, which is we use heavy option volume to try to predict if there's a takeover happen. That doesn't really happen much anymore, but daily volume alerts has done very well in capturing the trades from these various systems that we have. So kind of the things we've talked about here today. And then our most expensive newsletter is the Daily Strategist, the Daily Option Strategist. It actually comes out twice a day. There's a volatility report that comes out in the morning, and then there's the regular market report that comes out in the afternoon. And again, this covers all the strategies, including some momentum-based strategies and a variety of things like that. So you get all 3 of those newsletters, the third one being the Option Strategist. You get all 3 of those newsletters for $99 a month of each. You can take them separately. I'm taking them all at once, might be a little bit too much. And while you're at it, we have a new website. That's what I'm just have this slide is here about. And you can go on our website, poke around, see, the kind of various things that are there and that are available. Also have a couple of other newsletters just in case they're not part of the special. We have a newsletter where we sell out of the money puts, very high percentage success rate. You've probably seen that from other newsletters, 95% winners. Yes, there are. It's what you do with the other 5% that makes the difference, though. We also have a special situation alerts newsletter. We have a YouTube channel where I give a market comment every Monday morning. So I invite you to subscribe to that. And of course, our daily newsletters, as well as weekly newsletter TOS, are the ones that were included in this special at the URL at the bottom of the page. So I want to talk the time we have left here about trading VIX, because
Mr. McMillan, we're kind of at time, but you're so great at what you do, it's difficult to interrupt you at all.
Oh, I'm sorry. I thought it was an hour. What is it, 45 minutes?
2:15 is what I have.
Sorry. Okay. No problem.
I apologize, man. This
is
such amazing stuff and so timely.
Oh, sorry. I thought it was an hour. No problem. I will post these slides, though, up on the website. And then when you look at them, if people have a question, just shoot me an email and I'll answer your question.
Thank you so much, Mr. McMillan. As usual, that was incredibly insightful, timely analysis. Ladies and gentlemen, that was Mr. Lawrence McMillan of McMillan Analysis Corporation. We refer to Larry as E.F. Hutton of options traders here on Traders Corner, because when Mr. McMillan is talking options, it's a real good idea to listen. I guarantee you'll learn something. Keep up the great work, Larry. I was waiting all day to listen to your perspective on the current environment, and please come back and see us at Traders Corner. Ladies and gentlemen, if you want to have your funds managed by the author of the Bible of Options Trading, or just start receiving Larry's trades, we have put this special offer link in the chat box. Thanks again, Larry. We appreciate it.
Oh. Are we ready?
Mr. Horwitz, are you there? I apologize. I don't think anyone heard. Did you hear me give your introduction?
Oh, and I'll take care of it, Anthony.
I apologize.
No worries. All right, so I want to share, and I got to find which screen I want to share. Let's see, I think it's this one. 4, okay. And you're seeing my presentation? Are you seeing my screen?
I don't see it yet. Okay, now we see it.
Okay. All right. What's up, Anthony?
Hey, not much, man. Not much. We've been waiting for you.
You ready?
We're ready.
All right, let's go. What's up, everybody? Welcome, welcome. Great to be here. Of course, today we're going to talk about our equity portfolio management system, and it's based on algorithmic trading because in today's world of trading, you have to have an edge and you have to build an edge, and we've done that by using our own proprietary algorithm. But Larry McMillan is the voice in options. I read his book in 1980 when that was the Bible of the floor trader. So in the meantime, we're going to get started here. And the first thing you have to do when you're trading is you have to decide what are your goals. Okay, goals are something that have to be attainable, that can give you some success to make you feel better about yourself and about what you're doing and how you're trying to accomplish it. And if you look at yourself and you look in the mirror, don't make goals that you can't make, that are unattainable. If you say that I'm going to have a $5,000 account and I want to make $100,000 this year, you're not going to do that. Okay. That is ridiculous. It is silly. And if you're here for that, then you probably shouldn't be here, because it's not what we do. Okay. Those type of returns are just a myth that is published by those who like to not give you the facts. The facts are is you need to make reasonable goals, and to take a $5,000 account to 10 or 12 or 15,000 a year, that's a reasonable goal and it's attainable. But you should break your goals down a little bit farther, like by month. Okay, not by day, because trying to set a goal per day is a fool's game, and you're not going to have fun doing it. Okay. In the meantime, do you want to make money? Do you want to be right? Amateurs want to be right. Professionals want to make money. I don't care. I'm not looking to be right on the market. I'm looking to make money from the market. That is the whole objective of what we do, is to make money from the market, not try to predict it. Those who predict are losers. They will not make money. It is always amazing to me that most traders erroneously believe that they must forecast future to make money trading. Virtually all trading services forecast because that is what their subscribers want, plain and simple. We do not forecast anything for one simple reason. We cannot, and you can't either. Again, I don't care whether you become a member, you don't become a member today, but if you think that we're going to teach you how to forecast the market, I can't. It is impossible. Even when I was on the trading floor, I couldn't forecast, and I had a much bigger edge on the trading floor. Of course, I know you've seen the disclaimers, and that is just that whatever results I show you, and I'm going to show you live results as of today, they're not indicative of the future. Okay, so remember that I'm trying to teach you and give you the best way to get there. Okay, I can't promise you anything. Okay, I can promise you a great education. I can promise you a great opportunity, but results I cannot promise. Now, the first thing you have to know about trading in the business is there's always the chance of drawdowns. Okay, they come. Drawdowns are not a bad thing. We make them a bad thing because people get concerned and they get nervous when their accounts go down. But the bottom line is, if you understand your win rate and your percentage and what you're trading, you can actually take benefit of your drawdown. And I will show you that in a little while when we get there, because there's things I can show you within our own equity curve of slight prediction that you can make. But if I was looking at this equity curve right now, this account, whoever account this would be, this is ready for a little bit of a drawdown. It's not going to continue to go straight up as it is. Now, if you've ever heard of the turtle traders, Richard Dennis, he's a friend of mine. I used to trade with him in the 80s. One of the stocks we traded together was Mobil Oil, but I could trade without knowing the name of the market. And that's something you have to remember, that the market is not important what you're trading. What you're trading is the price action and the chart of that market. Okay? Because at the end of the day, all markets are the same, all charts are the same, and all patterns repeat themselves over and over again. So keep that in mind the next time you try to make a prediction. Just a little about me. My name is Todd Bubba Horwitz. I've been doing this for 45 years. I was a floor trader for 35 years, and now have become an educator, and I trade at home every day. I do a lot of financial commentary. And of course, the biggest thing I care about is I trade all of my own recommendations. I don't send out something that if I'm not willing to trade it, I ain't sending it. Okay. Everything you need to be great is already inside you. Stop waiting for someone or something to light your fire. You have the match. And again, you have to have the confidence and the ability to know that you're going to get into something. And again, there's not any guarantees that you'll make money tomorrow. Okay. The guarantee is that you can defend yourself and use good money management skills to make sure that you can stay in the game. Today, we'll talk about algorithmic trading, false hope and secret indicators, competition, mechanical trading, probability, rules, examples, how you can take advantage. And of course, I'll answer all your questions within the time that I'm allotted. Okay. But why algorithmic trading? Because we need something to give us an idea of what the trend is. Okay. We want to participate with the trend as long as we can. You know, there are a couple of different types of traders. There are trend traders, there are swing traders, but they're either trending or scalping. Okay. Now, scalping is really off the table these days because the costs are still too high, even though they're inexpensive, but you have to make too many trades. So the most successful way to trade is to be able to find a long-term trend and stay in stocks as long as you can. And you'll see that we've been in some positions for months, okay, and they're still going in our favor. But the big question is, are you tired of false hope, false promises, and real emotions? And again, I'm going to give it to you straight. Again, whether you become a member or not, I don't care. Okay. I'd like to help people. That's what I do. But if you're not interested, it's not a big deal. I won't worry about it. I won't lose any sleep over it because I'm a great educator and I understand the concept and how the markets work and how they function. And my students do well. But again, I'm not going to worry. If it's not for you, there's no hard feelings. You can still ask me questions. I have no problem. I'll answer any question you ever want. You can email me as well and ask me a question. But at the end of the day, there ain't no secrets in this business, okay? You got to follow the rules and manage your money. All those bullshit the signs you see about 95% return, 88%, whatever, it's all garbage, okay? There's nothing that works unless you manage your money, okay? You can have all the secrets in the world. Unless you can manage that money and know how to let it trade, run when it's in your favor and get out when it's wrong, you're not going to make any money. You're going to be like 95% of the rest that just don't make money when they're trading. Okay. There's one secret to success. Look in the mirror. That's your competition. The mental side of this business is the hardest part to overcome. Many of you will always fight against yourselves, okay, which keeps you from making money. Okay. You are your own worst enemy, as we all are, because again, we try to outguess, outsmart, outthink, and that just doesn't work that way. Mechanical trading, the major reason traders lose money in the long run is because they miss trades, let losses run in the trades they're in, and take profits far too early on the winners. Any of you ever done that? Okay. Too many people have taken winning trades that they intended for an investment and turned it into a trade because it made money right away, and they took a trade that they meant to be a trade and turned it into investment because it was losing money. And of course, it doesn't work out well that way. That is not what you're looking to do. My method is none of the three, and therefore our odds of winning are greatly enhanced and proven by real-time performance. We cannot miss a major move in a market. We do not let losses run. We always let profits run. That is because the algorithm was designed to do exactly those three things. Now, markets, like any other game of chance or anything, poker, gin, bridge, backgammon, those are all games of probability, as is trading. Trading is a probability model, okay? You heard Larry talk about the probabilities. Everything is about probability. Are you putting yourself in the best position? Okay. Again, that doesn't guarantee a win, but it guarantees that if you understand that you're always in the best position and you understand what your win rate is, it will help you manage your money and make more money down the road. It comes down to being that simple, because all you are playing is the probability of what's going to happen next. I don't care about the news announcement. I don't care about the drug studies. I don't care about the earnings. I'm telling you that the whole model is based on probability, which is what the option model is based on to begin with. Why professional traders use rule-based trading systems? Because if you can't follow the rules, then you can't make money. Okay, you can make money on occasion, but overall, you'll get ground down because you have to have rules and a trading plan to go with everything that you're doing. If you don't do it that way, then all you're doing is waiting to lose all of your money. Okay, again, it's a simple concept. And trading is not hard if you follow the rules. I mean, the mental side can be hard when you go through a drawdown, but overall, the concept is very simple. Okay, and that's what you have to understand in the world of trading. Okay, it's strictly follow the rules, use the rules to your benefit, and quit trying to outsmart, outguess, and outthink. Now, our rules are very simple. To win in with algorithmic mechanical trading, you must have no opinions about the market, zero, none, nada. And what that means is when you see a chart, okay, you should not come in with an opinion. You should come in looking and saying, oh, the NASDAQ future, oh, what trade should I be making here? There's really not a trade to be made right now. You're basically dead solid in consolidation, going back and forth in a tight range. So what am I going to do? Should I have an opinion? No. Was Thursday's rally more important than Friday's sell-off? We'll see. It looks like the markets are getting ready to trend lower, but they haven't proved the fact that they are going to go significantly lower yet. If you violate rule number one, you will lose money trading. If you pay attention to the news, you will lose money trading. Very simple. You trade the news, you lose. If for 1 minute you think you know more than the market, price is too high or too low, the market will take your money because it will always punish traders with such hubris. We never sell at the top, nor do we buy at the bottom. That is for fools who insist on being right as opposed to making money. Okay, I'm not going to try to sell the top. How would I know where the top is? Okay, and tops are harder to sell. Okay, because if you try to sell the top, you have no idea how far it can go. Now, buying bottoms, there are some strategies, but we're not anywhere near in a position to talk about that today because we're not overly dramatically oversold. Like in 09, that was a clear opportunity to potentially buy bottoms, but we don't try to do that. We are going to look for the trend, look for the market to go in our direction, because trend mechanical trading gives you a statistical edge you cannot obtain elsewhere. Profitable traders understand that edges are essential to long-term profitability. And that's what my concern is, long-term profitability. The magic is inside you. There ain't no crystal ball, okay? We want long-term profitability because you know that anything can happen on a day-to-day basis, okay? Who would have thought if you were short Thursday morning, you came in, you were making all kinds of money. By Thursday afternoon, you were crying that you lost all your money, okay? Again, one day, and then Friday it came right back down again. We have a huge edge by trend following. That was what the whole turtles model was built on. What are our objectives? What are your objectives? To make money. Nobody's here to listen to me. You want to make money. You want to find ways to make money, okay? Keep the variance small. Be balanced. Keep your drawdown small. Those are all things that you consistently try to work on. And that's when you're managing the size of what you're trading and managing what you're doing. Those are all the important things that you're trying to do on a regular basis, okay? It shows that you're paying attention to the markets in your positions and just not placing a bet at the roulette wheel. Trading decisions should be made as unemotionally as possible. Now, again, there's going to be trades that'll come out and you're going to say, oh, I don't believe that. That shouldn't be that way. Well, again, remember this. The market is always right, okay? Never get emotional about money or the markets because you will end up on the wrong side of it, okay? That's always the case. I've yet to see it. And we had an old saying on the floor, the trading floor, when you can see a guy's tonsils, or to be politically correct, a girl or a guy's tonsils, give them whatever they want because they're wrong. Trend trading is price is everything, okay? The action is everything you want to see. You ignore the news because the news is actually pricing out in the market before the news hits the tape. It's already being priced into the market, okay? And I'll give you one quick example. Yesterday, they had the trouble in the Middle East, and they were talking about what was going on, and oh my God. Well, crude oil told you, crude oil spiked up and fell and actually closed unchanged for the day. That alone told you that the news was already in to the market. There was nothing to trade, but people were thinking, oh, I got to buy oil. Well, maybe you do, but at that point, it was incorrect. Buy a stock or a future when it breaks out of range, sell a stock when the trend changes. Don't get out before the trend changes direction, okay? Stick to the system. Very basic and very simple. I'm not a complex kind of guy. I'm a very simple guy, okay? Now, synthetic stock, I'm a big believer that you want to control the underlying security. I love options, but I love using options involved with the underlying security. What we're going to talk about today is how to create the underlying security, okay, by using options, okay, which is a risk reversal, which is a floor trade, but we're going to have to show how to adjust it to cover up for margins and things like that. But we would rather create a synthetic because there is more power to the synthetic than there is to the option on its own. Try to look at your weaknesses and convert them into your strengths. That's success, okay? Because most of you have all been long all the same mistakes. And again, the business is loaded with mistakes. I make mistakes, okay? But again, I know how to correct them and I know how to fix them. And the biggest thing you can always do if you ever make a mistake on a trade, immediately close that trade and go on to the next one, okay? You cannot let one trade worry you or keep you under duress. Why buy a stock when you can create a synthetic position? Well, that's a great question. And there is only one reason as a trader, okay, if you're going to trade versus invest. If you're investing and you need, excuse me, and you need the dividends to help supplement your income, well, then you cannot do synthetic stock in the same position because you need the dividends. So you must own the underlying. You must own the underlying. You don't get dividends on options, okay? But again, if you're using them to trade and you're buying calls and puts, creating them synthetically is far more powerful and far more profitable over time than buying the put or the call, okay? Because you are creating more leverage than you ever created before, okay? You are allowing yourself to take small amounts of money to create big positions, and you're buying the option that you would have bought on your own. You're buying it at basically half price. when you're using the synthetic version of this, which takes a little bit of doing, but it's a very simple process, okay? Now, synthetic long stock, the real true synthetic long stock is you buy a call, you sell the corresponding put. That creates a 1 delta position, which is what a stock is 1 delta, okay? But of course, if you're going to do that as a retail trader, which we all are retail traders, what is my edge there? Well, there is no edge, because I might as well buy the stock instead of creating the option trade. However, if you add a third leg to it, so if you're long the stock and you buy the call, you sell the put spread, now your margin is limited, but you're still controlling 100 shares of stock for every 1 contract. But now you've now bought the option at half price. If you're not sure what I'm talking about, I'm going to show it to you again, but I'm going to show it to you now since I'm talking about it. I don't want you to get lost. So if I wanted to create a synthetic in the SPY, and let's say I wanted to be short, okay? So simply all I would do is sell the collar synthetic, which is the risk reversal. I would add on the extra call. Okay, so I'm now short the call spread, the 510, 515. I'm long the 510 put. Okay, so now I basically have a position that equals the stock. Now think about it. I'm buying the 510 put for $1.23 here. Okay. On the board, if I went to the board to buy the 510 put, I'm paying $3.84. So tell me, which is a better trade? Paying $1.23 or paying $3.84? Okay. And on the opposite side, that's a synthetic short. And if I reverse this and change this to a long call, okay, and a short put, okay, make this to 510 and make this to 505. Okay, so now I'm creating the 510 call, okay, which on the board is trading at 540. I'm buying it for 224, which is a better trade. Okay. Now, that's synthetic longs and shorts. Profit factor, our profit factor is usually somewhere between 9 and 11. Investors celebrate a profit factor of 2. So you can imagine that we're making a lot more leverage out of the profits that we're making when we're making the profits, and they're a lot faster and a lot better. Okay. And it comes under the system of how can you most maximize what you're trying to do. Now, of course, you know, if you don't know, I'm a poker player. I like to bet on things, but I only do things that I believe that I have an edge. Okay, and it's to know when to hold them and know when to fold them, and it's really understanding the game of trading. And the game of trading is simple. It's all about probability. You don't have to be right every time. You just have to follow the rules and understand what your win rate is. Okay. Now, these are live portfolios. These are as of this morning. I sent these out to all the members this morning. These are our current positions. So if you look at, we're long Apple, long Amazon, long Coin, Gold, Google. Now look at the dates. We've been long GLD since the 9th of January. We've been long Amazon since the 5th of February. And you can see all these positions are dated. Okay. Now all these numbers here, you want to multiply these by 100 to see the true result, because what we're showing here is a record based on 1 share of stock. Because again, everybody's trading options. I can't know everybody's exact fill. So it's easy to track using the price of the stock, and we use 1 share, just not make it look too crazy. But this portfolio, to run this portfolio, we call this the 1A. It's a $25,000 money that you would want to put in, but the actual margin cost is only $8,300. Okay. Now again, we like you to have 3 times the margin, because we want to make sure that if you do go into a drawdown, you're not stressed out right away. So it's something that we look for and advise you to do so. Here is the equity curve, okay, of the 1A. And I would have told you, as I showed you in the drawdown, I would have thought that we would have had a little bit of a drawdown there, because again, the equity curve was extending too far above, and markets don't go straight up and they don't go straight down. They have some retracement, just like a stock. They retrace back to the mean. Here's our 2A, which is an $18,000 portfolio. Takes about $4 grand in margin. It's all it is a deviation of the 1A. Okay, the 1A has everything. The 2A is a little bit smaller for those that have a little smaller account, but you'll see the same dates apply. And here's the equity curve on the 2A. And of course, the 3A, which is the smallest, which is about $8 grand. okay, 2,800 in margin. Again, same trades, but again, we're using, this would be the most conservative portfolio, has the least amount of variance, but also very good, very profitable. And in fact, this week is going to make a new high. So again, these are all live as of this morning. And of course, we talk about what is your win rate? Well, our win rate's about 66%. And what does that mean and why is it important? Because if I go into a run that I'm only hitting 20 or 30%, which will happen, okay, I know that on a drawdown, I can actually, if I want to, press up my position because I'm in a favorable position because I know that my win rate is 66%. So if I go into a run where I'm not hitting that number and I'm hitting well below it, I'm due based on my history and knowing exactly what my win rate is. Okay. Amateur traders want to be right, pro traders want to make money. I asked you that again. So when you look at the actual positions that we looked at, here's a synthetic long in the SPY, for example. Now, this was done a day or so ago, but here you go. So this is setting up the same trade. Now, when I did this, the SPY was trading at 514. But this is a cost of 795, which is your margin cost and your risk. And remember, when you're creating synthetic, okay, your risk is based on the underlying security. So your risk is based on 51,000. Although your maximum risk is only $795 in this trade, you're representing $51,100. So the maximum risk on this trade is about 1.5%. Okay. Here's another. This is GLD. Okay. You're representing 21,600. Your risk on this is about 3%. Okay. And again, you're doing the same thing. You're buying the call and you're selling the put spread. On the short side, here's Apple, okay, which you're representing 16,700. You're buying the put and you're selling the call spread. So again, it's just a magic of switching over options, but here's 3.5% risk. And of course, shorting the IWM is 2.5% risk. Again, these are all determined numbers that you, if the market goes dramatically against you, your max loss on this example trade is $610. Okay. Now, every morning I send out an update with what are new trades or no new trades. So yesterday we had a reversal on Oracle to short. Okay. So you get that every morning. However, that isn't the final update. You get another update right before the markets open, because what we have decided to do and what we've done over the last 3 or 4 months is we have now sometimes taken flat positions. So every day, right before the open, I evaluate with our algorithm all these trades, and I will show you that sometimes we are flat. Like yesterday, we were flat coin, we were flat win, okay? And we turned to short on Oracle. But there are times we could be flat a lot of them, or we can be in them all. That is all dependent on the market. It has nothing to do with me. It is all dependent on what the market is doing, okay? And that's all we care about. Whatever the market is telling us to do, that's what we're gonna do. Bubba, I want to thank you for sharing what I consider to be the closest thing to the holy grail in investing. I spent countless thousands on investment subscriptions that helped me become financially literate. But when it comes to making money on investments, luck kept entering into the equation. Profits came and went. I kept running into a brick wall until I found you. As an engineer, I've always looked for a method of investing that has a mathematical and statistical certainty. Your strategy does. I cannot thank you enough and look forward to following the market with you for many years. And that's, again, I get those all the time. I just want to thank you for the opportunity to share in Bubba's equity portfolio management. After many years of struggle fighting with markets, I finally at peace. And of course, there is only one thing that makes the dream impossible to achieve, and that's the fear of failure. Okay, you can't be afraid. First of all, if you're going to get into the investing world, whether you're going to come with me or you're going to go with somebody else or whatever you're going to do, you have to make sure that the capital that you're using is capital that you can afford to lose. Okay, because you're going to have a drawdown. I can't tell you when. It could be your first week. It could be your 20th week. But if the fear is going to get to you, you're going to have trouble surviving in the markets. So make sure wherever you go that you have the capital. Okay, and that it has to be risk capital, not capital to pay the rent. Sometimes the grass is green on either side because it's fake. Okay, remember, all those, you ever hear the saying when you're younger? If it sounds too good to be true, it's probably too good to be true. Or if it smells like that, it probably is that. Well, think about that the next thing you read of one of those fancy ads. It tells you how great they are. Okay. So do you want to make money? Do you want to be right? What's your goal? Okay. Now, the beautiful thing that we have with our models is that we have full automation, okay? In other words, if you open an account at Trade Your Brokerage, which is $10 a month flat, okay, the entire operation is totally automated. You don't have to do anything. Just you pick the portfolio you want to go in, and the trades will be made for you. We use a rolling system. We do trades. We do weekly trades each and every week, okay? And we also use, if you're familiar with options, we use what we call a delta roll theory. So anytime one of our long options, if we're long the market and the call gets to 80 deltas, we'll take some profit out of the market, roll it back to a 50 delta option while still being short the put spread, okay? But we're taking money off the table. Continues to go higher, we make money on the next option once again. But it's fully automated through Tradier, $10 a month flat for your commissions. There's no charge for the software. The software comes with your membership with me, okay? So you get it all, okay? And your commissions are $10 a month. Think about that, because I know if you're not with Tradier, you're paying more than $10 a month for your commissions, okay? So if you want to be part of my team, which I'd love to have you, but again, I want you to be comfortable, and I want you to be comfortable with me because I'm a hard ass, okay? Each week you get a summary of where each portfolio stands. New trades are issued before the market opens. Detailed results, profit factor, and equity curve every Saturday. Monthly webinar to train and discuss the portfolios. The regular price is $2,000. Today, $1,000, or monthly $99. Plus today I will give you 6 hours of free options training, which I have taped. I actually taped it and did it for Tradier, okay? You get 30 days free of our futures portfolios. I have 50 spots available. And if you want to become a member of my team, okay, it's bubbatrading.com/equity. That's bubbatrading.com/equity. Okay, if you have any questions, I will answer any of your questions now. Fire away if you'd like to. If you don't want to, oh, there's everything. Oh, here we go. I knew I couldn't find them, but what the heck. Okay, so okay, so I guess there is no question. So I will just share with you that all you're trying to do when you're trading is you want to be with the overall trend. Okay, that is your objective. You want to be with the trend currently, whether you're using a longer time frame or a short time frame. When we're day trading futures, and I day trade every morning with my members, we're using 4-minute charts. Okay. When we're swing trading, we're using daily charts, okay? So it really depends on the model of what you're doing, okay? Can I please share the presentation online? I think I'm sharing it, okay? I don't know. Are there any questions? Okay, well, I know I'm a little bit early, but I know I always get you guys back on time. That's my job, to keep you on time and running a smooth ship. So I thank you all for your attention. And again, it's bubbatrading.com/equity. And you can either join monthly or annual. And again, there's a limit of 50 spots that are available. And until we meet again, Anthony, thank you so much.
Hey, thank you, sir. We appreciate it.
I appreciate it.
Yeah, definitely. That was some great information. Your portfolio management and service sounds great, and thank you for making such a generous offer to our members. Ladies and gentlemen, if you are looking for a system that executes all of your trades with mathematical precision, all while minimizing your risk and maximizing your rewards, then Mr. Todd Bubba Horwitz, who has 4 decades of trading experience, has a solution for you. It's called the Equity Portfolio Management. You can learn more by clicking on the link in the chat box or going to bubbatrading.com. Bubba is truly a great guy. He mentors individuals at all levels, including donating his time to high school students, and teaches them how to trade the markets. Come back and see us soon, Mr. Horwitz. We truly appreciate your time here at Traders Corner.
Thank you, sir. I appreciate it. Have a great day, man.
Thank you. You too. Well, ladies and gentlemen, that brings us to our last 2 presenters. Our staff at Traders Corner sifts through hundreds of pro traders and brings you only the most credible and qualified traders to participate on our show. And up next is a professional options trader who has been trading and mentoring traders for over 13 years. He has a Reddit verified performance and has consistently maintained a 90% win rate over the past several years on trades he has taken in his options live trading room. And he has one of the most successful options alert services in the industry. His calm and confident demeanor lends to a trading environment that is stress-free. Ladies and gentlemen, here to present how to leverage Heiken-Ashi candles for consistent gains is Mr. David Wyse of Right Line Trading. Welcome back to Traders Corner, David.
Thank you very much. Appreciate it. Thanks for having me on.
Thank you.
A nice little Saturday afternoon. I appreciate the introduction, and just got finished listening to Bubba, and I reiterate his comments on Tradier. By the way, that's the brokerage that I trade through. $10 a month. You can't beat it. You know, you can't trade futures or FX on it, but it is a good platform. So anyway, let me get started. Again, my name is Dave Wyse, and I'm with the Right Line Trading. I have a Compass options trading room where we trade options. The room is open every day from about 9:15 to 4. I'm there all day long. We take trades when we find them all day long. And I also have an alert service, which basically sends out the same high probability trades. So today I'm going to spend some time. I want to kind of go over how we find high probability trades, the particular software I use to do that. I'll share some of our results, and then I'm going to spend some time on Heiken-Ashi candles. Some people could call them HA, but the Heiken-Ashi candles are different structure than a regular candlestick, but they can really help you trading a lot. So I want to spend a little bit of time on that. So we'll get started. First thing I got to do, of course, is the disclaimer. All signals and trading opportunities we provide here for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right. So if, by the way, you have any questions, I'm going to try to answer all the questions as the presentation goes along. But if you have some you'd like to have Rory follow up with you, he's from Right Line. You just put your name and phone number in the chat box or in the question box, or your Skype number, and he'll follow up with that. And that's his number right there. So we'll get started here. This is just kind of a graphic of the software I use called the Compass Systems. It sits on Thinkorswim, but we call it the SPY Super System. All right, here's a graphic of the what the alert service is like. We could call it the Compass text alert service. The alerts come out on your phone. They're SMS alerts. Once I take a trade, I find a trade. I'm in the room. We're calling it out in the room. We send out an alert at the same time, and it'll come to your phone. And I usually get mine in about 20 to 30 seconds from the time I put it in there. But that's what it looks like on the phone. I'll go over the details of the alert service as we get into the presentation. First thing I want to talk about, and I always go over this first, because it's really important to understand what moves the market. All of us, at least most of us on here, I'm certainly a retail trader, and we retail traders, we're little marbles here, and we retail traders don't have any ability to create a trend, stop a trend, move the market. We're in the market by ourselves. Then what you get is a lot of chaos, you get a lot of chop, the market's chopping around, there's no trend to follow. So that's us as retail traders. The big marvel here, this is what drives the market, and these are the institutions. Institutions, what are they? What are institutions? Well, institutions are big investments banks like JP Morgan, Goldman Sachs, Morgan Stanley. They have billions and billions of dollars to put into the market, investment-wise and trading-wise, and they also have algos, computerized systems that trade. You've probably heard about those. They're very, very effective, and they can do damage to retail traders if you don't understand them. But there's more than that for the institutions. There's also pension funds. Big, huge state pension funds have billions of dollars that go into the market. Now, you also would include in there hedge funds, and there's hundreds and hundreds of hedge funds, and they have massive amounts of money that they can put into the market. And last but not least, it would be things like Vanguard, T. Rowe Price, mutual funds, huge mutual funds, massive amounts of money. So we're talking about trillions of dollars. So if you think as a retail trader that you're going to be able to take money from these folks, you're not. We as retail traders we try to follow the institutions, and we take money from other retail traders. And our job to become a professional trader and to be consistently profitable is to be able to identify what the institutions are doing and trade with them. And when they're not in the trade, don't be in the trade. So that's how we find high probability trade setups. And I'll go into the detail how we do that. This I just kind of wanted to show, since I'm going to be talking about Heiken-Ashi candles, I wanted to show an S&P chart. This is TC2000, one of the pieces of software I use. But these are regular candles on the S&P 500. Each one of these candles is a daily candle, and you can see, you know, we've had a nice trend. This is a little old because we've obviously pulled back down to the 50-day moving average here on Friday. But these are regular candles, and these are Heiken-Ashi candles. And I'm going to show you why these make it easier to trade, easier to stay in a trade, easier to identify trends. You can really see the trends on these things. Okay, so we'll get into that, but I just wanted you to see the differences. So in the room and on the alert service, I have a couple of simple rules that we trade by. First one is we say we trade the best and skip the rest. Sounds very simple. Our job is to identify the very highest probability trades that are likely to succeed. My win rate typically is 85 to 90%. And actually February was 92%. But the reason we do that is because we're very selective about the stocks we take. They have to meet all of our criteria. And then we trade them. So we'd say we trade the best, skip the rest, simple way to say it. Another thing we talk about, and I talk about this in the room every day, is our objective is not to make trades. Our objective is to make money. And this is basically to try to get folks to avoid thinking like they have to be in a trade all the time. I'm sitting at my computer, I'm a trader, I need to have a trade on. No, you don't. Not taking a trade is just as good as taking a trade. A lot of times it's better. So those are our two simple rules that we trade by in the room and on the alert service. Now, profitable traders, to be profitable, we need an edge. We need an edge over the other retail traders, since that's who we're taking money from. And again, we need better information than they do. We need to be more well informed. So our edges that we have in the Compass options room and on the alert service is we use a piece of software called the Right Line Compass system. This is a system that I'll show you what it looks like. I'm not going to go into a lot of detail on it, but it is how we identify when the institutions are in a trade and when they're not. And it's very important. The second thing we use is we trade relative strength and relative weakness. And these kind of go hand in hand. When the institutions are in there, typically, if a stock is bullish and the institutions are in there, it's going to have relative strength. Now, relative strength and relative weakness does not mean RSI. I don't use RSI. RSI, as far as I'm concerned, doesn't work. Again, the algos know what the RSI is. They can trade against you on that. But we look at relative strength and relative weakness. What that is looking at what your stock that you're interested in is doing on a 5-minute basis, 5-minute candles, versus what the S&P 500 or the SPY is doing during those same time period. And if you've got the S&P moving sideways or down, and your stock is moving up, 5-minute candle by 5-minute candle, then you have relative strength. And this is really important because it does something for you. If you're in a trade and the market reverses on you, you're not going to get hurt as bad as you would because the stock is outperforming the SPY. Therefore, if the SPY turns down, your stock is likely to either go sideways or not turn down as much as the SPY. So it allows you to get out of a trade with a much smaller loss. So these two things give us a huge edge. Another thing is we want to trade with the market trend. You obviously want to be trading with the trend. Now, the market doesn't always trend. The market can be choppy. It can be very choppy all day long. So if it's doing that, then you can go long or short based on the stock you're looking at, and then you would just be trading with the stock, its particular trend. And the fourth thing is we buy near support and sell near resistance. In other words, we wait for a stock to come to a support level or up to a resistance level, and then reverse back into the original trend to get into the trade. So we're getting in at the best price that we can. Right? So that's how we get an edge. And the Compass system, just to kind of go over it briefly, it's going to identify the highest probability trade setups by sidestepping setups that look good but will fail more often than they succeed. And it does this by identifying when the institutions are driving the move and when they're not. And this is really important because you want to be in the trade when an institution's in there. Basically, we're just following the breadcrumbs that the institutions are putting out and making money off of it. That's what we do. And the Compass software system, it analyzes complex trading data. There's a lot of data that goes into finding if institutions are in there, and I'll go over those briefly. But it displays it in a really easily identifiable identifiable visual format, basically just colors, so that even a person who's a fairly new trader, without doing a lot of technical analysis, can see whether the institutions are in the trade or not in the trade. Okay, so again, here's how we get an edge over retail traders. We only take trades that are being driven by institutions. We trade stocks with relative strength or relative weakness, and we trade in the direction of the overall market. Sounds really simple, but a lot of times it takes a long time to find a few of those stocks. And again, our trades will be supported by institutional buying or selling. They'll be outperforming the SPY because we're using relative strength, relative weakness, and they're going to be moving in the direction of the overall market if the market has a direction that day. Okay, and this is a kind of what I call a basic high probability trade setup funnel. This is the criteria that I go through when I'm looking at a stock, when I'm looking to see if the stock is a stock that I want to trade. The first thing I do is I look at my daily chart and my 5-minute chart. The stock, if I'm bullish on a stock, the stock has got to have a bullish daily chart. I'm not going to take a good 5-minute chart that's a bullish 5-minute chart if the daily chart is not bullish. This is key. I need to be able to take the daily chart to be bullish if I'm long and bearish if I'm short. And the reason for this is if you get into a trade like 11, 12 o'clock in the daytime and you're trading long, but the stock has a bearish daily chart, you can't stay in the trade all day. If it goes against you, you got to go out. You certainly can't take it overnight or out for a week. So anything that we take is structured so that it can actually be held overnight or for a longer period of time because of these two particular things. Now we also trade with the trend, both the stock and the market. So obviously, if we've got a trending up market, we're going to be going long. We got a trending down market, we're going to be going short. That's pretty obvious. Next thing is, if we find a stock and it meets this compass indicators have to align. We need to know that the institutions are in there trading it right now. If this fails, I'm not in the trade. I'm not going to take the trade if the institutions aren't in there. There isn't any, the risk of a loss is way too high. And then of course we go to relative strength and relative weakness, enter near support or resistance. So this is kind of the funnel. If you drop a stock in the top here and then just check this criteria, this criteria, this criteria, the ones that come out the bottom here are ones that are potential trades. And there's more to it than that, of course, but those are the potential ones. If they fail some of these, then you're not going to take them. All right, and again, this is the funnel method. I just focused, again, this is everything we just talked about here. Stock to be traded should have a daily and 5-minute chart that's aligned. The compass indicators must align in the direction of the trade. And relative strength, relative weakness. When you're trading on a 5-minute chart, by the way, if you're going to go long, the stock price needs to be above the volume weighted average price, the VWAP. It's important. Institutions use all the time. So if you're going long, the price needs to be above the VWAP. If you're going short, it needs to be below the VWAP. And I'll show you a couple of those. And then again, enter the trade near support, et cetera. And you want to check the daily chart and make sure there isn't any nearby support or resistance that's going to block you from making profits. If you're going long a trade and it's 20 cents to the 200-day moving average, you don't want to be in there. Your upside gain is way too small compared to any loss that you might take. And the last thing, and I say this every single day in the room, have patience. It's really important to be patient. Waiting is part of trading and waiting for the best ones. And it's one of the hardest things that most traders try to do. They just cannot. They'll just take, oh, I'll just take this. This looks pretty good. I'll take this. Especially when you have a choppy market, they get impatient. Or they see a stock taking off. They got to jump in. I got to have some action here. This isn't a gambling casino. Trading is a business. It's a business that needs to be disciplined. And this is part of discipline, having patience. Okay, so let me go over the strategies that we use in the room and on the alert service. We do straight calls and puts, a lot of straight calls and puts. We do debit spreads a little differently from what most people do. I use weekly option expiration. So my debit spreads are going to expire on the Friday of that week. By experience and my trading journals show me that you get a higher ROI doing this than going out multiple weeks on debit spreads. I also do what's called time spreads over earnings, and this is going to become really critical coming up here because we're going into earnings season. Banks just started reporting on Friday. We're going into earnings season, so we do a lot of these time spreads, what's called a calendar spread. This is a non-directional trade. This is a trade. What we do is we capture what's called the volatility crush. When earnings are coming up, the market makers jack up the premiums on all the options because they don't know how big a move the stock's going to make, and they don't know what direction it's going to go in. So they jack up the premium on there. That's called volatility. Once the earnings are out, now they know what was reported. They know which way the direct stock's going to go, and they know about how big a move it's going to make. So the premium comes out of that. What we do is we actually sell calls for this week and buy calls for next week on the same price, the same strike price. And by doing that, we capture this volatility crush. This works very, very well. We have good win rate with this. You can only really do it during earning seasons. I have another thing called the weekly ATM strategy. I won't go into a lot of detail, but it's basically meant to capture premium week after week after week. And then we do straight credit spreads. If you're familiar with credit spreads, we're just capturing premium over a few weeks. We have credit spreads on a couple of different stocks right now, Marvel and Microsoft, that were performing well. And these are fairly easy to manage trades. You don't have to watch them every day or every minute, and they bring in premium into your portfolio. When you do a credit spread, the premium comes right into your account. When you put the credit spread on, the money will come to you. And then I have another one called the SPY Super System. This is just done in the room. We don't send these out as alerts. These are quick trades on the SPY or the Q based on specific criteria setups. All right. Now, the alert service, it's designed for day trades and short-term swing trades. This is not for investment portfolios. This is designed for day trades and short-term swing trades. When I say short-term swing trades, I'm talking about overnight to as much as 2 to 3 weeks. It just depends. Most of the trades are going to be over within about 3 days. A lot of the trades are over the first day or the next day. It's obviously designed for traders who can't or don't want to watch the market all day. You're going to get real-time alerts on the highest probability trade setups we can find. How many you get? It depends on whether they're there. Some days there won't be any. Some days there might be 2 or 3, but typically no more than that. And we typically don't have more than about 5 to 6 trades open at any one time. And we take the highest probability trades by obviously identifying institutional involvement, and we look at market internals, which tells us whether the market is moving to the upside or the downside. And then we do some deep technical analysis on the particular stock charts to find the very best. All right, and this is just a P&L of what we've done. This was actually back in the fall. This is pretty much what we do every quarter. Now I'm going to go over some trades. This is the results of what we've done. Now I'm going to go over these trades. Now the point of this is not necessarily to show you how successful we are. It's to show you what you can expect for gains on the trades that we take. And the reason I do this is because so many emails that you get and so many webinars that you watch, people are telling you how you can make 4, 5, 6, 700% on a trade. And every now and then you can, but you can't do that consistently. This is what adds up to consistent profits. 23%, 43%, 32%. We have some losers. Obviously people have losers. Everybody has losers. If anybody tells you they don't have losers, they're lying to you. We did take 108% on STX. So you can see the percentages here. And this is September. We had 25 wins and 2 losses, nice 92% win rate. And what I use for baseline is I just say if you invested 2,000 in each trade, it would have created a 77.88 profit. This is arbitrary, just so that I have something to base it on. And September was a very, very difficult trading month, so this was actually a pretty good month for us. October trades, again, we're very consistent as far as our percentage gains here. You can see that they vary from very small to 40%, 60%, very, very nice percentages. This is what you can typically expect. And this can be intraday, or it could be overnight, or it could be a week. Again, it's 24 wins, 4 losses, 86% win rate, 44.80 in October on 2,000 invested. November, 21 wins, 4 losses, 84% win rate. Notice the win rate was slightly less than it was in October, but the profits went from 44.80 to 51.60. So we actually made more money on a lower win rate, and a lot of that has to do with what the market is doing at the time. if the market is, if you're in a trending market, it's easier to stay in trades longer. If you're in a real choppy market, you really have to cut your gains more quickly. So that has an impact on the profitability that you're going to have. But again, you can see the percentages don't vary much here. 30, 31, 13, 25, 20, 27, 30. Very, very consistent. December, very slow month for us. A lot of holidays. The market was kind of chopping around a lot. There was some decent trending, but most of the gains were in gap ups. We had a gap up in the morning, and then the market would go sideways. Gap up the next morning, market would go sideways. So it's very difficult to do a lot of intraday trading because it wasn't going anywhere. But again, 14 wins, 2 losses, only 16 trades, but an 87.5% win rate, about $3 grand, not bad. And you can see we had a couple of losses in there. We had an EXPE, we had a news event that knocked that down. Not much you can do about that. January was a nice 20 and 2, 75.05. Again, see the percentages here. Very nice percentages. Gilead, again, that was another news event. Bad FDA thing on them and knocked them down. But again, Mara, 65% here. This was a pretty nice win. Boeing, 96%. That was a nice win as well. All right, February, and I'm not going to go through too much of this, but this is February. This was a very good month for us, 92, 24 and 2, 11,745. We had some nice running trades that really did really well in February. And I started to break out the alert service in February, so we had 20 wins, 2 losses. So we had 4 fewer trades on the alert service because I can't alert on everything. If it's going to be like a really quick trade, an hour or so, I typically won't alert. Or if we're taking it at 10 minutes of 4 in the afternoon, I don't alert on it because it's not fair to the alert service to get something that late. They're not going to be able to get it. So this, again, we had 11,745 in February here and 69.30 on the alert service. Pretty nice. These are just some specifics. I just listed some trades that we actually alerted on. So it's kind of important to understand that some of these are overnight. This was a crowd in at 690 out at $8. Oh, that was an overnight trade. 16% is 108% in STX in 2 days. This was Amazon, 32% in 2 hours. So you get the idea. These are the percentages obviously are going to be the same as they are the ones I just showed, but these are specifically trades that we actually sent out on the alert service. This was a nice one on workday here. In for 1170, out for 1470. That was just overnight. And Meta was a nice one as well. So you can see where we are on this, how these are producing, and they continue to do that. Just a kind of a recap, the first quarter of 2024. And this is, by the way, the beginning of the 3rd year that I've been doing this. I was 2022, 2023, both really nice winning years. It's pretty much the same from year to year. It stays pretty consistent. But in the trading room, in the first quarter, 65 wins, 11 losses, 86% win rate, a little over 18,000 if you put 2,000 in a trade. Alert service, 41 wins, 6 losses, 87% win rate, a little over 12,000. Pretty nice first quarter. And in 2023, this was the overall 2023 results. Investing 2,000 in each trade in the options room produced a little over 60,000 in profits. So if you started with an account balance of 50,000, this is arbitrary. Everybody says different account sizes, but if you had 50,000, you'd be using 4% of your account balance on each trade. But of course, as the year progressed, that percentage would go down because your profits were growing the account. And we produced 120% return on the initial 50,000. So 110,000 at the end of the year. And that means at the end of the year, if you were putting 2,000 into each trade still, you'd only be using 2% of your account. And a lot of people this is kind of important as far as management of your money. All right, so on the alert service, I just want to cover this, kind of explain what you're going to get. If you're in the alert service, you're going to get, obviously you're going to get the stock symbol. You're going to get the strike price that we go in at. It's going to have the expiration date when it is, and then it's going to have the price to pay for the option, which could be a little bit of a range. You could say like $1 to $1.05 or $1 to $1.10. But generally speaking, that's going to tell you exactly what the option price. Now this will be there'll be an alert for the entry. Now sometimes when the alert comes out, it'll also tell you what to put in as your profit target, what to sell it at. But generally speaking, you're only going to get it with just the buy, and then you're going to get an alert later on, either later on that day or a couple days later, to tell you where you want to set your price target for taking profits. And when you always put those in, you want to make sure they're in there as a sell order, as good till canceled. So if you're not available, you're not on the machine when the market opens the next day, if it hits, it'll get filled. That's important to make sure your sell orders are at good to canceled. So let me just go over how we achieve these kind of results. Obviously, we're able to identify when the institutions are driving a trade and when the market internals are heavily bullish or bearish. That's the key right here, trading with the institutions. So we only take trades when both of these are in our favor. That's not 100% true. I'll still take trades when the institutions are in there, as long as the market internals are neutral to bullish for a long and bearish for a short. But if the market internals are neutral, but the institutions are in a particular stock, then I'll still take that trade. And again, this just kind of talks about institutional money flow, how we use institutional money flow to find the highest probability trade setups. So it's really important how we take these things into consideration, and it eliminates most stocks every single day. So just to briefly tell you how the compass system identifies when the institutions are creating a trend, and I'll show you this on some charts as we go. But we do what's called a triple screen assessment. Some people might call this fractal. I call it multi-time frame. That's what it is. We're looking at multiple time frames, and we look at 3 different measurements here. We look at momentum, we look at trend, and we look at money flow. So if you've got a stock that's got momentum, upward bullish momentum across multiple time frames, it's got the trend is bullish across multiple time frames, the money flow is bullish, then the likelihood that that stock is being driven by institutions is huge, in the upper 90%. And if you add relative strength or relative weakness to that, it even pushes it higher. All right, so I'm going to get into the Heiken-Ashi candles, the part of the presentation where I go over Heiken-Ashi, because I know a lot of people ask me about this. I use them a lot. And what I'm looking for here is this is the compass system right here, and these are the indicators that I use in the compass system. Just so you know, this is a long-term trend. This is multi-time frame momentum. This is current time frame momentum, and this is a derivative of money flow. And this little green line on here is a 15 EMA of an EMA. It's a nice little support resistance level, and this candles, you'll see these things on the compass system. This produces a pop out of the box signal. This tells you when compression is being broken to the upside. This is a 5-minute chart on Tesla. You can see I put a little arrow right there. We obviously can see the institutions are buying it. It's all green across the board here. And this is where we bought this, where it came off the 15 and I got a pop out of the box symbol right here. So we entered right here. These are Heiken-Ashi candles. You see the wick and the tail here, See how this has a flat bottom? Bullish candles on Heiken-Ashi always have flat bottoms. Bearish candles have flat tops. And wicks on Heiken-Ashi candles don't mean the same thing as wicks on regular candles. Wicks on regular candles tend to mean that the stock is getting weaker. Wicks on Heiken-Ashi candles means it's getting stronger. So you can see how easy it is to spot the trend in this thing. So this is just so you can see the Heiken-Ashi candles. So we're going to go into some of those. All right, so let's talk about Heiken-Ashi candles and what's the advantages of Heiken-Ashi candles? Well, it's going to identify a confirmation of a trend reversal much more positively. I don't know if you've ever entered a trade and we're looking for a breakout. It goes through a resistance level and breaks out, and you jump in the trade, and then it reverses and you get the old popular failed breakout. This is going to reduces the likelihood of a failed breakout, because you're going to be able to see the trend, and you're also, when you get a Heiken-Ashi candle that's bullish and coming off of a support level, it's obvious right at that point is telling you that the reversal into the trend has been confirmed, because it takes 2 candles to make a Heiken-Ashi candle. It's going to smooth out the price movement to eliminate a lot of noise. If you're getting shaken out of a lot of trades, watching 1 minute or 5-minute candles and they're jumping all around, this is going to smooth out the price action. It'll take some of the stress off you and getting shaken out of trades. And again, it's going to allow you to stay in the trades, the trend trades longer before you get shaken out, because you're just looking at the Heiken-Ashi candles and not getting freaked out by 1 or 2 off candles. It's going to identify when the trend is starting to wane. In other words, when should I start looking to take profits? It'll tell you that. And again, it makes it much easier to visualize the current trend. So this is what Heiken-Ashi candles will do for you. I just make a note here, if you have not used these before in your technical analysis, you might want to try trading them, using them to them, because I think you'll improve your trading. Heiken-Ashi candles, it means average bar in Japanese because this takes 2 bars. And again, smooths out the price action. We went over this stuff. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. And bullish trends will have flat bottom Heiken-Ashi candles one after another. Bearish trends will have flat topped Heiken-Ashi candles one after another. Okay. Now I'll go into this, and I'm not going to go over every. This is kind of some detail as far as how you find reversals and which ones are good and which ones are bad. All it's saying is if you've got a bunch of big red candles coming down and you get a couple of tiny green Heiken-Ashi candles, but they're really small after you've had big move down, then you want to wait until you get a big Heiken-Ashi candle to the upside. All right, and also you should note that on the chart, if you've got Heiken-Ashi candles, the price that's reflected on the candlestick won't be the same price that the stock is actually trading at. So you look at your platform to see that, but it won't be off by much, a couple of pennies, but it will look different. Okay. So this is a graphic on Heiken-Ashi candles, and I'll show some real ones here in just a little bit. But this is a graphic. Now on this one here, we see a flat top. This is a bearish Heiken-Ashi candle. Then we get wicks and tails here. All right, so this is kind of undecided. Then we go to another flat top. Now this is not a Heiken-Ashi reversal. This is a Heiken-Ashi continuation. You're in a bearish trend. This confirms that the bearish trend is still intact. So if you hadn't got short here, and then you see this is where you get short, and you follow it down until you get a reversal, and you see it keeps coming down with tiny little ticks at flat tops. This is bearish. Now we start getting wicks and tails and green candles with wicks and tails. Wicks and tails. Here on this candle right here, that's a Heiken-Ashi reversal. If you were looking to get into the trade, this is where you would get in on this particular candle right here. It's got a flat bottom. Notice you get another flat bottom, another flat bottom, another flat bottom, another flat bottom. This is a bullish trend on this particular trade. And one thing to note is on Heiken-Ashi candles, the beginning when a price opens in the next 5-minute candle, it's going to open in the middle of the previous candle. They always open at the halfway point because of the fact of the way they're structured. So you see that how it's halfway, halfway, halfway. So that's what it looks like. All right. Let me just quick see if I have any questions. Okay, nothing yet. So, all right, so let's move ahead here. Let me show you some charts. This is a Tesla chart we just looked at before. It's a 5-minute chart, but you can use this on dailies as well. And this was the Tesla setup here. Obviously, compass system screaming that the institutions are buying here. We get in and we take it and we write it up, and this is where we get out, right here where it starts to fail. And you can see you could have stayed in and everything was still green, but we had such a nice profit here that we exited. This was Gilead. This is a daily chart, right? You can see the institutions are buying. The Heiken-Ashi reversal candle is right here. So we have a wick and a tail and a Heiken-Ashi reversal right here. This is where we took this trade on Gilead. It popped up nicely on that, and you could take it just for intraday. But on a daily chart, having a bullish Heiken-Ashi reversal is a fairly nice indication that you can use that to take perhaps even a swing trade on it. GE, same thing right here. We have institutional buying here. We have a little bit of a yellow on the multi-trend. That's because it had become so bearish. But this was a Heiken-Ashi reversal candle. See the wick and the tail? And here's a Heiken-Ashi reversal right here. And this is where we took GE. And we stayed in it overnight. I think we actually stayed in it a couple of days and made money on this. But this was a nice setup as well. This was a one on IBM. This just kind of shows you a different view. I use my TC2000 chart here. This is what's called an algo resistance line that the algos use that I can draw on the charts. Once it breaks above that, you see how it broke above there? And it broke above there with a Heiken-Ashi reversal candle. Wick and a tail, flat bottom, breaking resistance. Beautiful spot for an entry right there. Really, really beautiful spot for an entry. Teva, same thing here. This was a bullish Heiken-Ashi reversal right there. You see the red candles right here, the wicks and tails, flat bottom, and a big one, a big green, this is actually a green candle. I color coded my candles on TC2000 to show me that the Bollinger Bands are expanding. This just tells me that it's actually coming out of compression at the same time, and which is even a bigger advantage. So this was a reversal in Teva. All right. So I'm gonna look at some charts live on TC2000 right now. So as opposed to the graphic ones, and then we'll go back to the rest of the presentation. This is Apple, and this is current, the current Apple from Friday. See how it reversed right here on Thursday with a Heiken-Ashi reversal right there. We'll go with the Heiken-Ashi, sorry. There's the Heiken-Ashi reversal right there. See the flat top on Friday, it reversed with a Heiken-Ashi reversal. Notice the bearish Heiken-Ashi reversal right here. This is fairly important. And again, this is a daily candle. This white line I have on here is an 8 exponential moving average. I use that to determine if the stock is in a trend, and whether if it's coming down, I want it to stay below the 8. If it's going up, I want it to stay above the 8. Okay, so that's Apple. Let me pop in a couple more here. XOM, we just traded ExxonMobil. We just traded ExxonMobil the other day. This is the ExxonMobil Heiken-Ashi chart, and here's the ExxonMobil regular chart right here. Nice pattern. And what we get in here, I think we get in right around here, but we didn't take it on a Heiken-Ashi reversal. We were in after that. But this, you see how this Heiken-Ashi reversal worked right off of there, and how nicely that went. Same thing right here, Heiken-Ashi reversal right off the 8. I mean, this is beautiful when it's reversing off the 8 and you get a flat bottom like that. So that was XOM, EVER. This is stock from Friday. All right, so this was EVER right here. See the Heiken-Ashi reversal. This stock is probably not a great trade because of you see how much choppiness it's got in it. It reversed Heiken-Ashi here. It just stayed green for a few days, but it's a very, very choppy stock. But that is a Heiken-Ashi reversal on it right there. There was a lot of bearish ones on Friday, the end of the week. This is Bubba. Heiken-Ashi reversal right here. See, we had Heiken-Ashi reversal to the green, to the bullish side. Friday, a big Heiken-Ashi reversal to the downside. Very choppy. The stock has been very, very choppy. VFC, this has been a beautiful short. Again, this red line is a 50 simple moving average. Here's a Heiken-Ashi reversal right here. It continued down, flattened out. So you'd be getting out of it when the Heiken-Ashi is flattened. Popped up a little bit, but never get above the 50, and then Heiken-Ashi reversal right here, right to the downside, and a big Heiken-Ashi reversal on Friday. That's on VFC. This is ON, and I'm just trying to show you a bunch of Heiken-Ashi candles so you can actually see what they look like and how nice they are to identify the trend changes. So here's a Heiken-Ashi reversal. Here's a Heiken-Ashi reversal, kind of flattens out, but we got a Heiken-Ashi reversal again on Friday. Fairly significant. And let's end Adobe. I'll show up Adobe. We had some shorts. This Adobe, this was a massive short right here. We'll go back here and look. This was a big, huge gap down in Adobe. Then it kind of moved up. But if you look at Heiken-Ashi, you can see how this reversal here on Friday is fairly significant. It's coming off the 8. That's a very, very nice place to go. And if we look at the SPY, by the way, look at the SPY and the Qs. You see the SPY has become really, really choppy. It was from November. It was we were in a nice, smooth trend. Everything was moving up beautifully. Had a couple of pullbacks here and there, but nothing too big. And now we've reversed it with a Heiken-Ashi reversal on Wednesday. A Doji, another Heiken-Ashi reversal right down to the 50-day moving average. So this is a kind of a critical spot for the SPY. And if I look at it on a regular chart right here, here's the SPY, and you see how it's moving up. One of the things you notice that it bounces off this orange line. That's the 15 EMA. That's the 8, the white. The 15 is the orange. See how it bounces off of it. It had become a great entry spot for getting into a trade when the SPY bounced off of that. Now here, we've fallen below it and down to the 50-day moving average, which we have not been down to since November. All right, so that's the yeah, one other one I'll look at, Fortinet. This was a FTNT. Okay, so this is Fortinet. And let's go to Heiken-Ashi. There's a Heiken-Ashi reversal in Fortinet. So that kind of gives you a flavor of Heiken-Ashi candles, what they look like. Jim, is it a custom indicator? That Heiken-Ashi is not a custom indicator. All you have to do on TC2000 or any of the charts is just change, and I'll show you here in a minute how that's done. On TC2000, all you have to do is change to Heiken-Ashi candles. When you click on the setup of the chart, you just change the Heiken-Ashi. You can flip it back and forth. So Thinkorswim does that. Paul, this is a good question. Do I wait for the reversal candle to complete before entering the trade? I usually do, but I will note one thing, and that is once a Heiken-Ashi candle has formed, if you got a flat bottom, for example, the chances of it ending up without a flat bottom is very slim, and especially once you go through on a 5-minute candle, once you go through about 2 minutes of the trade, it's very unlikely that it's gonna put in a tail on it. So most of the time, you can actually take it as the candle forms. But you know, waiting for the candle to form, you would consider that to have a little bit more confirmation. All right, so we looked at some live charts. I'm going to show you some charts now of the regular, how I use the compass system and what those are going to look like. This was a trade that we took on workday. This is a daily chart. I think I showed you the workday on the alert service. This is the compass system. Now the compass system, again, multi-time frame multi-time frame trend. This is these two here are really key. Multi-time frame momentum, current time frame momentum. All right. So when we actually took this trade, we actually took it back here on this blue when it was all blue and green, and then it went to yellow. So this gives us a warning we need to watch it. But the current time frame momentum stayed blue, so we stayed in the trade. Now this was important because you can see that if these are regular candles here. You see this shaded area. This is a dynamic compression zone that the compass system produces, and that tells you about compression. So when it breaks out of a compression zone like that, that's a good sign. It's a good place to enter a trade. And that was a 5-day trade for 30%, pretty good. MDT, recently we took this one. Again, this went from yellow to blue. Everything else was green. We took it, and notice it's right on the 15 EMA. Remember, we talked about buying at support. 15 EMA is support. We bought it right there, and we rode this thing up 25% on this swing trade. Nice move to the upside. This is when medical equipment manufacturers really doing well. VKTX, same thing, all green. Institutions are in the trade. Notice the institutions are in the trade. On all these trades, the institutions are in the trade. Big pop here. We took it here, we rode it, and that was a 30% gain in 3 days. Doesn't look like a lot, but it was. We get in on this candle and then got out right there. McDonald's. This was overnight, in for 8:30, out for 11:30. I think I showed this on the results that we had. This was a pop out of the box right here. It's telling us that the stock's breaking out of compression. It was also breaking out of a dynamic compression zone. The institutions are buying the stock like crazy. We enter here. We get out here overnight from 8:30 to 11:30. $830 to $1,130 just overnight. $3 a contract. Right, and Moderna, I've got a lot of these. I'm not going to go over. I got to watch my time here. So this is Moderna. You can see this was a daily chart of Moderna. See how it's breaking down, and is a breakdown. We bought it right here, and we just I don't know how long we stayed in the trade. I can't remember, but we made 33%. And Amazon, same thing, 32% gain. Again, the multi-time frame trend. A lot of times the trend will go yellow because it gets real choppy. But you see the 15 EMA, which is this green line, that's the current trend. And that was green, and everything else was green. That's perfectly fine to take. JD, 61% profit here on this big drop down. We just traded this intraday as it broke through the dynamic compression zone. Everything went yellow and red. Again, red and yellow is bearish, green and blue is bullish. 61% profit, and down it goes. And I showed this on the results too, I think. And Dollar Tree. So again, I'm not going to kill the whole afternoon going through trades, but this was Datadog. Notice breaking out of dynamic compression. Institutions are selling. We get in here, we get out here, 21% profit. Crowd, 20% profit, same thing. Amazon, 32% profit in 45 minutes. Again, right off of this 15 EMA as the stock compresses. It's coming out of compression, and then we get in right there. ENPH 20% an hour, and pretty nice. It's pretty nice. Again, you can see the compression right here. Stock going sideways. Institutions are selling. Just because they're selling doesn't mean the stock's going to move right away, but you know that the bias is to the downside. And as soon as we get this pop out of the box symbol, we take it, and we took 20% an hour. This was a beautiful trade here. I always like to point this one out. Verizon doesn't move an awful lot, and the options are really cheap. We took an in-the-money option, an in-the-money put for Verizon 2 weeks out, and we paid 45 cents for it because they don't move very much. So, in fact, it might have been the current weeks. Paid 45 cents for it. We were in the trade 1 hour. So if you bought 10 contracts, it was $450. We get out at $670 an hour later, right there in that move like that. And that's why options are so nice when they work and get nice leverage. And this is a SPY super system. I talked about we do the SPY super system. This is a specific setup we have when you have the institutions buying. In this case, we took them when they're actually selling. Right here, you can see how everything is red and yellow. We look for a break off the 15 EMA right here with a pop out of the box signal. The market internals were also bearish. We took it right here, and we took it down, and we get out right here at the bottom. But that's what the SPY super system looks like, and it doesn't happen an awful lot. You have to watch for them. And Netflix, that was a nice 20%. We also took Tesla here. This was a 30% profit here on a big move down. And this was Tesla we took overnight. We looked at the daily chart, or the 5-minute chart. We got the pop out of the box signal right here. Everything was red. Institutions were selling, so we took some puts overnight. And we get, sometimes you get lucky. The stock dropped from 120 to 112 overnight. Popped up those Tesla puts by about $7, a little bit more than $7 a contract. Really, really huge. And again, that's the reversal we saw here. In QSR, I just want to point out QSR. This is the daily chart. We liked it long. Here's QSR. Here's the 5-minute chart. So we knew we wanted to go long because the daily chart was bullish. We waited for compression on the 5-minute chart, and we took the trade entry right here as it got a pop out of the box signal as it come off the 15 EMA, and we wrote it right up here and took profits in QSR. That's how we use the daily chart and the 5-minute chart together. All right, so that kind of covers everything. The strategies that we use in the room, the calls and puts, debit spreads with weekly options, time spreads over earnings, weekly ATM, and credit spreads. I've got strategies that we use. It's important to have strategies that you can use in bullish markets, bearish markets, and neutral or choppy markets. And we have strategies for to be able to do all of those things. Both, time spreads are non-directional trade. We don't care which way the market is going. So again, there's a video, there's a graphic on the alert service, what it's going to look like on your phone. So these are the offers that we have here today. Really good prices, but this is the options alert service. If you get the alert service, this is for full year $9.98, and you saw what we were getting for wins. So that's pretty cheap. You'll also get a month in my trading room when you join the alert service. We have a Discord chat, and you're going to get this. Obviously, you're going to get the alerts. But we have a Discord chat with a couple of other professional traders in there. And then I have about 25 videos on trading options. I talk about the compass system, the indicators, how to use them, how to find the highest probability trade setups. That funnel system we looked at earlier, I've got a video on that. I have a video on Heiken-Ashi candles and how to trade using those, and another one called Top Gun, which goes into the way to find the highest probability trade setups. Once you found the institutions in there, to go through technical analysis to find that. So this is the alert service, 50% off. Use coupon for 200, or save 50% for the alert service. If you want to join the trading room, obviously the trading room, you get the room for a year for $11.98. You'll also get the alerts as well. If you're in the room, you get the alerts as well. You're going to get the Discord chat, obviously, that we just talked about, with the alert service, and you get the same all the videos of the training videos that I do. Again, so $11.98 for a full year. If you want to try it for a month, it's $148. I don't know the month is really a good trial, to tell you the truth. That's a kind of a short period of time, but it's available. And then the compass system itself, if you're interested in the actual software, and this runs on Thinkorswim or Ninja, you can buy that, and it'll look on, if you have TOS, it's going to look exactly the same as my chart did on Thinkorswim, exactly the same. And you can again, you can get it for $12.49 for a year, $5.98 for a quarter. And if you buy that, you'll get a month in the trading room. You'll also get the alerts and in the videos as well. And we have a lot of scanners on that Thinkorswim. I'm not going to go into all of them, but we have a lot. So those are the offers that we've got today. Let me just check again for any more questions. It helps, good deal. How many trades do I have it open at the same time on average? I would say 3 to 5 generally, Paul. Sometimes we'll go as high as 6, but generally not more than 6. Just depends on how many trades there are. All right. So I think that kind of runs my time right up there. So again, I very much appreciate everybody being here today to listen to the presentation. I hope the information on the Heiken-Ashi candles piques your interest, and perhaps you'll look into that a little bit more. We talk about it in the room all the time. Again, my room is open all day from market open to market close. I'm always showing charts up there. I'm answering questions. If people have a particular stock they're interested in, I bring it up, I show it to them on Compass, and I show it to them on TC2000 and go over the technical analysis on it. So a lot of education. So again, appreciate very much everybody being here today, and have a great rest of your day.
Wow, David, that was some great information. Those Heiken-Ashi candles, along with your system, are incredibly powerful tools. I could definitely see how that provides a clear edge in your trading, and thank you for making such a generous offer to our audience today. Ladies and gentlemen, if you're looking for an edge over all other retail traders in finding stock tickers being influenced by institutional money, or if you just want the hottest options trade sent directly to your mobile phone by the industry's hottest alert systems, then Mr. David Wyse has a solution for you. We have put his special offer links in the chat box. David, thanks again, and have a great weekend. We appreciate you. Okay, that brings us to our last presentation of the day. Our anchor presenter was born and raised in New York, where he fell in love with trading while visiting his then girlfriend, now wife Lisa, at her job on the NYMEX floor in the fall of 1982. In 2008, he moved from New York to Las Vegas and established Omni Trading Academy, where he teaches select students the Omni, triangulation, and trading. He is filled with a vast amount of trading knowledge, analysis, trend formation by simply following trend lines and identifying formations. The chart will tell you all you need to know. As he has said many times before, the chart is just a graphical representation of the day's news. Ladies and gentlemen, here to present, according to the charts, not the word on the street, is Mr. Oscar Carboni of Omni Trading Academy. Oscar, take it away.
Thank you so much for having me. Thank you for all the presenters before me. And for you traders that spent all your Saturday listening to us, I thank you for your time. And I hope what I'm about to show you will help you make money next week, because that's the idea behind holding these educational workshops, is to teach you traders something that you can use moving forward. I promise not to bore you. I promise not to try to sell you anything. I will just show you some great stuff. And if you like what you see, I will show you where you can find me and hang out with me during the day and spend your life with me. Again, thank you all for having me. Is the audio video working out there? Do you have audio and video out there? Can you see me? Can you hear me?
Yes. Yeah, you look good.
Okay, so let me start with this. Good morning, good afternoon, and good evening, traders from across the globe. One of the things that I think we need to know is what will happen before it happens, right? Very, very important to know that. Wonderful if you can come up with a system that tells you what did happen. We all know about that stuff. We need to know what will happen before it happens to make proper trading decisions. So I have literally been pointing out to traders since the 1980s that news always comes out in the charts first, no matter what's going on in the world. If you can read the chart well, the news will come out first, then, well, excuse me, you'll see it in the chart first, then the news will come out after the formation is formed. In fact, what I'm going to call today's session is news always comes out in the charts first. Follow me on this. I have a feeling that you will see that that's absolutely true. Now, Many of my community who follows me all over the internet, my live trading room, you name it, they've asked me to cover a lot of markets in today's webinar, so I promise to cover them for you as well. And let's see what we're looking at. We are looking at an E-mini S&P daily bar chart. It's the whole entire chart. I'm just blowing it up a little bit so I could show you what's happened recently. So the E-mini S&P rallying inside of this channel, right? Simple channel, simple geometry, riding up and down the channel, runs up and puts in the all-time forever high on on April 1st. The all-time ever high is put in at 53.5 E-mini S&P. That night, my Omni tells me that something is amiss and we're going to start to head down. And I literally put out a video the very next day, April 2nd. I filmed the video and told traders, in fact, let me just show you. It should be quick and easy. I told traders this. Let me see if you can hear any of this. The algorithms, let's talk about mortgage. The landscape, number one on the board,
My new
about
book,
that?
Keyboard Roots, How Anyone Can Earn
Sorry,
Six Figures
kids.
from Home with
That
a
I can't
simple
control.
book.
The landscape is quickly shifting to more bearish conditions in our E-mini S&P, NASDAQ, Russell, Dow, Transportation Average, the whole gamut. I filmed this video on 4/2, put it out on the night of 4/2 for trading 4/3. Once again, if you look at where we were, the highest high ever put in was put in on April 1st. On April 2nd, we identified that something was wrong. This is what's happened since that video came out. We not only were we going in this green channel working our way up, but look what's happened since. Now we've created channels working their way down. And it looks like we will continue down for a while. Now get this. The other thing that was happening is we were riding along this average beautifully, riding along the average, riding along the average, riding along the average. Well, you broke the average. Now we know Wall Street loves the 50-bar moving average, right? I've shown you this in many videos. Wall Street loves this average. Well, we're below that one too. Not good, but isn't it amazing how we were able to identify it the day it took place and put out the video? And I will admit, us Omniacs made a fortune on the way down. We caught a lot of these trades on the way down, but you have to know when this is coming before it happens. So that's your E-mini S&P, and it looks like there's more downside coming for us next week. Let me show you another chart. NASDAQ. The NASDAQ broke the channel right around the same time the S&P breached the channel and is now literally in a different channel. We're now forming a channel moving lower. Now, I kid you not, there's so much of market movement that is involved that Wall Street watches called geometry. You will see by the end of this presentation that Wall Street watches geometry. How would I know that? Well, at 18 years old, I started on Wall Street and spent my entire life there, working on the exchanges, using point and figure charts, bringing those charts onto computers, turning them into daily bar charts, getting that widespread across the exchanges, helping the exchanges then get analysis on computers and onto the internet. I have been here for the whole damn gamut, kids. I really get this stuff. I started with point and figure, with pencil and paper, watching the markets on the trading floor as a young kid being trained, and we have developed everything that you see over the years. I have been a huge part of helping Wall Street literally get the charts off paper onto the computers, how to use them, how they work, get them onto the internet, make sure the world knows about them. So I am very good at this, kids. You'll see. I started when I was a child. So here we are in the NASDAQ and running around inside this channel, once again, staying in a wonderful channel, working its way up, building bull flags. Something changes. It holds here again, but it changes when it breaches here because you don't usually breach the channel. You hold the channel. Breach. All right. Well, Omni already told me that was going to happen on the 2nd of April. Well, NASDAQ did breach that channel and is now working its way lower. So we've got reasoning to think there's more downside coming. Not only that, take a look at this NASDAQ chart. This is your weekly NASDAQ chart. Now, every one of these daily bars represents a full week's worth of trading. Very important charts. Look at what's happening here. Let me blow it up for you. It is a very rare occasion that we come out of a channel on a weekly chart in the NASDAQ. Very rare. You don't come out of these channels very often. Fell out of the channel right around the same time we were looking at the S&P giving us the bearish divergences, which we were able to present to you and put out a whole bunch of trades to make sure that we caught that. So you've seen S&P absolutely bearish, and we caught it right on the day. No one can do this, traders. I promise you that no one's ever been this good with technical analysis. I learned in the right place. No one's seen that coming. I didn't hear anyone on TV. I didn't read it in the papers. I didn't hear anything on the internet the day we put the high in the S&P, that suddenly we'd become a bearish market. The Omni's good at what it does. Let me show you more. Now we are looking at the very interesting chart, the transportation average. The Dow Jones transportation average basically did the same thing. Let's see if there's an average that we have on here. I think we like this average on here. Yes, we do. So check this out. Actually, we could do a better one than that. That's for a different chart. Let's put this average on here. Check this out. Now, the street watches this geometry like hawks. I promise you, they are watching this geometry, and they watch the major averages. Look at how, if you don't think they're watching these major averages, look at the buy. Look at what happens when it gets underneath, comes back up to test, breaks, can't get above, breaks. When it does get above, look at the major rallies until you hit it. Rally, hit it, rally, gets under it, little jig-a-jag, rally. Well, look what happened here. Not only did we break the average that Wall Street's been using, but it also broke down through the trend line. Now, the market showed us the chart, showed us the fundamental on 4-2. The news came out Friday. We knew long before that something was brewing. Why? Because news always comes out in the charts first. You just got to know how to read these charts. So that's what we're looking at in the Dow Jones, the Dow Jones Transportation Average, the NASDAQ, and the Russell. But if you want to know the truth, one of the bigger telegraphers, and I did show this to you, by the way, was this one. Major telegraph. Now, in that video I filmed on the 2nd for the 3rd, this chart is in there. The other charts are in there. Reasoning why we would drop is in there. Everything's in that video. So you could go back to the 2nd of April if you want to and watch that video, which led to this drop. So once again, wonderful channel, bottom, top, no problem, right? Comes to the bottom, but now, once again, average. See the average where it holds? Gets into a channel. Now it's average channel hold. Back to the top, average channel hold. Up a little, average channel hold. Up a little, average channel hold. Up a little, it does it again. Boom, to the top, working exactly the way we'd expect. That's different. Now we've got a red circle there, no longer green ones. That, my friends, is different. So as soon as that happened, we also put out another video and said, now we expect a much bigger pullback, and the pullback has ensued. Traders, no crystal ball. Nobody told me this was going to happen. Charts will always tell you what's going to happen if you know how to read them. Now, I run a live room 24 hours a day. You can always find me in that room. There are 0 credit cards required. You need nothing to get in. You create a username. In fact, you go to Live with Oscar, either log in or register. If you register, you will go to create a username, password. It's going to send you an email. No credit cards required. That email is going to go to spam, I promise you. Go to spam, check the email, and join me in my free live trading room. Traders from all over the world are here every day. This is me waving to you right now. It's live, and it'll cost you nothing. You can spend your lives like I do in a live trading room, and I can help you guys in 1,000 ways. So you've seen the Dow Jones Daily. You've seen the Dow Jones Transportation, NASDAQ, and the E-mini S&P, and the Omni identified right at the top that we were going to start to break, put out videos, and sent out trade recommendations, which we were all able to score very large amounts of points on. But we're not done. Wait until you see the rest of this. Let's go to another chart, 17. Now let's take a look at another one. Look at the Russ. Once again, absolute unequivocal proof that the news comes out in the charts first before it actually breaks. How do we know that? Well, the power of technical analysis. News comes out in the charts first. If you guys don't know that, keep watching. So what happens? We put in an all-time high. Suddenly, bearish conditions begin, like I pointed out in that video, and I'll point out in this presentation. Days and days and days later, we finally breached the channel. So we put the all-time highs in, bearish conditions begin, video goes out, sell recommendations go out. We break the channel, news finally happens. Where? Here, way after it came out in the chart first. Everyone heard about it on Friday, Thursday night or Friday. Israel, whatever you want to call it. It was a technical thing that started to break down. Now, you could give it a news name if you want, call it Israel, call it anything you want. The technicals told us this was coming. It's a technical move as far as I'm concerned. And look, you're below that average too. And you've got channels now pointing in a completely different direction. Now our channels are pointing down, not up, right? We were in this beautiful up channel. Well, not anymore, kids. Now we're in a down channel. And you're below the average. And I've got a red Omni for trading on Sunday, not Monday. So as you can see, news absolutely, unequivocally does come out in the charts first. Now, what is making all of this happen? Why would this happen when we were running up and we were having such a beautiful market? We ran up and put in new highs. Why does everything become bearish on that day? Well, it didn't quite become bearish on that day. It was becoming bearish. What do I mean by that? Well, look at this. This is a quote board. Every one of these quotes are part of a sector of the entire Wall Street market. This is like a puzzle. When the puzzle pieces start to move away, the rest of the puzzle pieces have to catch up to keep the puzzle going. So what does that mean? Let me show you what that means. Why is Russell, NASDAQ, S&P, and everything else dropping? So let's go take a look here. First of all, traders, you've heard me say this for many, many years. You've heard me get thrown off television for telling the truth about crude oil. However, crude oil, and you know what? For now, let's get rid of that average. It means nothing. It shouldn't be there. Crude oil cannot continue to go higher like this without hurting the stock market. Why would that be? Well, crude and other markets. You know, there's all this talk about EV. Yeah, wonderful EV, great. The problem with that is between 5, overestimating to 12% of this planet uses EV. You know who else uses gasoline? 90 to 95% of us, okay? You cannot have the price of crude going higher. It's an absolute tax on everybody in the world. Absolute, immediate, hits you right in your pocket. Same thing as when crude goes down, it's an immediate stimulus. Hits you right in your pocket, helps every company out there, just like that when gas and crude go down. You've got crude not only just going up. First, it started its rallying, it started to build steam. Then it went into acceleration mode. And I am telling you right now, kids, you cannot have, I think I got to go to a weekly. You cannot have a crude going higher and even on the weekly. This is a serious problem now. Why? No, because we've been kept in check for years by this resistance, which we've gotten above. That is not going to help the stock market. Why? Well, it's not just that. It's you've got crude oil going up, which is absolutely going to be detrimental to the stock market. And you've got this going on too. Take a look at this. Every one of these charts were in that I've used to explain where we were going on the second. 30-year T-bonds. I don't know if you know how this works, traders, but the 30-year T-bonds, the 10-year notes, the futures market, if the futures market is going down, that means interest rates are going up. Automatically, inherently, Jerome Powell does not have to touch rates. The Fed does not have to say a word. It is automatic. How does that work? Well, interest rates and bonds, let's call this a teeter-totter or a seesaw out in the playground. You've got interest rates on one side, you've got bonds on the other. Turns out that bonds for the moment is the big fat kid in the, sorry to say, but it's the big heavy kid in the schoolyard. He sat on one side of the seesaw, the other side went up. Do you know what the other side is? Interest rates. Interest rates have to go up automatically, inherently, when bonds go down. Bonds have been going down all year. And now it's started to get into more of an acceleration mode. And if you'll see this trend, look at the channel now. You were in a slow down channel. We are now in acceleration mode. And if you want to look at this right about the middle of this, this was an actual channel itself. Let me show you what's starting to happen here with bonds and why inflation is starting to pick up. We had a channel that was sort of here. Right, got above a little bit, but mostly we stayed underneath in here. Now the channel has gotten wider. The drops are getting bigger. You cannot have a stock market going up with crude going up and bonds going down. Let me rephrase. You cannot have a market going up. It's going to have to reprice first. We are in a repricing right now, not a crash. It's not the beginning of the end. We are in a repricing because the price of crude went up too high and the price of bonds went down too low, which raises interest rates. Why would that matter? Well, if you're a corporation and if interest rates go up, you issue corporate bonds. Those corporate bonds you're going to offer 8% return on, let's say, because if you're going to risk your money in a corporate bond instead of a very stable, safe US bond, the corporation has to offer more interest. Well, if the corporation has to offer more interest next month than it's offering this month to sell more bonds, that means it's paying more money for the same money it was paying for just a month ago. That makes stocks come down. They have to. They have to. There is no alternative. You've got to reprice. This is the visual of what I'm telling you. We have to reprice, and that started already. So it's absolute that the charts did tell us exactly what should happen, and I'm giving you some reasoning now why that's happening. There's another piece of this puzzle. Look here. Let's go to this. This is a chart that shows us inflation. Wall Street uses it, the world uses it. It shows us whether we're in inflation or deflation. I actually made a joke about this chart and I called it the measurement of commodity deflation since COVID. Why? Well, because since COVID, we have just gone straight down in the measurement of inflation. Well, not straight, nothing goes straight down, but you see we've been working our way all the way down. So it's been deflation. The inflation index was 140.55 at the height of inflation after COVID. We dropped all the way to, I don't know, down here, 93 and change, 94 and change. We went all the way down there. Well, look what's happened recently. We are now at 102, and I'll show you what that means. It's not as small as it looks. Now, you've got something different going on. You've got inflation working in absolutely the wrong direction. It was doing great on its way down. It was helping us. This is bad, 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 bad. Inflation is starting to set in. So now if you've got inflation setting in, the Fed is not going to be able to lower rates. This is all one big picture, kids. The market is seeing that. The market is now coming down, the stock market. A lot of this is the reasoning behind it. Now, do fundamentals come out in the charts first? I have to say yes every single time. I'm going to show you another reason why that would be true. Heard about Tesla earlier today. Tesla. Nobody can call Tesla like the Omni. Let me explain this to you. More proof that news comes out in the charts first. You want to see it? Okay. January, when I did a webinar back in January, I said, traders, Tesla's in trouble. It starts now. I offered my first set of targets. You know what they were? 212, 200, and 192. First targets issued right here. Tesla was trading around 241. We have dropped since to 212. Boom, hit first target. 200. Boom, hit second target. 192. Third target hit. When the third target hit, I issued more targets. Boom. Here's my second set of targets. 173 hit. 164 hit. 151 is next. 151 is down here. We are going to get to that one, I promise you. Now, how do I know that the news comes out in the charts first? Well, watch this little gem. January, I did a webinar. I think it was for Traders Corner. And in that webinar, I said this: hybrid is the wave of the future. EV has been overdone and has shown to be the incorrect path. This was in Jan of 2024. In January, we recognized EV is done, hybrid's the new thing. The chart showed that to us, okay? That was January. Then I gave out the targets. You want to see what just happened? In April, on April 8th, here's the front page of IBD. The future turns back to hybrids. Isn't that interesting, kids? How did we see it? The charts told us exactly that was going to happen. And 4 months later, the street sees it. We're already hit 5 out of 6 targets. The street is finally noticing. I also gave you an extremely powerful average, and I told you use this average every time Tesla gets to it, just sell. It got to it again, it hit 173. It got to it again, it hit 164. It just got to it again, or just about a few days ago, 151 comes next. That, my friends, is proof that the fundamentals of the news comes out in those charts first. How did I know to give you those targets in a market? Tesla doing so well. Everybody loves Tesla. Tesla, Tesla, Tesla. Oscar comes out and goes, no, no, no. Tesla's going to have a big problem because the chart told me to tell you I've got no crystal ball. I read charts really well. And I promise you, charts tell us everything we need to know about the future if you know how to read them well. That is something I teach and will teach to you if you want to join me. I have a 4-day session here called Omni Camp. I invite people to Vegas for 4 days and 4 nights to my home office where my wife and children live, and I teach them the Omni. If you would like to be part of this, you simply would have to go to omnibootcamp.com. omnibootcamp.com. Fill out an application. It's very simple. It's right here at the top. In fact, everywhere on this you click, you can fill out the application. It doesn't matter where you're clicking. You can just fill it out. The next camp is literally in 11 days here in Las Vegas. If you're interested in that camp, you'd have to contact me right away. You have to call me. You can find all my information. I'm not going to waste time on it now, but you can find me any way you need to find me, and maybe I'll try to give you some information right at the end. The next camp that we're going to have is, let me see if I can find that. Nope, that's not here. Oh, the next camp we're going to have, you might want this one. I'm going to do a camp on the road. Omni Camp on the go in Florida, in Naples. That will happen June 1st through 3rd. If you guys want to be part of that or the one here in Las Vegas at the end of this month, just contact me and let me know. But let's continue on. So what else is making a lot of this happen? Well, an interesting thing. I just showed you a chart about inflation, right? Check this out. Now, we do have inflation. Everybody sees it at every store. It's not quite commodity inflation, though, although it's starting to become commodity inflation, but we do have inflation. There's something very interesting that's happening that's helping Americans more than any other citizens on the planet. Imagine this. If we were having this sort of inflation and our currency was going down right now, imagine the inflation and the dollar dropping at the same time. Prices up in the stores going up, your dollar going down. Well, not here in the US. We have been blessed. Look at this dollar moving up, trying to keep pace with inflation. I'm not saying it is for sure, but imagine being in Europe, imagine being in Japan, imagine holding another currency while inflation, the price of goods go up and your currency goes down. Well, we've been blessed in the US with a strong dollar. That has been helping. But what it doesn't help are other markets like this one. So I've had OmniX ask me to do work on the Japanese yen, which I did for them last week. And I showed them on the yen, we had some sort of let me show you a couple of things here. We had a couple of things going on. First of all, this yen's in some serious trouble. I mean, wow, is that in trouble, right? Plus, ugly as it looks, you've actually got some weird head and shoulders sitting right here. So the yen looks terrible. Let me get back to that chart. Sorry about that. The yen looks terrible here. And one of the reasons why, of course, is the US dollar, right? Dollar going up, it's going to push yen down. But there's something that was brought to my attention about 7 to 8 days ago. And I said, I will show this to you in a video, which I did do. Now I want to re-present it to you. I showed him, he said, I think it's a good place to buy yen. And I said, no. that does not make sense, and I'll show you why. I've got a technique called knock, knock. Knock, knock, knock. What is that? Well, that is this. If a market keeps knocking on a door, eventually it will open. Knock, rally. Knock, rally. Knock. So I said to them, do not buy the yen. In fact, what's going to happen is, because when you knock on a door enough times in this business, the door will open. The door opened. Look at that. Exactly as we expected. Knock, knock technique works almost every time. Of course, you have to know when to use it, but the dollar is driving these currencies down. What if this was our currency? What if you were in Japan? Why? I mean, could you imagine how bad inflation would be there? We have been blessed with that US dollar. Another market that I was asked to cover, by the way, was Bitcoin. Oscar, what do you think about Bitcoin? Well, I've been showing you this chart for quite some time in Bitcoin, how it's been working and giving fantastic signals based on this average. So way back here, we noticed the bull flag brewing, got above the average. I offered a buy signal in Bitcoin and it exploded. Went into another bull flag, held the average. We offered another signal, it exploded. It held the average. We offered another signal, it exploded. Then we went to the sidelines. Since then, we basically have been on the sidelines, and we are still on the sidelines now, but Bitcoin and Ethereum run together. And you see this average, that really makes a big difference in whether or not Bitcoin traders are buying or selling Bitcoin, but that's not really what's leading right now. Believe it or not, someone else is taking this lead, Ethereum. Ethereum is actually taking the lead right now. Look at this average, how well it holds. In fact, if we go back further, it holds and holds. I mean, it just works and works and works. Look at the severe break under that average as of Friday. Bitcoin didn't show it yet. It's only a little bit under the average, but Ethereum absolutely showed it to us. So careful in your Bitcoin and Ethereum. For now, we are not looking at buy signals. And how goes the stock market? Basically is how goes Bitcoin and Ethereum anyway. That's what's been happening lately. So you might as well keep that in mind. What else do we have? Oh, yes, a lot of traders asked me about this one. Oscar, what about gold? Well, I have basically told traders to stay long gold, get long gold, let's buy gold. It's about to go into parabolic stages, and boom, it did, which brought us a short-term capitulation. If you want to know what to do with gold right now, stay away for a couple of days. This is usually the sign of a short-term capitulation. It doesn't mean the end of the market, but it is a short-term capitulation type of move. So I would be careful. I'd wait a few days in gold to see if it capitulated, because it's not just gold that did that. Look at silver. Silver likely did the same thing. Short-term capitulation just took place there. See that? That major bar up, comes down, settles about at the lows. When you get one of those, a lot of times you've got capitulation. So you need to be careful here. As bullish as it looks, it might need a little bit of a pullback in silver and gold because of that major run on Friday and then the reversal to the bottom, capitulation looking move. I would advise you to stay out of gold for a couple of days and let it resolve itself. Another thing that I was able to show in my last webinar was geometry. In fact, I'm going to show you something fantastic. Let me see if this helps you. Watch this. In the webinar in January, we were here. Now get this, you must understand that nothing past, and let's fill this so I can at least make it make sense. Nothing past this, yeah, whatever, I can't fill it. I'm not going to worry about it. Nothing past this exists yet. Nothing, nothing, nothing. This didn't happen. We came down, right? So let's just do it this way. We came down in Chipotle and we hit here. And I was doing a geometry lesson. What I was saying is geometry is what Wall Street follows. I mean, explicitly, they follow it. Implicitly, you'll see. So I mentioned that we are right here in Chipotle now due to the geometry I taught you on the webinar in January. It says Chipotle goes to 350. 3,000. That was here. You can go back and look at the webinar. Chipotle hit 3,000 right there. I mean, is that not incredible analysis? Is that not incredible? It hit 3,000. Please like, share, and subscribe when you find me on YouTube, because it'll help you. I put out a video every night to tell people what should happen the next day. But look at how well the geometry worked for that call in CMG. Now I'm going to show you a little more about geometry, which I think you're going to love. All right. This should show you that it is absolutely the truth that geometry is what rules these markets. Now, what I've shown you today is my technical analysis 101. I kid you not, I could do this laying on a cot, drinking warm milk and eating cookies in kindergarten, right? It's really simple for me, but it's powerful, and I think it will help you. So that's why I kept this webinar so simple. But watch this. Do you want to see the true power of geometry, and that this chart is a true testament to the power of the geometry that Wall Street uses in technical analysis? Watch this. Imagine if you knew to get short right here. How would you know that? How would anybody know that? Well, let's also imagine that we have a high. Let me grab a little tool here. Just grab a little tool to mess around with. We've got a high set here. Comes down, sets another high. Nothing past this happened yet. This didn't exist. We don't know anything about this. Here's the last of our chart. Now watch this, kids. Imagine having this information before it gets there. Imagine if you knew this before it got there. You see this trend line? Watch this. In fact, I am going to make it a prettier look. Let's give it a prettier color. You guys need to see this. This is great. That should do it. It should be a little brighter. Check this out. Boom, right to the dead high. How the hell did Wall Street know to get short right there? How did they know that was going to happen? Nothing existed past this. You had a high here, another high, nothing existed. How did Wall Street know? That's not all. Watch this. Now, let's pretend that this chart goes from here, came down, jigger-jagged, and stopped right there. That's the last high we have. None of this happened yet. Watch this. How do they know? Bingo, sell it there. You would have been right on the money. Bingo, sell it there. You were right on the money. Bingo, sell it there. You were right on the money. How do they know? Because they follow geometry. This is simple stuff. Watch this. You haven't seen it all yet. Look at this one. Boom, right there. A perfect spot to have gone long. How do they know? Oh, because I grew up on Wall Street. I know all these tricks. I can help you in 1,000 ways. You just need to trust me and come to livewithoscar.com and hang out with me. I promise you, it'll cost you nothing to be there. You hang out in my live trading room. It fills with people during the week. And I sit and I show charts and I give out trades, and we spend our lives together. If you would like to spend your life with me in a live trading room, looking over my shoulder and me sharing my tips, tricks, techniques, and I offer trading recommendations, just come to livewithoscar.com and join me. There is also this. Everybody listening today, I will give you a 1-month trial to my trading recommendations, which is separate from everything else. I didn't even show you any of that. I have traders all over the world. I send out recommendations to. We trade together. When we get in, we get in. When we get out, we get out. If you would like to be part of that service, I will give those to you for a month to see the magic that Omni produces. With that, I'm going to yield back to you, my friend. Thank you so much for this webinar and the time. And everybody watching, thank you for paying attention. I hope I was able to help you in some way today.
Thank you, Oscar. As always, that was some great information. Ladies and gentlemen, you heard it here on Traders Corner. According to the charts, not the word on the street, and that was Mr. Oscar Carboni. You could find him daily in his chat room or his nightly YouTube videos, which are extremely fun to watch or live stream on his YouTube channel. You can keep up with him on Twitter, StockTwits, LinkedIn, Instagram, Facebook, Discord, pretty much everywhere. Or you can find him on his website at www.livewithoscar.com. By the way, yeah, I love your videos. I'm a huge fan, and I don't know how you do it, but your analysis is always spot on. So please come back and see us on Traders Corner. Enjoy the rest of your weekend.
Thank you for having me. Much appreciated. And traders, stops are in Emotion.
Emotions are out.
Oh, little kids, thank you for tuning in.
Thank you. We put a link up for Oscar's special offer in the chat box, so please check it out. Well, ladies and gentlemen, that concludes today's presentation on Traders Corner. We will be posting the recording on our YouTube channel. Here is the link to subscribe to our YouTube channel, where you will be able to easily find the recordings of our online investor summits. Thanks again for joining us today, and have a blessed weekend. So long, traders.